should continue with the stock. I think 18,000 odd rupees would be a good levels to book partial profit, not the entire chunk of your holding. But at this point of time, it's a hold.
The next query is coming in from Ashok from Bangalore, and it's on Raymond Limited. He has around 100 shares at an average price of 952. He wants to know whether should he hold this counter or exit. Nilesh, any view on Raymond?
See, I can see Raymond currently trading at 386 rupees. So,
Limited.
Right. Okay, Raymond Limited, which is at 386, right? So overall, the structure appears weak from a short to medium term perspective, and it looks very difficult to see that kind of rebound on the upside. So overall, sell on rise kind of a strategy should be deployed if bought it from a short term perspective. And if somebody wants to stay put, then keep a trailing stop loss right now at 372. So 372 should be the stop loss. And if you get any pullback towards 420, 450, use that pullback to exit.
Okay, all right. So that's the view coming in on Raymond Limited. We've got our next caller. Pawan is calling us from Hyderabad. Pawan, hi. A very good morning to you. How can we help you today?
Yeah, ma'am. Very good morning. Actually, I have some doubt. Epack Prefab Technologies I bought at 290. Number of shares is 300. So I can invest more on it.
Okay. Got your question. Pawan, I'll take this up with Rajesh. Then Rajesh, the stock is down 3.5% today. But do you think this is the right time to maybe add more, or what's the view like?
I don't think it's a good idea to add this stock at this point of time. Maybe some amount of more correction is left into the around 200 odd rupees would be a better levels to add. As far as existing holding, one can continue to hold for a target of 260 in the next 6 to 9 months.
The next is a caller query coming in from Chennai. Ganpati, you can go ahead and ask your query.
Yeah, I want to know the experts' views on Tech Wabag.
Okay.
I'm holding about 1,000 shares at 1,500. It keeps falling despite its fundamentals, so I want to know the experts' views.
Rajesh, any view on Tech Wabag?
Very strong company, I would say, doing projects in waterways and water systems. The government focus on Namami Ganga and all these things is helping. And not only domestic orders, they have good international orders too. At these levels, one can even add.
Okay, all right. So that's the view coming in on Tech Wabag. The next question that we have is on N Gadgil. I mean, Animesh from Kuala Lumpur is holding 101 shares at the levels of 622. He wants to know whether he can hold, average or sell for the next 6 odd months. Nilesh, your view on this?
Looking at the overall structure, I think it's an avoid. If you get any pullback, use that pullback to exit. It has a immediate support at 535. If it breaks 535, then it might test the levels of 500 as well. So use pullback to exit if bought it purely from a short-term perspective.
Next query is coming in from Ram from Chennai. He's holding 3,500 shares of Restaurant Brands Asia at a price of 76. He wants to know the fundamental view. Rajesh, any view on Restaurant Brands Asia given the fact that the promoter is now changing? Do you recommend him to continue to hold this counter?
See, I would say continue to hold at this point of time. Although numbers have been not that great in the last 2-3 quarters, but with a change of hands, let's see what the new strategy comes out. Since he has held for such a long period of time, I would say at least for 1 quarter, continue to hold for new management to give out their strategies.
Okay, all right. So that's the view coming in with regards to where Restaurant Brands Asia stands. Next question that we have is from Ravichandran, who's writing us from Bengaluru, asking about Suzlon. He wants to know whether he can hold or sell the counter. Nilesh, your view on this?
It's a sell from a short-term to medium-term trading perspective. But if a view is long-term, then keep a stop loss at 41. If bought it from a short-term trading perspective, then looks like it is likely to test the levels of 43 and 42 as well on the lower side. So again, a sell on rise kind of a structure from a short-term perspective.
Right. A new listing on the street today, Amagi Media Labs. Let's listen to what the management has to say.
Profit. I'm Mahima Vachajani. Amagi Media is in focus on the back of its listing, and to understand as to what what stands ahead of the company going forward post listing, we're joined by Bhaskar Subramaniam, who's the co-founder and managing director and CEO of Amagi Media Labs, and Vijay NP, who's the chief financial officer of Amagi Media Labs, joining us now. Welcome to both of you, gentlemen, and a heartiest congratulations on the listing. My first question is for you, Mr. Bhaskar. With regards to where profitability is concerned, first half you've turned profitable. Just want to understand if these numbers are sustainable going forward, and whether you expect to be profitable from here on.
Yeah, thank you very much. Thank you very much. Right. So just to give you a brief, right? Amagi is a media technology software company working with TV channels, content creators, producers of sports, news, and anybody who creates content in the whole group, right? So we're a worldwide software business that we run today. If you look at it, the biggest opportunity for us is just 10% has moved to cloud, which is where we think the whole virtualization of this whole industry is happening today. So the biggest tailwind for us is the future in terms of 90% of digital transformation that's happening in this business, and where Amagi can be the leader in this space. So if you look at it from a longer term standpoint, I think we're directionally growing quite well. We've seen our results for the last 6 months. We can hope to continue to project going forward as well in terms of managing both growth and profitability in an equal measure. And that's been part of the company's journey thus far. And we've seen the operating leverage playing out as well as we move forward. So the hope is that we continue in the same trajectory that we've kind of embarked ourselves on today. And this is what you're going to see as a company as we move forward.
Okay. Mr. Vijay, with regards to your objects of issue, it does mention that you might be looking for inorganic opportunities. Just want to understand as to what segment will you be exploring going forward from these IPO proceeds? Is it going to be in the streaming space? Is it going to be in the advertisement space? What are the options on the table?
Yeah, thanks again for having us. I think we look at our M&A strategy more not as much from a segment view as from a first principles view on the value chain. So we are in the glass-to-glass technology, the first glass being TV screen, a camera screen, and the last glass being TV screen. There's multiple steps there. And to Bhaskar's point earlier, only 10% is moved to the cloud. So a lot of the growth is ahead of us. So each of those swim lanes and steps between the first class to the last class, there are multiple opportunities that we'll pursue. That might be segment agnostic. So that's one lens that we look at. The second lens that we look at is obviously with AI being a big sort of vector secularly, globally. It's another area where we are kind of opportunistically shopping for attractive assets. And lastly, I think from a first principles perspective, we look at assets that are both strategic fit to the company and financially sort of profitable and generate good cash flow and have the same sort of financial profile as us. So those are sort of three broad strokes on how we think about M&A. It's not as much segment focused, but more at a higher altitude.
Okay, understood. Mr. Bhaskar, you have long-standing relationships with a lot of global clients. Just want to understand your revenue split right now between, global clients as well as domestic clients. And going forward, how will this evolve and how does that overall impact your P&L?
So last, if you look at it, right, Amagi is a global opportunity. So it's a software that every TV network, every content creator and producer in the world needs it. So we see this as a global opportunity. We continue to kind of build on top of it. Historically and otherwise, if you look at it from a market standpoint, US has been the largest market, not only for Amagi. If you look at the media business in general, US becomes the largest market across the globe, followed by Europe and then Asia. We are continuing to see the same progression in our own business, where a large part of our business today is Europe and US together, really about 90% plus of our business today. We will continue to see that progression as we start expanding globally as well. If you look at it, we did expand in Brazil, we expanded in France and Germany, Korea, Japan. So this is a global play. We would see India starting to become really important in the next 3 years as we start seeing that digital transformation starting in the country as well. So for us, it's global. It will continue to be global. Absolutely, given the maturity of the European markets and the US markets, we would see that as something that will continue to be a larger part when compared to Asia, at least in the next 3 years. Beyond which, obviously, we'll move to a much more secular growth phase that we're going to continue to see everywhere else.
Understood. Okay, Mr. Vijay, overall, if you take a look at the last 3 years' performance, your revenue has nearly doubled. Do you think that run rate of growth is going to continue going forward? Is it going to improve? What is the CAGR growth that you're expecting, let's say, 2 years down the line?
Yeah, no, I talk about how the trajectory of the last couple of years, like Bhaskar alluded to earlier, we've always focused on delivering profitable growth. And our aspiration would be to kind of just replicate the trajectory that we've seen in the last couple of years. I obviously can't get into specifics on guidance, but our core focus, as Bhaskar said earlier, would be to continue to deliver profitable growth.
Well, the Nifty has fallen below 25,000 level, which is one of the key support levels. Psychologically, at least, is something that we have seen getting broken. 24,950 is the current level, which is the lowest that we have seen since October 2025. And with today's fall, Nifty is now trading below its 50, 100 and the 200 DMA. All the key moving averages have been broken. 280 points is the fall that we are seeing today. In the last 12 trading sessions, Nifty has been falling for 10 trading sessions, and from the peak, we have seen a fall of 1,400 points coming in. And this is a year-to-date fall that I'm talking about. Now, if you look at the top draggers in today's trade, it's ICICI Bank, HDFC Bank and Reliance Industries. All these three counters are leading to more than 100 points of fall when it comes to the benchmark index. ICICI is contributing nearly 51 points for this fall. The top dragger for the benchmark. And when it comes to the F&O stocks, it's Kalyan Jewellers, UPL, Coforge, which are down anywhere between 6 to 10%. In fact, Kalyan Jewellers has hit a lower circuit of 10% in trade right now.
I think even in terms of where the broader markets are concerned, it's a red, across that. But the reasons as to why probably the markets are falling. Firstly, the entire global sentiment with regards to US-India trade deal is still, on the edge, and we still don't know as to what the verdict is going to be. Probably one of the reasons as to why the Nifty has fallen so much. And it's not just a small fall. 300 points today as well. Yesterday we saw a drop in terms of 400 points. So 700 points cumulatively till now is what we've seen in terms of where the Nifty is falling right now.
Nilesh, 25,100 was supposed to be one of the strong support levels, given the fact that it was coinciding with the 200 DMA. But right now we are below 25,000 level as well. Any further support levels that you're looking that you're seeing for the benchmark at least?
Well, absolutely. So 200 DMA has been taken off decisively in today's trading session. Even if you see on the daily time frame chart, a rising trend line, which was exactly coming at 25,000 level, that has also been breached. On derivative front, we have started witnessing unwinding of the position because 25,000 was holding the maximum OI concentration. So we have started witnessing unwinding of the position that clearly suggests that we may see a follow-up on the lower side towards 24,750 to 24,700. So the next major support I can see on the chart is somewhere around 25,600. That was the low that we saw in the month of October 2025. So that's the next major support to watch out for. The structure looks weak, and we may see a bit of a pullback, but that pullback is unlikely to be a sustainable.
Sensex has also fallen over 1,000 odd points, and 11th day in a row where we saw FI selling, plus there is global risk off sentiment at its play. So I think all of these factors combined together. Rupee also opened at its low today. European markets also second day in a row where it opened in negative. Asian markets also opened in the negative. So all of these factors playing its part in terms of where the downtick in the markets is concerned. But viewers, it's time to slip into a very, very short break. We'll be right back answering all your queries on the other side of the show. Do stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories.
Well, Nifty continues to remain below the 25,000 level. 25,990 is what we are looking at, and from the recent peak that we had seen, the markets have fallen close to 1,400 points, and post today's fall, benchmark is trading below its 50, 100 and 200 DMA, which are all the key moving averages that we have seen. So what would be the next support level is something that we need to ask our guest today on the show. But before that, let's go across to Sharad and understand what's been the setup in the FNO segment.
It has been, Somit, a very weak setup, and the market is surprising us almost each 30 minutes, we can say. First it goes below the 200 DMA mark and then the 25,000 mark. The FPI liquidations, that's continuing for the 11th straight day. We saw buying happening, almost $3 billion of liquidations we have seen this year itself. And also, if you look at the rupee, that's opened at record low levels, currently at 91.3. There is a big sensitivity happening with the FPIs and the rupee, and some major issues are definitely there in the bond markets as well. A weak breadth in the markets. Yesterday also advanced decline ratios 1:10, and right now also it's largely 3:10 in the favors of bears. So concern is there in the market, there seems to be a kind of a panic coming in, and margin trading facility positions, that's also getting impacted. That's what I'm hearing from the brokers as well. And lastly, the fifth point is that uncertainty in the global bond market, especially from Japan. That is where the treasury movements is happening, and concerns are definitely coming when it comes to Greenland and Japan as well. But I just like to point out, the Nifty constituents, if you could just show, they see a sea of red coming in most of the constituents. And Somit, in the mid caps and small caps, there's a lot of pain happening.
Right, but again, if you could just take us through the FNO setup, which are the stocks where we're seeing most of a long unwinding happening, and which are the stocks that remain in focus?
Yes, it's an absolute carnage in the FNO market as well, and the signs of stress happening across the indices as well as the stocks. And it's a brutal punishment happening. There's nothing happening here in terms of the positive numbers. Eternal HUL trying to hold up, defensives minor, but throughout the space. ICICI Bank also tanking, that's around 2.5% down. Trent, we are seeing a kind of an up move, that's actually down move, it's down 3%. And the sectoral space also, we see there is a down move happening. But contracts also, largely we are seeing a lot of short positioning contracts developing, but the key levels to look out for, that's keeping on going down. Same story goes for BankX also, but it's a stock specific moves also. I would like to point out in the FNO space, I doubt any stocks would be there in the long build-up, but two names I had given, if you could just see these two stocks, are not very convincing. Just yes, Adani Energy Solutions and Hindustan Zinc are making it to the list. And looking at the short covering, they include SAIL and RBL Bank. To be honest, the entire sentiment of the market has turned negative. So it's not very convincing. Long unwinding, so it's there. Havells and LTI Mindtree, the selling continues. And let's look at the short build-up. Yes, Kalyan Jewellers, that's down 10%. SRF, it's down 5%. So definitely the street is seeing a big beating in the FNO space as well. Somit.
Well, thank you, Sharath, for that FNO setup. Let's also get in Dipen Mehta, founder director of Alexa Equities. So market has broken the 25,000 level from the peak, recent peak that we had seen. We are down nearly 1,400 points right now. In the last 12 trading sessions, we have been down for 10 of them. What is causing this panic in the market? What is leading to this fall?
Good morning, and thank you for having me on your show. I think it's all the geopolitical events, especially the statements coming through from President Trump, that has really shaken up all global markets and brought in a fresh wave of uncertainty, and what we are seeing is a risk of trade. That is part one. Secondly, I think the earnings season, especially the large cap stocks, Reliance, banks, select IT companies, the results have been a bit disappointing. And there was an expectation that earnings would improve, but that has not happened. So that also is causing some amount of consternation. And of course, the technicals and the liquidity position are certainly looking very, very weak. So it's a culmination of all these factors. But I would like to state that gradually and very, very, I would say, secular manner, the earnings are improving for the growth companies, for the good quality businesses. And valuations are being compressed, they are narrowing, and at some point of time, I think, or rather we have reached a point where good quality companies are available at reasonable valuations, and that really, I think, is something quite positive from a long-term investor's perspective.
Deepan, hi. Thank you so much for taking out the time. Mahima this side. Just want to understand, we've seen a free fall yesterday also, today also we're witnessing that. How should an investor position himself or herself right now in this kind of markets? Should this be another buy on the dip strategy, considering that you said, valuations are improving, earnings growth is also improving? Should that be the strategy, or what should be on the cards?
All I can say is what we are following, and we are more or less fully invested. We may make tactical changes, get out of businesses where
okay, we seem to have some technical issue. All right, we seem to have some technical issue with regards to Deepan's phone line, but we'll bring you more analysis as to why the markets are falling right, on NDTV Profit. But time to submit a very, very short break. Right back on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Welcome back. You're watching Ask Profit, the show that gets all your stock-related queries answered. But just before we took the break, we were discussing as to how the market is on a free fall, and I think this is the right time for viewers, you to ask the right questions to us. To send in your queries. You have your numbers flashing on the screen. You can either call us or WhatsApp us and send in all your queries with related to where stocks are concerned. On this side of the show, we're also joined by Vinay Rajani, who's a senior technical and derivative analyst at HDFC Securities, joining us now. Vinay, the first question is directed towards you, which is from Mr. N Narayanan, who's writing us from Andhra Pradesh, and he wants to know if currently it is the right time to buy Tata Steel, whether these levels are the right levels to make an entry. What would you recommend?
So our view on the metal sector has been bullish, and still we feel that even if markets are falling like this metal index is showing some sort of resilience, and global developments are indicating that this metal sector should continue to do well. So we have been bullish on Hindustan Copper also previously, some aluminium companies also. Now steel companies also showed some strength couple of sessions back, but because of the market weakness, they have been showing some weakness. But overall, if we look at the primary trend, we feel that metal sector is here to stay. Dips should be bought into. If you are taking a positional view, definitely the stock like Tata Steel, which actually broke out in the last week, can resume its uptrend after some correction. So dips should be bought into Tata Steel. Overall view is bullish on the Tata Steel. Short-term trend is definitely down with the market. But if you are a positional trader, then dip should be accumulated. And for 2 to 3 months, our view on the Tata Steel is bullish.
Next query is coming in from Ayush from Purnia, and he has around 501 shares of IRDA, that is IREDA, bought at a price of 152. He wants to know whether should he continue to hold this counter or accumulate more shares. Rajesh, your view?
At these levels, I think one can accumulate. It's one of the largest company financing renewable power, and that segment is doing very well. These valuations have become attractive after the kind of correction which we have witnessed, can give some good dividend. Although it's still on a higher side from when you compare with PFC or REC, but still at least 128, 130 odd levels. I think it's a good buy.
Okay, all right. So that's the view coming in on IRDA. The next caller that we have is Sudha. She's calling us from Tamil Nadu. Sudha, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. I'm holding 30 shares of LTTS at the price of 4,218 for the past 2 years. What should I? The price is going down. What should I do?
Okay,
and the follow-up question is Trent at the price of 6,310.
Okay, so that we generally take just one query per viewer, so you'll have to choose between LTTS and Trent.
Okay, sir. Okay, ma'am.
Okay, so I'll take LTTS for you then. I'll take this up with Rajesh then. Rajesh, what's the view like on LTTS? She's been holding this counter for the last 2 odd years with patience. Should she continue to hold?
Yes, one can continue to hold. The strong company, I would say, decent numbers given out this quarter. It's just because of the market conditions that the stock has been correcting. So one can continue for a target of 4,200 odd rupees.
The next query is coming in from Chandu, and it's on Blackbuck, that is Zinka Logistics. He has purchased few shares at a price of 685 and the current market price is 565. What should he do with these shares is what he wants to know. Rajesh, any view on Zinka Logistics?
Try to exit in any upside. Evaluations are very high, I would say, and company is not doing that great as it was shown in the IPO market. So try to exit on upticks.
All right, okay, so that's the view coming in on Zinka Logistics. We've got our next caller. Karthik is calling us from Bengaluru. Karthik, hi. A very good morning to you. I believe you have a question on Polycab.
Yes, Mahima. Good morning. So I wanted to know, is it the right time to accumulate Polycab?
Okay, and this is from a long-term perspective. All right. Rajesh, I'll stick with you for this one as well. Polycab, what's the view like? Whether the viewer can continue to hold it from a long-term perspective?
See, long-term looks very good because of the fact that not only wires, but FMEG also doing well. Only in the short term, there might be some pressure because of copper prices going very high that would affect margins. But for longer term, it's a good hold.
Right. The next query is coming in from Umesh Gupta from Vadodara, and it's on Apar Industries. He has 75 shares of Apar Industries, bought at an average price of 8,716. He's sitting on a loss. He wants to know what's the view for the next 6 months. Vinay, any view on Apar Industries?
So Apar Industry on the monthly chart has broken down below the crucial support of 7,700 and trading and sustaining below that. So along with the mid cap and broader market weakness, this is also showing some weakness. This month only, in the month of January, month till date, the stock is down by 18%. So still looks weak. As of now, we can say that on weekly time frame, monthly time frame, it is looking weak and it can extend the fall from here. So it is one of the stock which belongs to the broader market, and broader markets are not showing strength. Only safe haven we can say in the large cap. So Apar Industry can be shifted for if you have a 3 to 4 month view, then better to shift from any from this particular stock to any large cap companies in this particular segment. That will be safe, better risk reward ratio for the strategy. So I would suggest that intraday bounces and some sort of pullbacks can be utilized to shift this particular stock to any large cap stocks in the same segment.
Okay, all right. So that's the view coming in on Apar Industries. We've got our next caller. Anil is calling us from Pune. Anil, hi, a very good morning to you. I believe you have a question on Eternal.
Yeah, good morning. I want to review on Eternal. I'm holding 2,500 shares at 300 price for, let's say, short term, less than 1 year. Should I hold or book the loss?
Okay, got your question. Vinay is already sitting on a loss of 63,000 odd rupees. What should he do? Continue to hold, considering there's also going to be earnings announcements today?
This is about Eternal, right?
Yes.
Yeah, so relative strength is there. Stock is not looking that weak on the charts. Positional trend is still intact. So on monthly time frame, it has got a chance to bounce back again. So it is one of the large cap companies which is looking better. Large cap companies are looking better to us. So better wait for the result announcements and then the trend will be decided. Otherwise, what most of the time we have seen that the trend changes after the result announcement in most of the companies. So better to wait for a result announcement. But technically, I see some sort of resilience and less risky stock we can say in this kind of market.
Right. The next query is coming in from Afreen from Hyderabad and it's for you, Rajesh. He wants to know the long-term view on Precol and TD Power Systems at the current prices.
Both are a good hold. One can even buy Precol at this levels. Auto Inc is doing very well. And this kind of correction has given a good opportunity to accumulate for long term.
Okay. All right. The next question that we have is from Krishnan, who is writing us from Chennai. He's got around 100 shares of BSE bought at the levels of 2,700. Should he hold on to it? And what's the target if he should? Vinay, what are your views on the charts and what are the targets that you see?
Yeah, so technically this BSE stock has got a strong support around 2590. That should be tracked closely because it is nothing but it's 100 days exponential moving average and previously it acted as a strong support. So this time also it is hovering around that level and we should give that level as a respect to it. So 2590 should be the trading stop loss in existing long positions. If that that is broken, then we can expect some more weakness in the counter. So that should be the strategy for the short term. 2590 should be utilized to keep it as a stop loss.
The next query is coming in from Arnab from Thailand. He's holding 100 shares of Motilal Oswal bought at an average price of 947. At the current price level, he wants to know whether should he buy more or wait or book losses and exit. He can hold the counter for the next 2 years. Rajesh, any view on Motilal Oswal?
See, the company has been doing well, although the valuations are a little bit on the higher side. But the correction from 900 odd rupees to 750, 780 odd rupees gives an opportunity to buy for a target of 850 in the medium term. So depending on one's risk profile, one can add at these levels for 850 target.
All right, so that's coming in on Motilal Oswal Financial Services. But Vinay and Rajesh, it's time for our rapid fire round. You both know the drill. Try to keep your answers as short as possible. The first question that we have is from Prashant. He's holding Trent since the level of 4,300. Should he continue to should he continue to hold? Vinay, your view on the charts?
Yeah, so extremely oversold on the chart. So do not short also and do not buy also because don't anticipate the bottom.
Right.
Let it be with the trend. So it is in a downtrend.
Right. Revati from Pune has around 200 shares of BHEL bought at a price of 249. Should she continue to hold? What's the trend likely, Vinay, here?
Which one? Please come here.
BHEL. BHEL. Bharat.
Yeah, so trend is looking weak and the support I can see is around 245.
Okay, the next one is on Kalyan Jewellers. Sanjay Ramesh wants to know if this is the right time to make an entry. Rajesh, it's fallen over 7%. Do you think this is the right time to make an entry?
Avoid, choose Titan Industries.
Gopika from Chennai is holding 100 shares of IFCI bought at a price of 69. Should she continue to hold, Rajesh?
Continue to hold.
All right, Suzlon is the next one. Ganesh is asking this question whether he can continue to hold at the levels of 18 rupees that he had bought. What should be the view on the charts, Vinay?
45 should be the stop loss.
Siva from Hyderabad is holding 1,000 shares of CG Power bought at a price of 650, currently sitting on a huge loss. Rajesh, should he continue to hold?
Add.
Okay, the next one is on HAL. Siva from Amravati is holding 1,000 odd shares at the levels of 5050. From 6 months perspective, can he continue to hold, Vinay?
Yes, can continue to hold.
Pawan from Hyderabad is holding few shares of REC bought at a price of 500. He wants to know whether should he continue to hold this, Rajesh?
Continue to hold.
Coforge is the next one. Hema from Chennai is holding 15 shares at the levels of 1726. Hold or exit? Vinay, what's the view?
Better to switch it to Infosys.
Gul has few shares of Bharti Airtel bought at a price of 1,688. Can hold for the next 1 year. Rajesh, should she hold this counter?
Hold.
Okay, Ujjivan Small Finance Bank is the next one. Rekha is holding 1,160 odd shares at the levels of 28 rupees. Can she increase her holdings? Rajesh, your view?
Exit.
The next query is from Sanatan Krishnan from Chennai. He has 100 shares of Bajaj Finance bought at a price of 950. Should he continue to hold, Vinay?
Yeah, hold.
Okay, Shriram Finance bought at the levels of 993. 100 shares is what Meghna has. Hold or sell? Rajesh, your view?
Hold.
Ramakrishna wants to know whether should he buy Yes Bank at current price. Vinay?
Not because of the market conditions, but the dips can be considered, not at this price.
Okay, Elecon Engineering is the next one. Shubham from Bengaluru wants to know if this is a good time to make an entry from a long-term perspective. Rajesh, your view?
One can buy.
Sivakumar has a few shares of PFC bought at a price of 397. Should he hold this, Vinay?
Yes, can be held.
Okay, Shriram Pistons is the next one. V Murli from Bengaluru is bought at the levels of 2740 from a long-term perspective. Can you continue to hold? Rajesh, your view?
Continue to hold.
Alright, so that's the view coming in with regards to where Shriram Pistons stands, and that brings us to the end of this round of Rapid Fire on Ask Profit. But before we end the show, there has been some recovery in terms of where the market stands. If we can quickly pull up, minor recovery is what we're seeing. We're above the 25,000 levels right now, just 50 points above the 25,000 levels, but still down around 180 points since the start of the day. The Nifty 50 down by about 0.7% is what we're seeing right now. We'll have to wait and watch out for as to how the day ends and how market finds its support and see whether we end above the 25,000 levels or not. But with that, we're completely out of time on this edition of Ask Profit. Rajesh and Vinay, thank you so much for taking out the time and helping us answer those queries. We've answered 60 queries so far for the day.
Not bad.
Not bad at all. And for viewers, you can also tune into the afternoon edition to ask your queries. Completely out of time. KYC on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and in our show we'll be getting a company where we'll give you all the details about their numbers and to the management as well. But today's company in KYC, I'm going to give you some hints before we come to the company. The first hint is it's a Kolkata based specialty chemical company. Yes, from Eastern India. This company is there, which would be in focus. Largely, it has been untracked from analysts, but that's our duty at KYC to get you more details on that. Interestingly, strong Q3 numbers are delivered, and I'm talking about the volume numbers here. Also, I'll give you one more hint. It has been a multi-bagger for the investor. The stock is up more than 852% in the last 5 years, and that is something which is very much important going ahead. But what the company is all about, I'll like to talk about it. It's of course a specialty chemical company and it's from Kolkata based. That's enough hints to it. The company in focus is Himadri Specialty Chemical. That's what I'm talking about. This is the company which we'll be getting in. But the concern remains is, why are we getting this company? There are important reasons for it to get this company. Largely it has been untracked, so it's my duty to get these companies in KYC to get in more details and ask the management as well. The first reason why we are calling the company is what are the factors which led to a strong Q3? Is the demand, is the pricing, or some new announcements coming in? The second question is the pricing and demand trends for key products. This is a very important question because the chemical industry is a very volatile industry. Sometimes you look sequentially numbers, sometimes you look year-on-year basis numbers. The third reason is of course the value-added product. That's where most of the chemical companies are moving towards, which also includes Himadri Specialty Chemical. Because of that, the margins outlook, that also increases going ahead. Some of the products are having backward integration as well, and that augurs well. That's what the industry analysts say. The overall guidance for the next 2 to 3 years, the company is going through inflection. So what will be the important points to cover? What the company has already stated to the exchanges, we will get you all of them at our KYC show, and its foray into the new industry verticals. You talk about lithium ion, you talk about electrical vehicles. So where does the company stand? And especially R&D factor is very much important when you judge company which is going through an inflection point like Himadri Specialty Chemical. And also the expectations from the budget 2026. That's the burning question which we ask all the guests as we are going towards the budget in the coming days. So these are the important questions which we will ask the management also, and in the management would be Anurag Chaudhary. He's the CMD at Himadri Specialty, where we'll ask Anurag all these key details and the outlook going ahead as well. But it's a specialty chemical industry, and I would like to talk about the company. It is a bit technical, so I'll try to make it simple for you. at what does the company actually do and what's the outlook going ahead before we go into the ratings. The company manufactures carbon materials and chemicals. Just to put that in a simplified manner, there is a coal pitch manufacturer also in India, so there are different varieties of businesses, and company has been in an acquisition spree as well. They are manufacturing advanced carbon material in India. This is a domestic space, but they do have some international clients as well, especially in the tire industry. And also they are focusing on building comprehensive product portfolio of specialty tires in the coming years. Some acquisitions were also there, which augurs well for the company. To service the off-highway, that's OHT, which we call it, the commercial vehicles, agri-industrial and the EV segments. That is where the specialty tires foray comes in. And in this segment, the product margin is also on the higher side. They will be leveraging their expertise in the carbon black products to develop these tires. They are an old player already in the industry when it comes to the carbon black. Also, looking at how the financials are pointed out, I have taken a long-term view, the 9-month view, the 9-month FY26 view. The EBITDA per ton, that's a 15% year-on-year increase coming ahead, and the level is at 16,934 rupees. PAT, there's a significant growth, 41%, and it's around 564 odd crore rupees. So these are the 9-month numbers which I'm talking about. But moving on, apart from this, there are key clients also. There are Indian names. Of course, I've talked about the tire names. Apollo Tires comes in, Pidilite comes in, and also there are some international clients also which we would be focusing on. Apart from this, the company's recent news flow is very much important. Two of them are there. The first is the first ever liquid coal pitching shipment that has gone to Middle East as well. This happened in the month of December. That's what the company stated. And also the trial production has started for the specialty carbon black capacity as well. Management seems bullish, and we'll ask Anurag on these important developments going ahead. FY28 growth map is something which the company has given, and remember, these are full year operations. The first is for specialty carbon black. Also moving ahead, other sector which will be focused will be the builder tires. That is where the production scale up is happening. It seems like a turnaround story is being played out. This is for OHT, this is your off-highway tires, and also the commercial vehicle and the PCR segment as well. The anthraquinone and carbazole, these are kind of a specialty chemicals. That's where the full year operations will also kick in. And apart from this, let's pull out the commercial plant for LFP, that is your lithium ion, that cathode active material. That plant will also be operational going ahead. Naphthalene Bland's Duroflex TM, that's the name which we are talking about. That itself will also see an important inflection point. But apart from this, let's move on to the show's format. When we get a company, I've explained to you what Himadri does and why we have called Himadri. But what are the key ratings for Himadri? There are 8 of them where we judge a company in KYC. This includes income statement, balance sheet, cash flow, return ratio. These are all the numbers I'm talking about. But apart from numbers, there's other story as well. That's the story of the shareholding, the street cred, how much the stock has moved, be it 1 month, 6 months, or even if you could say a 5-year basis. How do the valuations look? I've taken the past, present, and the future to give you an entire picture of how valuations come in, and outlook. That's also very much important, especially with a company like this on forward-looking sectors. The first one is definitely going to be the income statement, and of course we have discussed the 9-month PAT numbers also with you. But overall, let's look at the long-term basis, how things have moved. The revenue has done really well. It's 18% CAGR coming on a 3-year basis. But even if you look at the EBITDA numbers, that has also been strong. That's around 73%. But the most important thing is the PAT. That is where the movement has happened. It's up 105%. So on a long-term basis, for a long-term investor, this is a very strong numbers which I'm seeing. And net, the Q3 numbers also, if you see, there has been decent going ahead. But the net profit, that's up 36% on a year-on-year basis. So net, it's a strong thumbs up when it comes to the income statement. The second one, of course, we'll talk about it, but the margin trajectory, that has something which the management has walked the talk, and each time it is expanding. It's at 21% currently, and interestingly, we might see this up move going ahead as the company is focusing much more on the value added segment. So the first criteria, we have already got the numbers. Let's go on to the second criteria. That happens to the balance sheet. Balance sheet net, remember there are two important aspects to it. Recently, the promoter stake also went up. There was a fund infusion coming in. That's where the strengthening also happens to the company. But the borrowings, that's something which has gone up. Company is going for expansion. So net, the debt equity ratio is not a big concern because the company is at that cycle of the business, you could say, and the cash balance is also very decent, so 652 odd crore rupees. So it's a strong balance sheet, and of course the borrowing levels is elevated, and that is because of the entire setup. But net, it's a neutral rating when it comes to the balance sheet. So we have spoken about two important numbers, but the third important number is also very much important, and that is the cash flow segment. How does the company actually work? And that is where some divergence is coming in my analysis. The net cash flows, of course, it's down 60 crores in FY25. We will be looking at the numbers in the 9-month FY26 also. That's on the positive side, but the cash flow to PAT conversion, that is really strong for FY25, and it has maintained itself over the last 2 to 3 years, and that is why I will be giving cash flows a neutral rating. Apart from cash flows, let's just talk about the return ratios. ROCs, when you look at it, generally anything above 15 to 20% for a chemical company is good. It's healthy. Let's see how much that helped, and the way the margins went up. Now the ROC, the return on capital employed, that's also going up. There was some inflection point in these 3 years, but then it has sustained and maintained. That's the thing, 28% here, 34% here. The ROC numbers are very strong over here. So I would be giving this a strong thumbs up when it comes to the return ratios. We have spoken a lot about the numbers, but shareholding is very much important as well. There was a recent fundraise, there was a promoter participation in that, and the conversion was there of equity from the warrants, and that is why we see the promoter stake going up from 50%. It has gone up to 52%, and it's sustaining here. You must be wondering, what are the institutions doing? And interestingly, I'd just like to point out the FIs, a minor stake increase is there from 5%, it has gone up to 6%. On the other side, it might look like a reverse trade where the DIs have kind of increased the stake till March, but then again reduced it till 3%. And interestingly, the retail participation is very high in this counter, and that's what we have seen. But now it seems like it is slowly coming down as well. That's where the institution gets active. So net, it is healthy, but I'll still give this a neutral rating when it comes to the shareholding pattern. Street cred, this is the next rating I would like to talk about. And net, if you look at the share performances, how it has been for last 1 month, it's up 7% odd. But if you're a short-term investor, be it 6 months or 1 year, that is where the downtick is coming in 6 months year-to-date basis. But if you're a long-term investor, congratulations, it's been a multi-bagger. 5-year returns has been 832% when it comes to Himadri Specialty Chemicals. So net, it is still a neutral rating when it comes to the street cred. But let's look at the 7th parameter, that's the valuations. Is the stock cheap? Yes, the stock is cheap. Why? I'll give you that example. Current PE for the Himadri Specialty stands at 35 times the 12-month forward PE numbers. But in the past, I saw how much changes which have happened. The peak numbers I'm talking about, the 5-year average high PE, the high PE, the peak PE, that was 70 times. From there, it has corrected 50% almost, and almost 39 times is the 5-year average. So it's still below the average, 50% discount coming in from its peak, and that is where valuations turn very favorable for this counter. And over the last 1 year or so, if you see the charts, the stock hasn't done much. Now the numbers are coming and inflection point is also there. So it's a strong thumbs up when it comes to the valuations. But there's a last but not the least, the last is the outlook. The outlook, what does the company talk about? The company itself is moving towards the high value added products. That is where we are seeing the stock. The specialty carbon black, that's where the company wants to, come up with a full year operations, and the commercial plant, that cathode active material, that is where the completion will happen, and Street will be looking at when the incremental benefits come in. And of course, the naphthalene balls, the Durofresh segment, that is also a complete closure we can expect. Birla Tires, that's the turnaround story which I was talking about. And also there are new age areas where the company is focusing on, be it electric vehicles, lithium ions. That is where also the overall outlook will be coming. And yes, green chemistry, that's what I'm talking about. Management has been bullish. We checked the annual reports, we checked the Q2 numbers, Q3 numbers, and also the investor presentation, and green chemistry has been talked about a lot. But let's give you the final ratings, the KYC ratings for Himadri Specialty Chemical. What are those ratings? Let's pick it up. Of course, the income statement was strong. The 9-month PAT number did exceed the FY25 PAT. The balance sheet and cash flow is largely neutral, but return ratios, they have been strong, more north towards the 30% odd numbers. Shareholding street kid largely neutral, but valuations are very attractive compared to its peak numbers. It's down 50%, and outlook on the future chemicals, the value added segment, that is where I have given a strong thumbs up. So in total, the KYC rating for Himadri Specialty Chemicals comes in at 6 out of it. Is generally on the higher side of the average KYC ratings which we give, especially on the future and the valuations front. That is where we feel there might be some alpha in it. But we caught up with the management, Anurag Chaudhary, the CMD at Himadri Specialty Chemical, to talk about the details on their growth outlook. Do listen into that. Anurag ji, welcome you to the show. Could you give us the key details about how the performance was in Q3? What led to this strong performance?
So, good afternoon, Sirji, and it's a pleasure to be on your show, KYC. If you look at the way Himadri has grown over the years, our business model has really matured. And today, the profitability which the company is earning is not a one-time effect. It's the result of years of strategic moves and building blocks that we have built over the years. So we have engaged with our customers in specialty products, worked on with them, our R&D team has worked with them, and we supply our customers the product which is not ready for today and meets their future requirements also. So this gives us a sustainable profit margin. In addition to that, we have done a lot of work in terms of operational efficiency, improvement of yield, waste heat recovery system. So all these factors put together, high value-added products have really been the game changer for us.
Just to put that in perspective, the company's focus is moving towards the high value products. But I did check, there are some vision statements. I think for FY26, you have already got all of your blue ticks done already. It's already tick mark is definitely there. But for FY27, FY28, how does the company change? Because there's a lot of change impact written in your investor presentation. So what are the key strategic guidance and outlook going ahead for FY27 and 28? And you can divide it amongst different businesses.
See, I would like to summarize it in a different way. Like if you ask me for 2030 roadmap for Himadri. So 2030, from here onward to 2030, there's going to be a big transformational journey which we are embarking on. So if you look at the existing product portfolio, we have doubled our capacity for specialty carbon black. This quarter, we have increased our capacity from 60,000 metric ton to 130,000 metric ton for specialty carbon black. We have announced a capex of 120 crores for anthraquinone and carbazole, very high value-added products. Then we have working on setting up first lithium iron phosphate plant outside China in the world with a capacity of 40,000 metric ton in the first phase with a capex of 1125 crores. In addition to that, we are working on other battery chemicals, components like anode material. In anode materials also, we are working on synthetic anode, natural anode, and silicon carbon. Only company which is positioned to cater to all three types of anodes, plus hybrid anode. This is a unique positioning which Himadri is going to have. These products are at advanced stage of research and development, and in next 4 years' time, you will see a lot of these products coming into commercial production. So,
right. Anurag ji, you spoke about the R&D part also, and generally R&D takes a lot of time also, be it the chemical industry or the medical industry. But your new products which are keeping on coming, any timelines if you could give us to our audience?
See, R&D is a long drawn effort. If you look back at Himadri, we have been talking about lithium ion batteries for last 14 odd years. So that time there were several chemistries where up in line, but since then we had a vision that this is the chemistry which is going to play a critical role in future. And today it's a reality. If you see today, everyone is talking about lithium ion batteries. And everyone is doing something or other related to this. But Himadri has the first mover advantage. We are working on this chemistry for many years. We have spent huge money in terms of research and development. For research and development, one thing, I was in Mumbai attending ET CEO Roundtable Conference the last month. The who's who of industry was there. So the one thing came out very clearly that globally companies spent 2% to 3% of their top line in research and development. But in India, companies are spending only 0.2%. So that time I felt very pleased to say that Himadri is spending 2% plus in terms of research and development.
And Anurag ji, yeah, definitely. And Anurag ji, I presume you are in China right now, and largely any chemical player who is in China must be, of course, looking after some important businesses as well. So what is the ground channel check suggesting, for the company here? New order wins we can expect?
See, I keep on traveling globally. I have my R&D team right from Australia to Japan to China to South Korea to Europe to America. So we have a 148 members team with 24 PhDs in different streams of chemistry. So I keep traveling all over the world.
Yeah, that's pretty interesting on that. But Anurag ji, budget expectations. You are an industry veteran in the chemical space, so specialty chemical also. What are your views or request coming in for the budget 2026?
See, the government has been very proactive. The encouragement, the motivation this government is giving is unparalleled. See, in most of the sectors, they are coming up with PLI scheme. Recently, they have come up with a R&D scheme in which they are encouraging investment by the corporates in developing new product, process, and technology. And Himadri is going to be an integral part of all these things. So I think proactive steps the government is taking is in the right direction to convert India into manufacturing hub. We recently, even China, there was a imposition of duty, but they have removed export tax on battery materials. So that is again a positive thing for other geographies. And I expect the government to continue with the policies and strengthen the hands of the industry to do more research and development and make India Atmanirbhar Bharat, the Swapna of our Honorable Prime Minister, a reality.
Anurag ji, you spoke about lithium ion and also the carbon side of it. There's an expansion also taking place. Apart from this, electrical mobility, that is also a sector which, India, there's a growth coming in. Of course, the base is very low. So how do you positioning this and how the inquiry is looking like for this segment? I'm talking about your electric mobility.
See, sir, electric mobility as it is at an inflection point. If you go back, you see at a point when Nokia mobile was there and BlackBerry was there, we never ever imagined about today's generation of phones, smartphones. So, but when the revolution came, the growth was unprecedented. Same thing is going to happen with electric vehicles. Today, it has coming at an inflection point from where you will see potential.
All right. Feel there is a kind of technical error. We'll try to get back with the management. But of course, Anurag was speaking about importantly how the growth is coming in for Himadri Specialty. The company is in its inflection point as well.
So from here, you will see exponential growth coming in electric vehicles. There are many reasons which are supporting it. The running cost for electric vehicles is 1/8 of our IC engine. There is 2,200 plus moving parts in IC engine, whereas there is 23 moving parts in electric vehicles. The maintenance cost is hardly there. So looking forward, you will see a big change happening in the mobility industry also. China is a reality now. In China, you see already more than 50% of the four-wheelers have been replaced by EV.
All right. Anurag ji, apart from this, of course, I would like to understand there's so much, futuristic, projects are there, which is undertaken at Himadri. But any kind of fundraise, because I think there was a recent fundraise also. going ahead, do you think another fundraise would be required, or will it just come from internal accruals? Because your growth plans are very big for the next 2 to 3 years.
Recently, there was a conversion of warrant which was issued to our team members and the promoters. So we converted that warrants into equity. That was the only fundraise. And there is no plan for any fundraise from third party in future. In addition to whatever capex we have projected will be met through internal accruals. If you look at the balance sheet of Himadri, we are a debt-free company. Last year, we had a 381 crore plus cash positive in our balance sheet. Plus this year, we have 300 odd crores from our warrant conversion. And then we have, in 9 months already, we have 700 plus EBITDA. So looking forward next 3 years, we have a huge cash accrual. And already we have a capex plans, announced capex plan of around 2,300, 400 crores. Plus we will be also announcing few more capex plan of around 2,000 crores over the next 2 to 3 years.
Yes, Anurag ji, and what's the guidance going ahead for the company?
So 2024, FY 2024, we had a PAT of 411 crores. In FY 25, I gave a guidance that in next 3 years, that is by FY 27, we'll double the PAT to 800 plus crores. Good thing is that we have been able to do this in next 2 years instead of 3 years. Again, now in FY 26, I'm giving a guidance that FY 25, we had a PAT of 548 crores. So we will again double this PAT in 3 years time from 548 to 1100 crores by FY 28.
Anurag ji, the last.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete. charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Benchmarks crack under pressure today. Nifty struggles to stay above 25,000 level after slipping below for the first time since 6th of October. Sensex sheds more than 600 points amid rub-off from the global risk-off sentiment. All major sectors in the red today. SRF under pressure after delivering weak set of Q3 numbers. Persistent, on the other hand, saw inline performance, but Q3 profit dragged by one-time labor code impact. Stock down more than 4%. All eyes on Dr. Reddy's third quarter results. Continued pressure on US to drag performance for the company. Revenue profit downtake on the cards. Strong show likely for India business. The scenic Swiss town of Davos is heating up with talks on tariffs, political mileage and world order as global leaders and policy makers converge in the small city in Swiss Alps. NDTV Profit brings all the action from ground zero with live coverage and exclusive insights. All eyes on Trump's commentary from Davos. Hello and welcome. You have tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets. Lot of action over there and a clear sign of weakness. A large part of the weak global cues and many factors which are really giving uncertainty to the market, and therefore Nifty 50 finding it difficult to really hold on to the 25,000 levels. It did slip below 25,000 mark today and limping back slightly, but not looking like a comfortable run at the particular moment above that particular psychological level. But not just Nifty 50. Remember the broader market, which is the mid cap as well as the small cap universe. They are the ones which are underperforming the key indices by a huge margin, closer to 2% downtake on mid cap and small cap index. Well, when we look at the sectoral play, bank index is also slightly underperforming the key indices. IT is doing bad. Defense is the one which has dragged the most. In terms of some of the contributions, well, taking a look at the key factors that are really putting pressure on Nifty 50, the big boys like ICICI Bank, L&T, HDFC Bank, Axis Bank, Reliance Industries are the top draggers. In terms of percentage drag and not in terms of heavyweight drag, Trent is on my radar with more than 3% downtake and a huge amount of weakness coming in there. Eternal, TCS, HUL are some of the gainers with a slight tinge of green on the screen. But Sharad has all the details of the internals of this mayhem that we are seeing in the market. Sharad.
Well, thanks a lot for that, Nisha. Nifty is retesting the 25,000 levels. This is the first time it has actually fallen down below the mark. This is since October 6, 2025. Of course, initially we got to know that the Nifty fell below the 200 DMA and then the 25,000 mark, and that's on an intraday basis. But yes, a minor recovery is definitely happening in the trade, which Nisha actually pointed out as well. Might be slight, kind of a short covering, but market is still in an oversold position. Speaking about the RSI numbers, that's on the lower side. That's around 28, 29. But the main concern remains is the global risk-off sentiment. That's playing out for the third straight day. That's what we have seen globally. This is happening. And of course, the issues are happening across the segment. The rupee, that's near its record low levels. That's also one concern. It's around 91.5. It's fallen or you could say weakened 50 paise in just one day. Imagine, there is no RBI intervention news flow also, and that's a concern for the street as well. FI shorts are unchanged at 11%. You could say the longs are at 11%, or largely we could say these numbers, but the FI is remaining seller for the 11th straight day, and that is something which you'll be watching out for. Weak breadth in the market continues, and India VIX, it's up near that 14, it's up 23% in the last 5 days. So of course a lot of reasons are there, but the global yield market, the bond markets are showing concern. Over to you, Nisha.
All right, Sharad, thanks so much for all those details. And Persistent has posted its numbers. It does beat the expectations, but there are very pressure points. Sandeep Kalra, CEO of Persistent Systems, joins in with us on NDTV Profit. Sandeep, always a pleasure to welcome you on NDTV Profit. My first question, in terms of your operational performance, you have seen an uptick. But when it came down to the net profit level, that's where the dip has happened. So between profit and profitability, what has really transpired and the factors at play?
So let me start by the high level commentary, and then that dwells into the answer that you are asking me to give. So if we look at the quarter gone by, we had a 4% quarter on quarter revenue growth, 17.3% year on year revenue growth. This translated into $422.5 million in dollar terms. In rupee terms, it translates into 5.5% quarter on quarter and 23.4% year on year. Now, when you are looking at the profitability this quarter, if you look at it and you look at the entire industry, it was impacted by the new labor codes that were recently announced in India. Now, this impacts our entire India employee base. And from that perspective, it had an impact of 2.3% on EBIT margin and 1.8% on the PAT margin. Now, if you look at your question, the PAT came in at adjusting for this at 11.6%. But if we add back the one-time impact of this new labor code, the PAT would have translated into 13.4%. And then obviously the question you are asking would not be there. So on an overall basis, if you look at operational PAT, excluding this one-time impact, it is at 13.4%, which is a healthy growth.
Right, Sandeep. So the entire sector has been really plagued by the one-time labor code impact. Any future impact, anything recurring, or was it one time? What will be the impact going forward?
Yeah, so the way to look at it is for the entire industry, and this is not just Persistent. There's a one-time impact, which is a catch-up for the past, based on whatever the clarifications have been provided by the new act. Now, going ahead, it's a part of the operational EBIT, operational PAT, and we do not expect any such impact going ahead, unless there's any new regulation that comes our way.
All right, so thanks for that clarification. But focusing on the regions and the performance that the company has shown, Sandeep, India and Europe have shown weakness. What are the factors really impacting the growth there? And going forward, how do you see it?
Yeah, so to put things in perspective, North America accounts for more than 80% of our revenues. Europe accounts for roughly about 8.5 to 9.5% of our revenues. India is in roughly in 10% range. The rest of the world is very small in the range of 1.5 to 2%. Now, for the quarter gone by, on a year-on-year basis, the bigger picture is North America grew by 18.6%, Europe grew by 22%, India declined by 2.5%. Rest of the world grew by 37.9%. This is on year-on-year basis. And look, from our company perspective, and even if you were to look at Europe in the context of the overall industry, we are growing pretty much in the top quartile. If Europe grows at 22%, can it do better? Yes, it can, but we are satisfied and we'll try and do better than that. India obviously has multiple impacts. India, we also have to decide how much we want to do in India, because profitability in India, we have to choose the businesses that we go after, which are in line with the profit expectations we have. Second part of it is also impacted by the currency side of it. If you look at year on year, there's a significant currency depreciation, and that also adds to the numbers. Nothing to worry about. Healthy mix of numbers. If you look at what we just discussed, EBIT grew, PAT grew significantly, revenue grew significantly at the company level. So pretty comfortable with the mix.
Right. Since North America, Sandeep, is your largest market and, of course, 10% of India business, then what's your outlook for the current quarter going on in terms of the performance in both North America as well as India and the factors impacting it?
Yeah. So look, we don't give forward-looking guidance, so I'll not quantify the things. I'll give you a directional view to things. If you look at our current, markets, as I just said, North America grew by about 18.6% in the last quarter, year on year. We are expecting, unless there is significant policy changes brought in by the new administration, there should be a healthy growth in North America. Similar in Europe. Now, from a sectoral perspective, our banking financial services is growing at roughly about 30% year on year. We expect it to lead the growth for the near term. Healthcare life sciences had tepid growth for the last 2-3 quarters. It's coming back big time. And remember, healthcare for the last 2 years was the leading, vertical for us across the industry. And it had grown at one point in time upwards of 60% year on year. So from our near future, we see banking financial services leading, high tech following, followed by healthcare life sciences, secular growth, decent growth across all three sectors. And as far as India is concerned, India will be a play where we have to pick and choose the businesses we want to do. There are two kind of businesses we do. One is the domestic India business, where we are a significant player in the financial services, and we are behind a number of significant transformations happening in the financial sector in India. The other side of it is where we work with the GCCs and where we pick and choose the businesses we want to do, because obviously there the profit expectations are very different from a customer perspective and our perspective.
That's right. But Sandeep, right now with rupee depreciating so fast, also there are many global uncertainties that are plaguing the businesses across the board. So what are those important macro factors, not in your control, but which are going to be impacting your business in the near term, in this quarter and the next? Can you give us a few key drivers and negative as well as positive impact of that?
Yeah, so look, we don't give forward-looking guidance. If I was to, kind of delve quantitatively into what you're saying, it's pretty much going against the norm that we follow. But from a near-term perspective, I don't see in the next 3 months something change very significantly that can kind of have a very big headwind or a tailwind for us. So we are on a trajectory. Our endeavor is, come good macro, bad macro, come policy changes, etc. We will try to work the best in our industry. And from the third pivot, which is the very positive pivot for us, which is the AI side of it, where we have been investing ahead of the curve, where our capabilities are very differentiated as compared to the industry, where we are winning deals based on the seeds that we had sown in the last several quarters. Several of those smaller things are turning into bigger deals for us. We are positive. And that's where, look, in any environment, there will be companies that will outperform, there will be companies that will go sideways. Our attempt at any point in time is to build the best capabilities, have the best, go-to market, be closer to the customers, and deliver in any of these environments. So we remain positive about the performance.
All right, Sandeep Kalra, thank you so much for giving us insights about the company and the performance. All the best for this present quarter. And that particular counter is seeing pressure because of the one-time hit, because of labor code provision that had to be made in this particular quarter. The stock down closer to 4%. But remember, Nifty 50 is seeing some support coming in at 25,000 levels and comfortably moving above that. So some buying seen at 25,000 levels, 25,100 being clocked in. Keep an eye out on the markets. We'll slip into a short breather and come back with more news and updates. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. You're watching Markets at 12 and Nifty 50 trying to really see some bit of recovery at this particular moment. Definitely some buying coming in at the lower levels. Jigar Mistry, who's the co-founder of Buoyant Capital, joins us now to give his perspective on the markets. Jigar, quite a crash today in the market. A huge amount of sell-off is seen because of various factors. What's your sense on the market movement today?
Hi, Nisha. So yes, I think it was sort of brewing up for some time. What had essentially transpired over a few sort of almost from 2020 until 2024, some of them needed to get unwound. And I think this is reasonably healthy, the way in which it is transpiring. As we stand today, I think large caps from very expensive are now coming to more average valuations. They are not yet cheap. Small caps are not even at average valuation. So we are not all that optimistic, but things are turning out a little better as we speak.
Jigar, if we look at those pockets in the market, which are going to see a further downside because of the valuations not aligning with the various factors impacting the market, what would those be?
So let me run you down, Nisha, a little bit, take you back in time. And what happened was that, from 2020 till all the way now, 80% of the demat accounts, 81% of the demat account that have opened have come during this period. Now, this is the time when most investors essentially saw like a 32% sort of CAGR on Nifty, 45 to 52% CAGR on small cap. And slowly and steadily, it started getting into the expectations that this is what normal markets tend to produce. Now, you could show a lot of data, 5 or a 10-year rolling return for large cap or small cap is at around 12 or 13%. But unless people sort of experience it themselves, it's a rather difficult transition, getting away from 25% expectation to a 13, 14% expectation. That transition doesn't happen without some amount of volatility, some amount of, ups and downs playing out. All the excess is in small cap. Now, over a 3-year rolling return, you are looking at around 12, 13% return, earnings growth, whereas the valuations were almost at, implying a 24% stock return. So there was about 7% compounded for 3 years sort of a fraud that needed to be taken out. Some bit of it is in the price now. Some more, I think once that happens, you should see reasonably decent levels to get in.
I think that's a resounding view, Jigar, coming in from almost all the market experts that there is a further downside. Very quickly, what should be the investment strategy at this particular time? If there is money on the table, should there be profit booking? Is there a stop loss that should be incorporated, or wait and watch and wait for the right time to re-enter? What should the strategy be at this point?
So, Nisha, for a fund like ours, the perspective is slightly different. What happens is that, if you come to a conclusion like we have, which is that, India is not really Japan circa 88, 89, which is to say that you're not going to see 2 or 3 decades of sort of flat market returns because the underlying fabric is fairly strong. You're more people working a little more smartly. So labor force participation, productivity gain, all of that is coming broadly into a fairly decent line. Now, with that perspective, you essentially want to say that you will want to avoid excesses on either side, right? When things are going too great, you don't expect a lot. When things go too bad, that's when you start deploying slightly higher quantums of money. So clearly, for a fund like ours, we are always invested. Cash as an alternative asset class, we don't see a lot of value in that. And there will soon come a time when we'll start getting a lot more aggressive, looking at sort of the defensive stance we have had for a while now.
All right. All the best, Jigar. Thank you so much for your insights right here on NDTV Profit. All right, let's shift focus to one stock which is a sight for sore eyes in an otherwise very weak market. India Mart Intermesh, that the particular stock is up over 4%. The stock, the company really beats the street estimates in the third quarter collections growth and was a key positive coming in. What didn't really fare well for the numbers is the paid subscriber additions. Dinesh Agarwal, who's the CEO and founder of India Mart Intermesh, joins in with more details on that. Dinesh, thank you for joining us on NDTV Profit and many congratulations. Your stock is still holding up. The market seems to like what you have performed in the quarter. Can you give us the key deliverables, the key factors which drove the growth in the quarter?
See, three things. Maybe one, we have probably done a slightly better job at upsell and retention of the gold and platinum customers. We have also seen some bit of effect coming from the increased prices in the silver bucket, as well as the busy infotech performance has also added to the collections growth. And that is how our collection from customer, which used to be 10-11% in the past quarters, has now come at 17%. Thank you.
Right. So, Dinesh, paid subscriber decline has also been seen as a key negative. Can you give us a sense on that particular aspect and how it's panning out for this quarter?
Yeah, normally we try and do about 2,000 paid supplier net addition in the quarter. However, in the beginning of the last quarter, we took a price hike in the silver from 28,500 to 32,000. Which is a minor price hike that we have taken. However, the sales teams and current customers take a little time to adjust to that. And we have guided that for the next 2 quarters, there might be some impact on that. But in the long run, the overall price increase would help improve the collections as well as margins over the longer period.
So what you're saying is that the price hike will be absorbed by the market and therefore it will offset the lower additions. So that you are confident in. How many quarters will this really show up, Dinesh?
I think just another more quarter and then it should start to show up.
All right. So for this particular quarter, this realignment is still to be worked upon, is what you are mentioning.
Yes.
On the other hand, the lower marketing spends also aided your margin. Now, Dinesh, as we understand, lower marketing, marketing and expenses are discretionary in nature. You can play around with that particular factor and that tool in order to really impact your margins and the profitability. What is your view and your strategy for this particular quarter and the rest of the year in terms of the marketing spend? Because that will have a direct impact on your margins going forward.
Yes, we have guided that we have set aside a budget of about 10 crore rupees per quarter for the marketing. We have been able to spend about 6 crore rupees so far every quarter. This particular quarter, because there was the Diwali holidays and there was Christmas and New Year holidays, so we had paused the advertising for certain number of days, and that is why you see a slight dip in the marketing expense. But going forward, we will continue to press paddle on that to expand our marketing across more and more buyer categories, as well as we will continue to do social media marketing for the supplier side on the LinkedIn and Instagram and Facebook.
Right. So there will be a marketing spend, and we'll keep an eye out on that particular aspect since that had a considerable impact on this particular quarterly result. But one more important aspect is also that most of the brokerages in the market is expecting higher revenue growth in the coming quarters. Will that start kicking in from the present quarter? Can you give us some guidance and outlook on the performance?
See, let us understand the way it works in our subscription industry, and especially in an industry where there are more annual and multi-year subscription. Collection from customer is the leading indicator of the deferred revenue. So collection from customer has grown by 14% in standalone and consolidated level 17%. And that is resulted into a deferred revenue increase of about 16% in standalone and 19% in the consolidated. So revenue is typically being recognized on a daily, monthly basis from this deferred revenue. So effectively, you see a 2-3 quarters delay from the collection per customer and deferred revenue to start showing up in the revenue. Revenue is typically a 15 to 20 months moving average of the deferred revenue and collection from customer. So we will see some uptick, but we will probably start to see some uptick maybe 2 quarters down the line.
All right. So enough guidance as well as insight that you have given, Dinesh, for the next few quarters and in the near term, how the company is going to perform. Congratulations on a good performance. The stock is really lively in an otherwise weak market. Thank you so much for joining us on NDTV Profit. A quick look at the market. Yes, there is recovery, but eternal share price, that is something to be watched out for. A sudden spike up in Zomato's company Eternal. So keep an eye out on that. With that, it's a wrap on Markets at 12. Thanks so much.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री।
Hello and welcome to NDTV Profit. This is Hiral Datia bringing you our all new offering, trending stocks. With me is Sharad Dubey standing at the NDTV Profit market page with all the action in the markets today. Sharad, interesting day of trade. I mean, the kind of downtick that we've seen since yesterday and the recovery that's come in right now, what is that indicating? Because we were in that oversold zone already.
That's right, Hiral. Thank you very much. Largely, I would like to say a little bit of short covering is coming in the markets, but the concerns were definitely there. Nifty falling below the 200 DMA, then that 25,000 mark, and that really scared the entire market participant. But then after that, a significant recovery has happened in the markets, and this is as a measure of short covering and largely oversold positions were there. But let's just see how, Nifty Bank has also panned out. The story remains the same, and even I'm seeing the mid-cap, small-cap indices also showing some kind of recovery over the last 45 minutes to 1 hour as well. But what are the key factors to watch out for in a very busy market today? The first one is definitely when the market is finding a good support at the 25,000 levels. So that's I would say a strong support. Intraday basis, of course, this 25,100 is something which I would like to track. The recovery is there of nearly 250 points from the day's lows itself, and that is showing some strength in the market. Of course, more short covering might be expected in the coming days, and the markets are still in the oversold mode. That means the RSI numbers, that's below the 30 when it comes to Nifty. But yes, the overall VIX, that has gone up almost 20% in the last 5 days. But the biggest concern is rupee near its record low levels. They have weakened past more than 50% in just one trading session. That has been very eye-opening, and largely this is the position which we are getting in the markets. Overall, the bond yield setup and the global setup, the global risk-off sentiment is still there for the third straight day. Over to you, Hiral.
Thank you so much, Sharad, for that. But one stock that is trending in trade. Let's pull up a Central Bank of India and see what that counter is doing on the back of the stable third quarter that has been reported. In fact, that stock has also corrected. Recovered from the day's lowest levels, but we're still trading with cuts of 0.2%. It's an interesting quarter because there is a broad-based recovery that we're talking about. Kalyan Kumar, Managing Director and Chief Executive Officer of Central Bank of India, joins us to discuss more on this. Welcome to the show, Mr. Kumar. Always a pleasure to speak to you as well on NDTV Profit, and this is Hiral on this side. I have a question with regards to net interest margins. First up, there is a sharp drop that we've seen in this quarter. Now, what is the outlook looking like if you have to look at the guided range for FY26 and 27? Because you've said that you are confident of that 3% kind of a number.
Yeah, thank you. Thanks for the opportunity. Good afternoon. If you can see, this time our NIM was 2.96 and previous quarter it was 2.89. There is recovery of 7 basis points in this last quarter, Q3. And I have given guidance to the market that we are going to maintain NIM 3%. And reason behind it is actually there are a lot of scope available. We are having CASA, very strong point is for Central Bank of India, as our CASA is 47.13%. And also I can tell you that more than 65% branches of Central Bank of India are maintaining CASA 50 and above, 50 to 55%. So a lot of scope is available in this segment. We have devised several products for different segment of customers, and also proper marketing teams are on the job. So from CASA side, again, it is strength point and we are building on those side. Another focus area is our RAM sector. If you can see our previous quarter, September quarter, this loan book of RAM was 72%, where good yield was available. And this quarter, it has reduced to 69% because it is again rebalancing of our books, corporate and this RAM mix 69-31. It is again aligning with our guidance to market 65-35 ratio plus minus 5%. The RAM sector also, I can tell you, in agriculture, our focus in SHG, where 9.86% is the return yield we are getting out of that. That is one focus area. And another for creates the MSME side also. And we are conducting mega outreach program across the country, 100 plus places.
Right.
In that way, we are going to protect our margins.
Right, Mr. Kalyan, the concern is definitely on the NIMS front, the net interest margin. There seems some compression here. Going ahead, do you see this still bottom out in the coming quarters, or the pressure would be remaining there?
See, our loan book, 60% loan book are external benchmark link rate. The pressure is there. It is fair to say that pressure is there. But the initiatives, as I told, in CASA side and also RAM side, and also towards curtailment of expenditure and improvement in fee-based income side, like centralized forex sale we have established. So from these segments, we are expecting good amount of income as we have diversified our revenue portfolios. So that's why I am confident that we will maintain NIM at 3% in Q4 also.
Okay, so that's with regards to net interest margins. You're talking about the CASA as well. The other question I have for you is in terms of your CASA strategy, Mr. Kumar. Total deposits have grown, but the CASA ratio is approximately around 47.1%. How does the bank plan to further improve CASA mobilization, taking the competitive deposit environment right now? And your outlook when it comes to the credit to deposit ratio? Is there a specific threshold that the management wants to maintain to ensure, liquidity remains balanced?
See, our credit to deposit ratio, previous quarter, Q3, Q2, it was actually 66. Now it has improved to 72 in the Q3. In that way, CASA part actually is the strength of central bank, 47.13, and you can see CASA has grown by 8.53% in Q3. And similarly, we have initiated several steps like devising several products segment-wise. And technology also plays very important role. We have provided tab to each and every branches. Onboarding of customers are very, very pleasant now. And our mobile app, Sent Ease, actually is like supermarket place, meeting all the banking requirements of customer. So with the integration of technology into our business model, for current account customers, we are having cash management services, supply chain finance platform, and also corporate mobile app, corporate internet banking. The technology integrated into the business model, having advantage of geographical presence in those areas where CASA potential is huge. In that way, I am confident that we are going to improve our CASA numbers. And also this growth rate, at least 8.53, we are going to maintain in current quarter also. And CD ratio, as I told, this is an opportunity before bank to grow, because our peers are anyway above 76 or 80. Our aim is also to reach to at least 75 up to March quarter, and after that again improvement would be there in CD ratio.
Okay, so Mr. Kalyan, let's talk about the asset quality and the capital side of it, because the provisions have spiked, in this quarter. Secondly, the slippages have been contained at around 658 odd crores as well during the quarter. So what is the expectation when you talk about the slippages in the final quarter, particularly agriculture and MSME? And another part to that is your capital buffers, because the CRAR has moderated slightly to 16.13. So any plans when it comes to capital raising 3FPO, QIP to support that 19+% advances growth going ahead?
See, we are having sufficient capital. If you see, our CET1 is 13.87%. That is sufficient to support our growth in this quarter, at least. In this quarter or in this financial year, there is no plan for capital raising. We are having enough capital. Regarding maintaining of asset quality, this is one of the good work done by Central Bank of India team, that our slippage ratio in this quarter was at 0.25%. and 9 months it is 0.74%. And looking to the asset situation and all, I can tell you it will be ranging between 1 to 1.22%. There is consistent decline in slippage ratio, and Central Bank of India has implemented so many processes, improvement, and also fit on street model. We are having war room, integrated call center that is integrated with the propensity model. With that, we are able to maintain our slippage ratio consistently. It is on declining trend. This quarter it was 658. And this current quarter also in Q4, we are sure that it would not be more than 700 crore slippages. So we are maintaining this. That's why it is impacting our credit cost also at 0.37%, aligning with the guidance given to the market.
Got it. All right, Mr. Kumar. Thank you so much for speaking to us. Always a pleasure to have you on NDTV Profit as well. So that's the management of Central Bank of India with their outlook of what improvements are expected going ahead. But moving on, let me quickly take you through the watch list that we will be focusing on as well. Apart from a Central Bank of India, what we have for you is Eternal that will be reporting numbers today. That stock is seeing some good moves. JSPL, you have Morgan Stanley, which is an overweight on the counter. Credit Access Grameen has reported the third quarter numbers. A strong set coming in on that one. MRPL volumes are pretty strong, so we are going to talk about that one as well. Alkyl Amines is trading at the day's highest levels, and there has been some flavor when you talk about Alkyl Amines and Balaji Amines over the last couple of trading days as well. Kalyan Jewelers, one of the top losing counters. Volumes are up nearly 6 times what's brewing there. And the Indigo cancellation fiasco, the way it's going to hit the third quarter. That's a story that, our colleague Danish has been getting for us as well. That's what has created some bit of pressure. SAIL, Morgan Stanley has an underweight on the counter, and you have a ICICI Bank, which is falling for the 5th consecutive session. Sami Hotels is down 10% in a week. SRF, L&T Finance also is what we're discussing today. And DLM on the Q3 earnings, along with a Shopper Stop that is reacting to numbers as well. Persistent, which is reacting to numbers. Along with that, you have a Coforge, which is under pressure. So that's the watch list that we are going to discuss. But Sharad, over to you for the rapid fire today.
Well, yes, before that, Hiral, let's look at the markets. And Nifty is back in the green. It's trying to retest that level, and that's a very interesting take coming in. We already pointed out earlier in the show, short covering will happen, and 250 point up move from the day's low is something which we are watching out for. But yes, important levels to track, because today 25,000 levels was breached, and even the 200 DMA was breached. But coming back to the rapid fire, joining us is Sachin Sarvade. The first stock, Sachin, is Alkyl Amines. What's your view on that?
Alkyl Lab you are talking about?
Yes, Alkyl Amines. All right, the next stock is Kalyan Jewelers. It's at 52-week low. Yeah.
Yeah, Alkyl Amines, sorry. Actually, the stock is currently trading above the 20-day moving average. However, overall trend is down. Immediate resistance will be around 1656 levels. If it is crossing that level, then we can expect more upside of around 1700, 1750 level.
And the next stock is Kalyan Jewelers, 52-week low.
Kalyan Jewelers, overall we can see it is continuously making a lower top, lower bottom, and the trend is also down. Even momentum is weak. Stay away from this stock actually.
All right, stay away from both Kalyan Jewelers and even we are speaking about it. But next stock is Sami Hotels. What's your view on that? Okay. Yeah. Sachin, you can hear me?
Yes, yes.
Yeah, please go ahead. Sami Hotels is the stock.
I'm not getting the ticker actually.
Sami Hotels is the stock. And if not, then you can give your views on SRF also.
SRF, yesterday we can see even in the closing call I have told it will come down, but this is the current demand zone right now. It is right now 6% down, and it has already entered into the demand zone, which is 2500 and 2700. One can enter in the stock for the upside of 2800, 2900, but do not expect much from the stock. overall the stop loss for the stock will be around 2400. If it is breaching 2400, then the stock has more downside, wherein we can see 2000 levels as well then.
All right, Sachin, L&T Finance, what's your view on that?
LTF overall trend is bullish for the stock, and we can see today it has actually retested the 100-day moving average.
The query is L&T Finance. Sachin.
Sorry?
L&T Finance, Finance.
Yes, L&T Finance.
Yeah.
L&T Finance, it has retested its 100-day moving average today, and one can buy at this level. The overall trend is bullish for the stock. Even the RSI has almost entered into the oversold levels also. At the same time, it has retested 100-day moving average, and it has got a bounce from that level. A good recovery from the lows. Also, overall, we can see 300 and 315 levels in the near term.
All right, Sachin, Cyient DLM, weak set of numbers coming in. What's your view on that?
Which one?
Cyient DLM.
Cyient DLM overall structure of the stock is weak. Lower high, lower low is continuously making. Even the trend is down. Stay away from the stock actually.
All right, that's all, folks, for the rapid fire. Thanks a lot, Sachin, for that. Over to you, Hiral.
Thank you so much, Sachin and Sharad, for taking us through the rapid fire. But moving on, the key question from here on is those individual stocks which are buzzing in trade as well. We have Eternal. Let's pull up that one on the screens. Ahead of the numbers, that stock was seeing some good momentum in trade today at the day's highest levels in spite of this kind of a market 5.5% up move. Mahima is with us. Mahima, I mean, a 5.5% up move on the day the company is going to report numbers. What's happening?
Right. I think the only stock which is probably keeping the Nifty in check right now is Eternal, and this is on the on back of the expectation that it's going to be a strong quarter for Eternal going forward, despite of the gig worker strike that took place in peak festive season. The expectations, the estimates that Bloomberg suggests is that revenue may see a rise of around 2 times. EBITDA also may see a rise of almost about 1.5 odd times, and margins may, margins may slid at that 2% mark versus that 2.9% mark, but may see some recovery sequentially. The net profit also may be at that 115 odd crores versus that of 60 odd crores in Q2 FY25. Now, festive season sales might overall get impacted due to gig worker strike on 25th of December as well as 31st of December, but that was focused on certain areas only, so we'll have to see as to how that pans out. But overall, strong revenue growth, and this will be largely backed by Blinkit and Hyperpure, and profitability, however, may see some some pressure in terms of where Eternal stands because of QC expansion. We'll have to see as to how that pans out, and plus the entire shift in terms of inventory model, whether that's completed by this quarter or not. In terms of key things to watch out for, what is their guidance towards expansion of stores after everything that's panned out around gig workers, recovery in food delivery, whether it's on the way or not, because that's not been the case for the past couple of quarters for Eternal. Quick commerce market share expansion, whether that's happening or not considering competition into picture, and Hyperpure revenue growth, at what rate is that happening, and overall going out business, what is the expansion looking like, and how much has it picked up in the last quarter. So this is the overall view of what you can expect from Eternal's earnings.
Okay, so that's with regards to Eternal. Stay with us. Let me also go across to Gaurang Shah from Geojit. Gaurang, welcome to the show. Always a pleasure to speak to you as well. My question coming to you is with regards to your expectation on an Eternal, a 5.5% up move coming in on the day of the earnings.
Thank you, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit, and to you and to your entire team. A small disclosure, Hiral, all recommendations are a part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of investment, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their internal investment interest. So, look, first of all, I think, Hiral, there was a lot of concern in terms of the crowd that is going to come into this quick commerce stroke food delivery platform. We saw correction, then we saw the numbers, then we saw an uptake, and then we saw some kind of stake sale.
which pushed the stock down. But from a long-term point of view, Hiral, our fundamental team is positive on Eternal. We have a buy coverage, buy/hold coverage on Eternal. Our sense is that the number of dark stores that have been opened in 2025 and the lineup of dark stores that are going to be opened in 2026 and thereafter will add to the quick commerce delivery platform revenues in terms of top line and bottom line. They have also ventured into newer geographies, which will have a larger subscriber base and a larger market to cater. Positive on Eternal from a long-term point of view.
Okay, Eternal from a long-term point of view is what you're looking at. But moving on, Cupid is making a strategic 331 crore investment in Bazaar Style Retail through a preferential warrant issue. Mahima joins us with all the details. Mahima, what do you have for us and what is the rationale that you're seeing?
Right, so here, I mean, if you take a look at how these stocks have run up, I think the kind of correction that it's seeing today is probably on account of this news, where Cupid is going ahead and investing in Bazaar Style. So Bazaar Style has, kind of issued preferential allotment of warrants worth rupees 331 crores to Cupid. The issue price is set at 328.25, which is almost a 3% discount from its yesterday's closing price. In terms of where, the overall business update stands for Bazaar Style, revenue from operations saw an uptick of around 13% in revenue. Sales per square feet was down by around 15%. So not a very good quarter despite a festive season being, there in this quarter, but there was also a postponement of festive season that's happening in Q4, and that is why overall retail sales were impacted. But I think the street probably not liking this development, and that is why we're seeing the stock tanking, and how both these stocks, in fact, because Bazaar Style, if you take a look at last couple of weeks, 1 month, it's been up around 21%, but today down around 6% in trade. Similarly, Cupid has seen a run up of almost 160% in the past 6 months, but is now down, in trade today and down almost 21% in the past 5 days. So probably the development that street was not expecting, and that's why the stock is under pressure. Both of these stocks are under pressure.
Okay, so that's with regards to Cupid and Bazaar Style Retail. Gaurang, your view when it comes to this interesting investment bet?
Well, look, Hiral, I think what needs to be seen is not just the one-time news flow, but also the capability of the company to deliver in terms of earnings. Now, unfortunately, we don't have any fundamental coverage on either Bazaar Style or Cupid, but I would request the viewers / investors that don't look at just one-time news flow. Look at the impact of the news flow and look at the capability of the company to scale that acquisition or any other investment they've done, how it is going to reflect on the top line and bottom line from a long-term point of view.
Well, that's an interesting take. Hi, Gaurang, Sharad here. The stocks we are focusing on is, of course, JSPL and a lot of steel-related stocks. Positive broking upgrades also definitely coming in. But is this the right time to, kind of book profits in this sector, or is there any structural play at work here? And if yes, Gaurang, which stocks or which pockets are looking good? Gaurang, sorry, you can hear me?
Yeah, now I can hear you, Sharad. Tell me. Sorry, I couldn't hear you before.
Not a problem. Gaurang, the question is on the steel players. A positive broking report came up, and largely we see there is a structural up move coming in as far as the numbers are concerned. Which pockets or which stocks are looking attractive for you?
So Sharad, I think you need to be positive. Don't have bias towards one side, ferrous or non-ferrous. I think you should have both ferrous as well as non-ferrous. And with that perspective in mind, we have coverage on Tata Steel, JSW Steel, Jindal Steel, Hindalco, Vedanta, NMDC and Nalco. One more advice to the investors, if they eventually understand this team as a sector for investment, then have at least 2-year plus kind of time horizon, Sharad, because whatever is happening at the international front has a direct impact on the international commodity prices, ferrous, non-ferrous, and that has its impact on the performance of the company domestically or otherwise. So have a longish time horizon.
long time horizon when it comes to metal counters. But moving on, let's pull up a credit access Grameen on the screens and see what that counter is doing in trade. Post the numbers. Interesting set. Revenues have grown. Your EBITDA is what is actually a fantastic one. 126%. Margins have also expanded substantially. So basically, it's a strong operational performance. It seems to be a turnaround quarter for credit access Grameen as well. Investec has maintained a buy. They have a target price of 1,450. And they're saying it's at the start of an upcycle. 11% up move coming in today. Gaurang, would you still be a buyer?
Hiral, definitely yes. Not only credit access Grameen, but even look at the numbers of AU Small Finance. On both these companies, we have a positive coverage from our fundamental research team. If you have it, hold on to it. If you don't have it, you can start accumulating at current levels. Given the uncertainty in the market, use dips to average at lower levels.
That's a view coming in for Credit Access Grameen and AU Small Finance Bank as well. But Gaurang, let's just see Shoppers Stop. The numbers were on the weaker side. The stock has earlier tanked in the day's trade as well, down almost 6% right now. Shoppers Stop, the story is not coming out. And India's retail also, we see a lot of retail names, the high valuation ones, have seen a significant correction. What's your view on that, Shoppers Stop, or this entire space as a whole?
So, Sharad, this underperformance was the basic reason why we have removed our coverage from Shoppers Stop some time back. Even when the going was good, when you have the comparison of the peers of Aditya Birla Life Fashion, or if you take a matter of fact, Trent, we have coverage on ABFRL as well as Trent asset disclosure. On Shoppers Stop, because of the underperformance, because of the reported numbers being much below the weather, even when it compares to the competitors, my sense is that ABFRL and Trent could be a better investment idea from a long-term point of view. Won't comment on Shoppers Stop because we have recently removed the coverage from this.
All right, that's pretty interesting on that, but markets are giving a very good update on the markets. Earlier we started the show in red, but look at that up move coming in, and now it's near its day's high level. It's in the green, and that's the beauty of the markets. Of course, the short covering is coming in, largely oversold positions were there. So how much does it close at those levels? Will it be 25,100 or will it be back to 25,200? That's something we'll be watching out for. But right now, the flavor of the market is a strong recovery coming in. So that's all, folks, for trending stocks. From me, Hiral and Gaurang, thank you very much for joining us, and for the entire team at NDTV Profit. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January.
SRF under pressure after delivering weak set of Q3 numbers. Persistent, on the other hand, saw inline performance with Q3 profit dragged by one-time labor code impact as well. Stock down more than 4%. And all eyes are going to be on Dr. Reddy's third quarter results. Continued pressure on US to drag performance, revenue, profit up, downtick. In fact, on the cards, strong show likely for the India business. And it's the scenic Swiss town of Davos that is heating up with talks on tariffs, political mileage and world order as global leaders and policy makers alike converge. In this small city, NDTV Profit brings all the action from ground with live coverage and exclusive insights. All eyes, of course, are going to be on Trump's commentary when it comes to Davos. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities. News and updates on the top buzzers at this hour as well, all while you grab lunch. And let's also quickly take a look at some updates coming in as far as the US Treasury Secretary's comments are concerned. There have been some glitches in UK trade deal, and of course Trump is going to be late by 3 hours, and that's key commentary coming in there as well, because you did have the Air Force One that headed back on the back of a technical glitch. That was a very important update that we were watching out for. Other than that, of course, this is an interesting update in terms of what really happens when it comes to Davos. Like we told you just a few seconds earlier, of course, the commentary coming in from Trump against the backdrop of everything that has been happening and all the headlines is very, very important right now, because you do have Donald Trump in terms of his war with his trade war that could potentially happen. That is something that is very important, and there at the bottom of your screens and on your screens as well, you do have that update coming in. So that sort of update is something that we're definitely going to be watching out for. In terms of the other key commentary coming in from Davos as well, let's try and get in some commentary from Davos as well when you talk about this one, because you do have a bunch of updates trickling in. As of now, the updates that you have is that he's going to be reaching 3 hours late. Of course, the things that you have at hand right now are that you do have US and Europe stuck in a little bit of a trade war after that commentary coming in over Greenland tariffs when it comes to Trump. Other than that, of course, you do have Europe that could scale up its response. And you did have their emergency meeting as well, and that's something that we're looking at. But tell you what, let's also very quickly take a look at what the markets are doing. We've seen a very smart recovery when it comes to the Nifty as well, managing to get back in the green. That's Nifty for you, as you can very clearly see on your screens, 50-point uptick coming in. And just about 10 minutes ago, it was sharply, at least in red. Right now, you have that 50-point recovery coming in, uptick coming in. As far as Nifty is concerned, for Sensex as well, 68 points higher is where Sensex is for you. Quickly, let's also take a look at the picture that you have as far as sectors are concerned. Right now, it's a mixed sectoral picture that you're looking at. Just a few minutes ago, it was not, tilted in the favor of green as it is now, because you do have oil and gas leading gains. When it comes to sectors, energy, metal consumption, auto, media, some of the sectors that are doing well right now, defense is on the back foot, IT is on the back foot, banks not doing all that well, pharma, service, PSU banks, some of your other sectors as well that are, lagging behind right now. But, when you take a look at some of the stocks that are doing quite well for themselves, there's actually a Credit Access Grameen on the back of its Q3 numbers, up about 11% in trade right now. Eternal ahead of its numbers, 6% uptick is what you're seeing coming in for that particular counter. Quickly, let's also take a look at some of the counters when it comes to Nifty 50 as well. So what's doing quite well is Interglobe Aviations, ONGC as well. On the flip side, there's actually a bunch of counters that are on the back foot. So something like an ICICI Bank, Trent, Apollo Hospital, BEL, Eicher Motors, and Tata Consumer down anywhere between 0.5% to 1.5%. So that's something that you're seeing in terms of some of your top losers from within the Nifty 50 pack. But quickly, let's also move on. Try and get you the word going as far as gold and silver are concerned, because you've seen that sustained strength coming in as far as gold prices are concerned, and that's the story for today as well. Let's kickstart that coverage as well, and we do have Ajay Kedia, Director, Kedia Advisory, joining us on the show this afternoon. Thank you so much, Mr. Kedia, for joining us this afternoon, and it's quite an interesting afternoon when it comes to gold at least, because there were those concerns that gold might just crack under pressure given all of the volatility that you have right now. Given the way that it's managed to sustain this record run, there's of course a lot of safe haven demand. Do you believe that that is the key wind in its sails right now?
Yeah, very good afternoon. Definitely, I see 2025 was a very special year for commodity, particularly for gold and silver, where we have seen prices hit a multi-year high. And fundamental, we know central banks are consistently buying because of de-dollarization. Geopolitical tension is a part of momentum we have seen since 2022, and still it's going on. But the game changer was the Donald Trump, because Donald Trump tariff war has stuck, and uncertainty has created a havoc, we can say, in the market, and that is why we have seen prices has rallied around 80% in last 1 year itself. But important was the ETF, investment buying. So I think all this factor has contributed the rally in 2025, but nothing has changed for 2026 also. Here also we have seen, as soon as we stepped in 2026, we have seen US, Venezuela, now we are US, Greenland, or we can say US, European. So I think the tariff concern will impact the supply side, and that is why we have seen the prices moving in a very awkward move in gold and silver. Today we are very close to 4,900 for gold, whereas near to $100 in silver, particularly for silver, where gold silver ratio has crashed down with a high we have seen in 106 in last year, and now it's around closer to 50, which is around 53% fall. That clearly shows industrial demand is onwards, supply shortage will continue to be there, and silver as a shadow metal continues to.
Mr. Kedia, we will delve a little deeper when it comes to silver as well. Of course, you do have man of the day, Donald Trump, who's running 3 hours late. So there's actually a bunch of comments that we could be watching out for when it comes to the entire silver front, especially when it comes to gold. But, in terms of silver, there's actually a lot that you're looking at right now, because, you do have some investors being a little bit concerned. There's actually two sides to this entire party. One side is the people who've actually showed up to the party, and they're just, sort of looking at the others and very happy that they've invested, but just a tad bit worried if it's going to correct from here on. And the other is the entire side that's not managed to make it to the party. Which side do you think you would prefer to be in right now, and what do you expect from here on?
I think the rally has already been missed, because see, first of all, as an investment point of view, we have never been thought, or we have never allocated our portfolio in gold and silver as a strategical shift. And those who have made also, they have got a very good return. And I think when the prices was around $60, $70, has almost everybody has started profit booking. So I think at the $94, $95, no one is still holding. Only the speculative demand of, or we can say the supply supply short has been there, which is currently holding the prices. So I think from the investment perspective, we have already lost this rally unless and until a meaningful correction of, let's say, 30-35% doesn't come. I think re-entry as an investment on silver would be very doubtful from current level. But still, fundamental remain bullish only. Stay calm as of now because volatility and margins are too high right now.
All right, so if you've bought in, hold on to it and just be there, hold on for a while. If you haven't, stay away from it. It's a little bit of the sense that I'm getting from your comments, Mr. Kedia. But when it comes to copper, what are you expecting? Because Goldman, of course, sees continued flows of the metal into the US. There's a lot of bullish triggers here as well. What are you looking at in terms of prices when it comes to copper?
Last year, we have seen a quote that copper will be new gold, but I think copper is a new silver because there was a story going on that China's one of the biggest solar manufacturing company, Longi, has clearly told that as the silver prices are going up, we can shift to copper. So copper is a metal which can substitute silver. Secondly, the supply side, we have already seen like Indonesia or Chile is supply concerns are still going on. Prices were underweighted, but with the interest rate are cutting down and industrial demand is continuously going, we are expecting this year we can see a level like 15,000, 15,500 on LME. That means on domestic side, easily the price can move towards the level of 1650, 1700. So I think majorly still the rally has been due for copper. A corrective deep or consolidation would be possible in next 15-20 days as Chinese Lunar New Year holiday would be there. But overall this year, I think copper, aluminium, zinc, all three metals are going to be on higher side. Maybe from here 30 to 40% gain is easily possible.
Right then, and Mr. Kedia, just out of interest, I wanted to try and understand what mode of investment would you bet on when it comes to silver and copper? Would you perhaps be looking at an ETF allocation at this point in time? Staggered buying is the approach that you're looking at here when it comes to silver and copper. In case somebody, has an iron stomach, decides to actually invest in both of these metals, what would you be sort of betting on?
So first of all, we come to silver. We have always heard about SIP, which is systematic investment plan, but I think the word has totally changed. Now it's silver investment plan. You can go ahead with silver ETF, but be cautious because whenever we invest in ETF or as an investment, we look for returns. Whatever the returns we have seen in last couple of years was tremendous and phenomenal. We don't expect this type of return would be possible in 2026 or 2027. A time correction is required. So better would be SIP, so that whenever there is a sharp correction, you will be getting more units. And in case of copper, we don't have any ETF right now. So there are options available, either derivative product, which is not mainly suggested for an investing point of view. So you can buy and keep a delivery, or otherwise you have a nifty metal index in that there are many stocks which are been contributing. So I think a stock is the only option available for copper right now. We don't have any ETF in India.
All right, then. So that's a very important insight coming in when it comes to the investment that you have in gold as well as silver and copper in particular. Thank you so much, Mr. Kedia, for helping us out with that. I quickly wanted to try and understand which are the metals that you're the most bullish on when it comes to all three of the metals that you talked about.
So out of, if I want to rate for 2026, I will be more bullish on copper. Then it would be aluminium, zinc, but bullion from here, it's a risky bet. At least a correction of, let's say, 30-35% if I am getting. So silver would be definitely I will be again in, but gold, we should wait for at least 20% correction or time correction. So precious metal would be slightly, I will be off, but the copper, aluminium, these two commodity, I will be betting for 2026.
Right, then stay cautious when it comes to prices and hang in there. That's the commentary coming in. Thank you so much, Mr. Kedia, for joining in and helping us out with the pecking order, some of the modes of investment that you can be looking at when it comes to some of these commodities that are sparkling quite bright. But let's also talk about one stock that is actually doing quite well for itself, and that's Eternal, poised for a strong third quarter performance with revenue expected to nearly double year on year, led by rapid Blinkit expansion as well as quick commerce growth. And Mahima, in fact, is joining in terms of what the street is penciling in. Mahima.
Right, so I think Eternal is the only counter that's keeping the Nifty in check right now, up 6% as we speak, and this is ahead of its earnings, as you can see on the charts as well. In terms of where the expectation stands, Bloomberg estimates suggest that revenue will grow almost 2x as compared to Q3 FY25. EBITDA may rise around 1.5 times. Margins may slightly see a downtick of around 100 basis points, but still a 2% margins will be a sequential uptick from what it did in Q2 FY26. In terms of net profit, it may rise to that 115 crore mark versus that of 60 crore mark earlier. In terms of what to expect, festive season sales might see some impact because of the strike that gig workers saw on 25th of December as well as 31st of December. But strong revenue growth is expected in Blinkit, and largely that will be the counter that will drive the top line growth for something like a Zomato. Profitability may see some impact because of the quick commerce dark store expansion, but overall high marketing spends will also likely put some pressure on margins. In terms of what to watch out for, firstly, in terms of expansion of dark stores, what is the guidance? Will that change because of the change in norms for gig workers? Is there recovery happening in food delivery, because that's not been the case for the past couple of quarters for Eternal? Quick commerce market share expansion, how is that happening considering competition into picture? And hyper pure revenue growth, how has that panned out? And lastly, going out business, how has it panned out in this quarter, and how is the growth looking like, and what is the guidance for this particular segment? So this is the overall view of what you can expect in Eternal earnings.
Well, absolutely, and thank you so much, Mahima, for helping us out with that update. It's looking quite upbeat for the stock as well as the expectations, but it's time for a very quick break. Thank you so much for tuning in. More news and updates on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर, ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. Thank you so much for staying tuned in. Well, like we told you just a few minutes ago, you do have US Treasury, Besant, who's given an update, a big update regarding US President Donald Trump's arrival in Davos to participate in the World Economic Forum. This particular participation is key on a couple of counts. One, that entire Board of Peace commentary. Second one, of course, is the entire US and Europe saga that you have right now. On that backdrop, let's go across and listen in to this key commentary.
I believe President Trump is going to be about 3 hours late. I haven't seen the updated schedule. And that if this is what all President Macron has to do when the French budget is in shambles, I would suggest that he focuses on other things for the French people.
All right, then, there you go. So that's key commentary coming in there when it comes to, US President Donald Trump's arrival when it comes to Davos. And that's going to be a very important visit. It's going to be key commentary that we'll all be watching out for. But in terms of what else we're watching out for, it's the budget for Bharat series that we should be putting the spotlight on. And in fact, we put the spotlight on the auto sector itself as a whole. The industry is cruising on strong momentum. GST 2.0 has powered a 5% growth last year and an impressive 18% surge in the third quarter itself. But to keep this pace going, the sector has a clear budget wish list. Here's what the big players across passenger vehicles, commercial vehicles, and farm equipment want from this budget.
India's auto industry is on a dream run aided by the GST 2.0 cuts, and in calendar year 2025, the industry recorded 5% jump in wholesale sales. The main jewel in the crown for the industry was the Q3 performance, in which wholesales for the industry recorded an 18% jump. But in order for a smooth ride, the industry has a budget wish list, and they believe that if the government can make certain announcements, then this dream run will continue.
Skoda Auto Volkswagen India is of the view that the upcoming budget should have announcements for the further growth of the EV segment. As the union budget approaches after the successful and welcome implementation of GST 2.0, the industry will be looking for policy continuity and long-term clarity. Sustained support for domestic manufacturing and increased allocation for road and transport infrastructure will be key priorities. Rationalizing the inverted duty structure for EVs will strengthen domestic manufacturing and competitiveness and will further accelerate India's transition to sustainable mobility. Continued focus on building the EV ecosystem alongside measures that support household disposable incomes will be essential to sustain demand momentum and reinforce the sector's role in India's broader economic growth. On the other hand, the CV and farm equipment players are of the view that the government has already been proactive with policies like GST 2.0 and RBI interest rate reductions. However, they expect the government to continue its growth-led initiatives and reforms for the agriculture sector.
So we are just a few weeks away from the union budget. What are your expectations from Ashok Leyland's perspective?
Government these days is so proactive that we don't need to wait for a budget really. One thing that the government should consider is really coming up with some program or some scheme around scrappage of the old vehicles.
The government in the past 4 to 5 years have done all the positive gestures and announcements as far as the farming community is concerned. In terms of visibility, in terms of incentivization, in terms of ensuring the money reaches the farmer. We are a 1.4 billion population today in India. We have to be self-sufficient. In many areas, we are self-sufficient. We can also become a food basket for the world. And also, as I mentioned slightly earlier, that in mechanization, we're only 47% in comparison to America and Canada at 90%. So I think that is the opportunity which the government and the industry and the farming community need to work towards in convergence.
I would certainly hope it's a consumption and a growth-led budget. As long as the domestic growth and the domestic demand continues to be robust, the industry will perform. And lastly, as we've been discussing exports, if there are some things that can be done to be able to help and boost exports, if there are some policy interventions that can be brought in there, that would be most welcome. If there are some policy corrections on duty drawback and things like that, and those conversations are on, the government has been considering a few of these things to strengthen the general capability of India and exportability. That's the only thing we can continue to push for.
India's auto industry expects to continue its journey on the fifth gear, all thanks to GST 2.0 cuts. The industry also believes that in the upcoming budget, the government makes certain announcements through which the government can increase the EV infrastructure across the country. Besides that, the industry has also suggested to bring in a scrappage policy for commercial vehicle segment, and at the same time the industry has also demanded that the government must make certain announcements and certain policies which can increase farm mechanization across the country. The industry believes that if the government is able to support the industry in the long term, then nothing can stop India from achieving the tag of becoming the largest auto industry in the whole world. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
Alright then, thank you so much Danish for getting us all of those details. So that entire sector is in fifth gear, that's what it makes it to the budget wish list there as well. But speaking of some important updates, as we wrap up on the show, of course, you do have rupee hovering close to the record low, and that's something that you're looking at. You've seen a smart recovery when it comes to the markets, but let's also quickly take a look at a couple of buzzers when it comes to earnings. Of course, there's Shoppers Stop that is down about 5.5% thereabout. It's a mixed quarter that you're looking at there. At least when it comes to the revenue, you've seen a downtick of 69%. So that's what you're looking at for the revenue. That is up about 2.6%. And the EBITDA is down about 11.3% as well. Margins, in fact, have contracted just a tad bit. So that's something that you're looking at for Shoppers Stop. It's quite the mixed quarter, but it's perhaps the profit figure that is rattling investors a little bit. So that's something that you're looking at here when it comes to Shoppers Stop. What else should you be looking at in terms of earnings? There's actually a Credit Access Grameen that makes it to that list on the back of that almost 12% gain coming in. When you take a look at the numbers, you have the revenue that is up about 8%, EBITDA that is up about 126%. You've seen a stellar move coming in for the EBITDA there when it comes to this particular counter, possibly by that particular stock is also up about 12% in trade as well. And you do have a turnaround quarter that you're looking at when it comes to the third quarter for Credit Access Grameen. So largely on the back of that, you do have some strength coming in for the stock as well. Investec has maintained a buy with a target price of 1,450 rupees. And it's also talking about how the companies are at the start of an upcycle. There's also a growth pickup that they see, and margin expansion and credit cost reduction is also something that they see on the cards. In fact, this is their best pick on the MFI upcycle as well. And the valuations also appear quite reasonable to Investec. That stock is doing quite well, but that's all the time that we have on the show. Thank you so much for tuning in.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म, शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
After Delhi and Hyderabad teed off in style, the NDTV
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either in the back of price or volume action. But before that, let's check what's on the show today. Firstly, we'll be speaking with the management of Senoras Pharma. Now, if you look at the Q3 number, the company delivered a very strong quarter. The revenues and EBITDA increased nearly 64% and 86% on a YOY basis. PTC India Financial, the stock was down largely on the back of weak Q3 numbers. The company's profit nearly halved compared to last quarter. When it comes to Bazaar Style and Cupid, both these counters were down in trade, and this is after Cupid announced that they will be infusing funds into Bazaar Style. So that would be an important counters to watch out for in trade today. And lastly, when it comes to Harsha Engineers, that stock is down for the fourth consecutive session. But what is interesting today is the volume number. If you look at the volumes, they are nearly 30 times that 20-day average. And it's not only Harsha Engineers which is interesting, it's the market also that is interesting today. Quite a volatile trading session. We declined more than 300 points in trade, but we did manage to recover nearly 380 points from the day's lowest level till now. And if you look at the markets right now, they are just down 24 points, but we did manage to grow above the 200 DMA as well in trade. But that's all when it comes to the Nifty 50, and that's the benchmark index. But Varsha, what's been buzzing when it comes to the small cap segment?
Well, when it comes to small cap segment, we have seen recovery, sharp recovery there also. Still, it's down almost 0.65%. But let's see which are the stocks which are in focus when it comes to small cap stocks. You have Rosel Tech, which is buzzing in trade today. Even you have ESEF Small Finance Bank also, which is under radar. Now, Senoras Pharma, as Somit was saying, is buzzing on the back of strong Q3 numbers. And you also have Nosal, which is also trading, quite it's up almost 5 to 6%. Volumes are trading at 4x. Now, it's a rubber chemical company. Though, let's also focus on the losers. Which are the stocks which are, on the losing side? There you go. You have Bazaar Style, which is, under pressure. You have Tourism Finance, Anup Engineering and Vanberry. These are all the stocks which are under pressure. So, overall, we did recover today very sharply. But, on to the management in our small cap segment, as Somit was saying, Senoras Pharma, strong Q3 numbers that the company has seen. This is on the back of their own products and of course the CDMO segment that they have, they are concentrating on. But to speak more about the numbers and what lies ahead and what are the growth prospects for next 2 to 3 years, I'm here joined by Mr. Swapnil Shah, who's the promoter and managing director of Senoras. Hello, Mr. Shah. Welcome at NDTV Profit and congratulations on a strong set of numbers. Now, you've seen a very strong growth. Will this growth sustain, number one? And do you want to revise your guidance upwards? Because anyhow, you're going to surpass the guided number.
No, thank you. Thank you for having me on your show. Growth has been strong that you've seen. Most likely, we should be able to outperform our guidance for the year. And, we are working towards it. So I think let's see how the year ends up with. But we are optimistic on outperforming our guidance.
So basically you're going to surpass your 50% growth guidance in revenue and 100% growth guidance in PAT. Got that view. Also, what about FY27? You know, considering the acquisition of Apnar also, what growth are you penciling in for, you know, FY27 when it comes to revenue and PAT?
So Apnar will contribute significantly next year. Also, we are expecting some contribution this quarter as we speak. As far as FY27 is concerned, it seems to be a very strong year for us. What kind of numbers should we expect in terms of percentages on both revenue as well as EBITDA? I think it is a little early right now. I think we are keeping a very close watch on all parameters that we currently operate in, both on all three large driven businesses, which is regulated, emerging market, as well as branded generics in India. I think probably post the full year result, I think we'll be able to give you a specific guidance on how FY27 looks like it, and furthermore to even FY28. But from the notionally, what I can say, it looks very strong for us FY27 as well.
Can you confidently at least say that you would be able to surpass the FY26 growth numbers in FY27 as well? I don't need a number, just a qualitative line.
Difficult to say because we already grown more than 100% on FY26, right? So the base has already become bigger. So on a bigger base, same percentage, growth. I don't know yet, but as I said, FY27 looks quite strong for us. We have 28 ANDAs that are approved yet to be launched, right? So the launch will happen every quarter for next 4 to 6. So it's a very strong year on regulated side. Also CDMO, CMO, a lot of products are going to be commercialized. Emerging market looks very strong. This year, last quarter, as you know, we've done the highest revenue and EBITDA on emerging market. The growth momentum will continue this quarter and following next 2, 3, 4 quarters. We have multiple products getting commercialized, getting a lot of emerging market product approvals that we have received. So there's going to be significant growth as well as on the emerging market, even branded generics.
Right.
Right,
sir. So speaking about the emerging market, as you were mentioning, in this quarter, we have seen margin expansion of nearly 1200 basis points on a YY basis. What has driven this growth, and any guidance for the emerging markets if you could share?
So the larger growth is account of two reasons. One is that we've changed our product mix, right? So from a very commoditized product base, we have a lot of now new specialty, new launch, first to launch, second to market kind of products. On emerging markets, multiple geographies that we are present in. That is one thing. And the second thing is we have changed our trade channels, right? So earlier, a lot of business was being done locally in Indian rupees to now business is being done in dollars. So we are directly exporting it to our large distributors and our partners that are situated in multiple different geographies. So a lot of dollar revenue exposure has gone up, and product mix has changed, which has kind of led to the growth in emerging markets as we speak.
Mr. Shah, I know that you cannot give the number for FY27, but you know, for FY27, if I were to talk about after the Apnar acquisition, will there be any pressure in margin? Because I know for FY26 you're guiding around 30 to 31% of EBITDA margin, but because of this integration and all, will your margin suffer in 27?
So I don't think so. Again, the two large structural reason. One is we are going to be cash positive in Apnar from this month itself, right? So as I said, we already have 3 products that are already qualified, and commercialization is starting from this month itself. So that's one reason. The second thing is a lot of US products where US manufacturing is optional. We are moving them to Apnar. We are moving them to India. So I'm releasing my US capacity for higher margin business, which we already have, which will be replaced, and relatively lower margin business where US manufacturing is optional is moving to India. So if you think about it, the higher margin capacities get opened up, and Apnar capacity is being utilized with a low manufacturing cost. Keeping those parameters in mind, I don't think there will be any impact on a margin. In fact, we see other way around. We see maybe margin could go up by 100-200 basis points in next year.
100 or 200 basis point of margin expansion that you are eyeing for FY27. Got that view. Also, sir, the CDMO is positioned as a growth lever for Senoras. What percentage of revenue can this segment reach in next 3 to 5 years?
So we will have the CDMO have about 35% of total revenue next 2 to 3 years time frame as we speak, and that will kind of sustain as we grow overall base and CDMO business continue to grow. But I think 35% of overall revenue, we feel CDMO, CMO vertical side of the business will continue to have that kind of exposure.
Right. Also, just wanted to understand, sir, going forward, say over the next 1 to 2 years, what is the kind of product launches, what is the kind of drug launches that we could expect from the company?
So as I said, we have 28 approved ANDAs that will be launched. Products are being requalified through different regulatory pathways, which will be launched. Lot of products are going into government business. Lot of products are going into specialty niche distribution as we speak. So there is a significant growth. I mean, if you look at it, 28 ANDA launches itself is the size of one whole company, right? Which is significant. So those 28 launches that will happen in next 6 to 8 quarters will significantly drive our growth on the regulated side of the business.
Right. On that note, what's the medium-term revenue mix target for, regulated versus emerging markets? If you have any aspirational target for next, 1 or 2 year maybe?
So currently we are at about 65, 30 and 5. That is a mix that we currently operate in. I feel we'll be within the range of 65 to 70% being dominated by regulated market. The remaining would be domestic branded generic business and the emerging.
You're expecting the API segment to contribute in FY27?
That's correct, yes. So we are expecting API side to be FED accreditation. We'll get FED accreditation probably by mid FY27. And that will start contributing largely on our margin side because a lot of products that we currently buy from a third party will be backward integrated to our site.
So, Mr. Shah, the revenue mix currently, if I see 55% comes from your own products, 45% is CDMO. What's the target in future?
So that I said, CDMO will have that 35% of overall revenue mix, which will sustain and grow as the overall pie of revenue will continue to grow. And that we feel that I think that's going to be quite sustainable on the CDMO, CMO.
Also, Mr. Shah, my 2 questions. One is, of course, the capex plans that you have, for FY27, and any more acquisitions that are being lined up. And the third one is the backward integration plans, if any.
So capex has kind of now scaled down with Apnar acquisition. So whatever the capex was planned, we kind of pushed because we got those additional capacities on board, which we were going to spend for. So I think capex need for at least next 12 to 18 months has significantly reduced for us because of the acquisition. So I think that's a good play from the capex standpoint.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Senoras Pharma. With that, let's also welcome in our fundamental guest, Tapan Doshi, research analyst at CA-Tapan.in. Tapan, you heard the management, very strong guidance given even for FY27. The management is confident that product launches would drive growth even going forward. How are you looking at this counter at the current valuations?
Now, if you see, the results are quite good, Sumit, and even the guidance is quite good. Of course, CDMO business is going to grow very well from here. And as such, next 5 years, I think CDMO business overall will grow a lot. And if you see that margins are also stable and it may increase from here. Customer diversification, they are working on it because still I think there is some as it is small scale operation, a few customers there, but they are going to diversify. But they have a very strong ANDA pipeline and that will help them. Even the niche complex generics also will help them to increase the margin. So yes, I'm quite positive. When I see the valuation is okay because it is the growth is justifying the valuation. So yes, I'm positive one can buy at this and even at Deep's level for a long term. I think it is a good play to play.
Tapan, you say that Senoras Pharma is good for long-term play, but any other small cap pharma stocks other than Senoras that you're eyeing for?
Well, if you ask me, I think I am quite bullish on CDMO business now. So I think I will go for Syngene. I think that is also a good company. There also no good amount of contracts may come, and in future I think no they already do my guidance is quite good. So there also I think margin will go up overall. And if you see from US also, I think US is actually blocking somewhat Chinese firm. That is where the Indian firms will be benefited. So I think another company, I think Syngene International, one can check.
Right. The next stock that remains in focus is PTC India Financial. The stock's trading in the numbers were pretty weak for PTC India Financials, and this is because the company's profit nearly halved. What could be the reason behind this? Let's get in Jasmeet with more details.
Well, Sumit, thank you for that. If you look at the overall company, it's an NBFC which performs and overall acts in the energy segment of the companies. If you look at the overall key takeaways from the result, what we see is that the loan disbursement for the company has improved this particular quarter, showing a long-term profitability going forward. Further, the overall loan sanction has also increased by almost 4.28 times on YY basis. The overall, which shows revival of future growth in pipeline once the company goes forward. But one thing that's impacting the company and where the stock is down is the profit. Though the company has a healthy volume coming in as a disbursement has increased, but those profits are still down for the company, and that's the reason the stock is staying in trade. If you look at the other key aspects, the return ratios have weakened, indicating the low profitability in terms of the capital generated by the company. Further, the overall profit has declined due to the lower interest income in this quarter, that as we saw. If you look at the overall key financial net profit is down about 26% at 49 odd crore versus last year of the same quarter at 67 odd crores. In terms of overall NIIs, they are down 33 odd percentage. So all in all, we see a good base for the company, good disbursement for the company's loan, but the overall net profit and NII has tanked on the back of low conversion. So that's something to watch out for.
Right. Tapan, PTC India Financial's profit largely halved on a sequential basis. Do you think this counter could be interesting post the fall in share prices that we have seen today?
Sumit, if you see the last few quarters, their results are not so great. They have a legacy stress asset which is actually bringing the profitability down. Gross NPA is actually remaining elevated. Credit cost is remaining high, and the growth is not so great. Limited growth we can see from here. So PSU governance perception is also there here. So I think the earnings volatility is actually bringing this stock down. Even for the future also, I think there are much better players in NBFC and all that. One can look at it, but I think this is an avoid from my side.
If not PTC India Financial, then any other small cap NBFC that looks interesting?
Well, talking about small cap, of course, Ujjivan Small Finance Bank, I like it. Even Home Credit, that also quite a good stock. You see, wherever the MFI lending exposure was there, now that is improving. Even we can see that in the Poonawalla Finance also. I think that is where I think the good uptick is coming in because the interest rate is coming down. In future, what will happen, that net interest margin of all these NBFC will go up. So one can look at it, even though these stocks have gone up, but I think next 1 or 2 years, it will remain good for these companies. I think credit costs will be at a lower level. And from here, I think credit growth will be at least, maybe around 20%. Odd. So I think these companies will be benefited as their NPAs are actually now lower because MFI lending issues are mostly resolved.
Right. Before we move on to our next small cap stock, let's go across to Sharad to understand what's been buzzing in the F&O segment.
Well, thanks for that, Somit. And it has been a very, very big up move coming in and then a down move. And you can just see now it's almost even Stevens when it comes to the gainers and losers. Eternal Indigo holding up the fort, and Eternal up 5% ahead of its numbers, likely the numbers just after the post-market hours. But Trent, ICICI Bank, BL, that's where the selling pressure is definitely there. But the total mood of the market has changed. For a brief moment, Sensex was above in the green and a good amount of short covering was seen. And largely in the contracts also we see still the markets are in that oversold category as well. BankX also we see there's significant downtick coming in when it comes to IndusInd Bank, Kotak Mahindra Bank, and even the pressure coming in HDFC Bank as well. Stock specific moves, that's where we are focusing on. Long build up for Eternal and Dabur. It's convincing when it comes to Eternal. Also, looking at the short covering names, these include Info Edge and Samvardhana Motherson. Info Edge, of course, back on a good earnings as well. Apart from this long unwinding coming in for UPL for second straight day, we are seeing a big pressure coming in this counter, and L&T Finance also making it to the list. Short build up, Kalyan Jewellers, it's maintaining that stock. Last time also we had discussed that 1045 stock is down 11%. On the other hand, SRF selling has intensified, it's down almost 7% in the trade. So definitely the market deep gashes are still there in the broader indices.
Thank you so much, Sharath, for all the details. Well, moving on, Harsha Engineers is under pressure in trade today. Now, what's worrying the investors? Let's get Anushi to tell us more about that.
Well, thanks for that, Varsha. So high trading volumes are what we are seeing for Harsha Engineers, 20 times compared to its 1 month average is what we are looking at. 30 times, in fact, versus its 20-day average is what we are looking at. The stock being down for the 4th consecutive session. If you just look at its past performance also, in 1 month, we are seeing about a 1% of a decline. Even in this 1 week, we are seeing about a 5% of a decline. And 6 month also, the stock has seen about 8% of correction as well. So it's not a stock that has done particularly well in these last 3 periods that we are talking about. But just a bit background about the company. It is a manufacturer of precision bearing cages in India, and it is now diversifying into complex and specialized precision stamped and brushing components is what we are looking at. If you talk about its first half results, the company saw about a 6% of a revenue growth. Meanwhile, its margin stood at 17.5% versus 16.8%, and net profit saw about a 14.4% of a jump. Since those results, there have been no such recent developments or updates coming in from the company's side. But in terms of how the conference call shaped up, the management continues to have a cautious commentary in terms of the next 1 to 2 quarters performance. Top line growth, if we see, is majorly going to be domestic led. Your top line growth is expected to be in high single digits, with India growth to be in mid-teens is what we are looking at. However, Harsha Romania is something that we have to continue to see how that particular business would pan out, considering that they made a profit last quarter, and this is after several quarters of losses that we are seeing. So how and what is the EBITDA trajectory for this is something that we should be watching out for. But this is the overall perspective that we have for this particular stock.
Right. Thank you so much, Anushi, for all the details. Well, Tapan, management is cautious for next 1 to 2 quarters. What about you? How are you viewing these stocks? What is your advice to investors?
Even I am cautious. Now, if you see their results is not so great from last, I think 1 or 1.5 years. And if you see there is a clear margin pressure, and which look like it will continue for next 1 or 2 quarters also. Export demand is not there. Again, the client concentration risk is there already. Working capital issue is already there. No, it is actually going on a much more intensified year, and that may create a problem. Again, Europe slowdown is impacting the stock. So my take is, I think unless the revenue and profitability don't go up, I think better to avoid this stock.
Right. Next counter that remains, in fact, couple of stocks that remain in focus is Bazaar Style and Cupid. Now, this is after Cupid has announced that they are looking to invest close to 331 crore rupees in Bazaar Style, and this will be via preferential allotment of warrants. Now, the issue price that they have fixed is at close to 328.25, and which was at a discount of nearly 3% compared to yesterday's closing price. So this actually raises the question of why Cupid is actually investing in Bazaar Style, which is completely, I believe, an unrelated company. Tapan, did you go through this announcement? What's your take on this investment coming in from Cupid into Bazaar Style?
No, even actually, I am not also convinced, Sumit, because both, actually area is completely different, and here, they don't have that type of expertise. But I think this investment actually will create a tension within the investor, where the Cupid is going from here. They were doing well in their own business, but I think this diversification looks out of the way, and that is when I think that is why the fall is there. So I'll wait. It will be a wait and watch. Let us see how the things will pan out from here. But from here, I think one should wait and let the complete merger or whatever acquisition happen, then only take a call once the profitability is out.
What is your view when it comes to Bazaar Style?
Bazaar Style is a okay stock, but the problem is no, in that the segment there is lot of competition. Okay, and margin are already under the pressure. You have already seen many other companies in the same sector is facing lot of issue. So I think again the valuation is on a higher side. So it is not giving me as a comfort level to get into that stock. So here also I think we'll have to wait. Again, the way the stocks are currently falling, still the demand is not coming up at a rural and urban area. So my take on even Bazaar Style, I think wait and watch only.
Tapan, I just wanted to ask about Cupid. Now, company is actually, is moving to an FMCG company, right? Being a condom manufacturing and moving into the FMCG products. What is your view on Cupid? Will Cupid get that, valuation of an FMCG company maybe, in next 1 or 2 years? So just wanted to have a context on valuations when it comes to Cupid.
Now, if you see the Cupid valuation, already it is trading at 164 PE. And FMCG normally, see, if it gets want to have that FMCG label, it has to perform accordingly. And FMCG is a very, very tough market. They had a niche area, condom segment, which was quite niche and where they were the leaders. Now coming into FMCG, lot of competition is there. They must have seen that at this sector, condom sector, they may not grow. That's why they want to diversify. But now market will wait and watch, because at this PV, no one I can say the pros is not on your side. I think one has to wait for this, how they are going to perform. It will be a tough fight for even Cupid also to be a top performer at that segment. So I think better to wait and watch, and I think valuation may go down if something happens, acquisition happens.
Just wanted to discuss one more stock with you, Tapan here. If you look at this counter that I was looking at, Shoppers Stop, that stock is down around 5% in trade, and this is after, I believe, the Q3 numbers. But the stock has recovered. In fact, at one point of time, it was down 10%. Any view on Shoppers Stop?
See, if you see Trent, Shoppers Stop, everywhere, what is the problem coming? Problem is that LFL growth, like for like growth or SSG growth, same store growth. There, it is coming on a lower side. And we can see direct competition from online retailers. Of course, they also have their online segment. But here much of the sale is happening online nowadays. And even the Diwali season also. And if you see, these companies were earlier, if I talk about Trent, they were used to grow at 40, now it's growing at 15, 20. Even Shoppers Stop also, now the overall the sales growth has gone down. Now, if you don't perform, the valuation which you have been given earlier will go down, correct? And that is so Trend is coming down, Shoppers Stop is coming down, and still I don't see they are bottoming out. I think they has to perform at least SSG growth, same store growth should be at least on a maybe 10 to 15% at least in order to give the comfort. Until that, I think it's a complete avoid.
Thank you for joining us and giving us the perspectives on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground, I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement.
Hello and welcome to NDTV Profit. I'm Sharad Dubey and with me is Mahima Vastrajani, and well, we are welcoming you to Ask Profit Afternoon Edition, where you'll send in your queries in the WhatsApp. You can see up and the numbers flashing down where you can send in your stock queries, and we'll ask our technical and fundamental guests. Just a short check on the markets. There has been a recovery after what we saw. The Nifty, if you could just pull up, that was down less than 25,200. A recovery was made, short covering was there, but it's still very volatile. And rupee, that is at record levels at 91.7. That's weekend pass. That's the key concern of the markets. But moving ahead, now important development has come in. Our government has formally invited financial bids for the strategic disinvestment of IDBI Bank. Shrimi joins in with more details. Shrimi?
Yeah, a very crucial development coming in. Top sources in the government told us that government formally invited the financial bid for its strategic sale in the IDBI Bank. In fact, this is coming after, a host of security and regulatory clearances, and what we've been given to understand that potential bidders have been given 4 weeks of time to file the financial offer. Now, what will happen next? That once the potential bidder will file for the financial offer, the government, through cabinet approval, will announce the winning bidder, and they are aiming to announce it by end of March. And post that, it will take some more time, given the fact that it's a, very sensitive sector. And both government and RBI is involved throughout the process. So perhaps the transaction would close in the next financial year. If you remember in the Air India case as well, we have seen that it will take around 4 to 5 months of time between announced bidder and the final transaction to actually get sealed. So, as far as fiscal, maths is concerned, the fiscal context is concerned, the receipt from this disinvestment, if you see under the proposed transaction, both government and LIC is expected to sell 60.72%, in IDBI Bank, if you see the total valuation, which is coming to around 75 to 76,000 crore. So that receipt will reflect perhaps in the next financial year. Now, as far as disinvestment target is concerned, that's also crucial ahead of the budget, because the government will take a call on the budgetary estimates as well. Disinvestment is no longer is a separate accounting. It's a part of capital miscellaneous receipt. And that the target for this financial year is actually 47,000 crore. And so far in this financial year, the government has garnered around 8,700 crore. So clearly a shortfall. But this shortfall is not actually concerning for the government at this point of time. But the main big story here is that government is moving fast on the IDBI disinvestment, which has been dragging for some time. But now with calling for financial bid, we will see, they are getting close to the transaction, and it will be sealed perhaps by, between July and August is what the sense we are getting.
Thanks a lot, Shrimi, for that interesting development coming in for IDBI Bank. I just want to show the chart as well. IDBI Bank, what's the reaction happening in the stock? If you could just pull up the daily chart, and we see, yes, there's a good up move coming in the stock itself. But now joining in, we are having our guest for Ask Profit Afternoon Edition, Kunal Rambia, Fund Manager and Trading Strategist at The Streets, and Prashant Tapse, Senior VP Research Analyst at Mehta Equities. Good afternoon to you, gentlemen. I'd like to start with Kunal. Views on IDBI Bank before we move on to our viewers. Kunal, what's the view coming in? Interesting update coming from Shrimi on the speeding up of the process of the disinvestment.
Good afternoon. Thanks for having me on the show. So overall formation on the IDBI Bank is pretty much sideways, consolidating since almost June 25 so far. And this counter has not shown any extraordinary moves, though it's a up move, but it's a muted up move. So I think with the stop of 90 levels, one can definitely accumulate this counter. The volumes are pretty good, which is supporting the muted up move. So with the stop of 90, I think one can initiate the trade at this level where the risk reward ratio is extremely favorable.
Right, now let's come back to our show, your Ask Profit Afternoon Edition, and these are the numbers. You can call in there. These are the numbers it's flashing on the screen where you can put in your queries and we will get in all your answers. First one is, of course, Venkat here, and he is holding 45 shares of CE Infosystem, that is MapMy India. The price is at 1,792 rupees per share. He needs a 6 month suggestion on this, and in recent months, nothing has happened. MapMy India, Prashant, I want to get you on this. What's your view on this? What should Venkat do?
I think he should try to be avoiding this stock at this point of time. If he is holding, I think it should be an exit call from my side. If you see the financial numbers, the valuations are very expensive at this point of time. Plus, the quarterly earnings are not so good, so that I will have a very positive outlook. For me, it's a negative outlook for the stock for the near term as well as the long term. So exit is my call.
So the exit call coming in for MapMy India. Another query from WhatsApp is Suman from Kolkata. 30 shares of Zagal prepaid he has. Average price is roughly at 309 rupees. Is the right time to accumulate? Good to hold for long term? Kunal, your views?
So again, the recent correction in the market has brought almost all the counters near to the support level, and this counter is also one of them. The strong support is near 270, though as of now it's near to 280. If the counter consolidates near this 270, 280 mark, I think this can offer a good risk reward ratio. Overall trend is definitely negative, but from risk reward point of view, I think, this is the level to watch out for. Keep a watch on it for 2-3 days. After consolidation, you can initiate a buy with the stop of 270.
Right. Of course, a good time to enter for L&T. That's actually for Interglobe Aviation. That's the query coming in from Suresh Babu. He's from Hyderabad. And the question is Interglobe Aviation for long term. Kunal, I want to get you on this. Is it a good time, or is it the valuation still kind of on the higher side?
See, to be honest, after this chaos, this counter has come down significantly, right? And from those 6,200 levels, we are near to 4,600. Even if I look at the overall long-term trend on the charts, which are like 3.5 to 4 years trend, this counter is looking very attractive to me. We turned bullish on this counter somewhere near mid of December, where the counter first time made the low of 4,800. In fact, counter is still at the same level. With the stop of 4,500, it's a clear buy. And the upside can be till again 5,500 to 6,000. We are just waiting for the dust to settle, but overall the trend is very, very strong on the long-term charts.
All right, that's pretty much interesting on that. But Mohan from Bengaluru is joining us. Hi Mohan. Of course, the markets are very dicey, but which stock you are holding?
I'm holding some, I bought 10 shares at Thangamayil Jewelry at the rate of 1,432. I just want to know whether can I add these shares more or for long-term perspective.
All right. Congratulations, Mohan, on the profit. And you have picked the right stock, actually. The momentum is very strong. And from the HNI circles, what I'm hearing is the significant buying is happening across the DIs. Prashant, short-term view on Thangamayil. Should there be some more addition in this counter or a little bit of profit booking is there right now?
I don't advise a new fresh addition at this point of time. I think the way how gold has rallied and the way how the earnings have been presented by the gold jewelry businesses. So I think there should be some kind of profit booking attempt, at least 50% from the current levels, or trail your stop losses to 3,700. But it can be a two-way to hold the stock for the short term.
All right. Now Udit is joining us from Mumbai. And hi Udit, what stock you're talking about here?
Good afternoon, Sarath. I am talking about New Gen Software. I hold around 50 shares of New Gen with 1030 a piece. Huge loss. I know circumstances are dictating terms now. I understand that. In spite of that, if I discount that, is this stock still good enough to hold on to, or do I average at this level, or do I get out booking the loss?
Yeah, Udit, that seems a concern. Your buying price was 1,030 and now it's, it has gone down almost 30 to 40 odd percent. Kunal, I want to get you on this. Is it the right time for Udit to actually, average up or exit the stock? What's your view on that, New Gen Software?
So no, certainly not to average out, first of all, because if the counter is in downtrend, I definitely agree on one point that the risk reward ratio might be favorable, but unless this, the falling knife stops somewhere, we should not be holding this counter. Now, if I look at the broader term, the chart of the counter, this counter was having a strong support near to 775, 780 levels. I'm talking from 2024 consolidation bottom till now. But it has decisively broken that also, and the volumes are very, very high. So I would advise to stay away from this counter because now already it's in loss and our viewer is holding it. Wait for a dead cat bounce somewhere near to 775. I think he should book the losses and move on to some other IT companies which are literally looking good and the momentum is really building strong.
But if Udit is there with us, just can you recommend, Kunal, which IT stock can he go?
So I'm betting honestly on the large cap IT counters. The first is Infosys. Today also it's trading at 1650 days high, and the overall trend since last 3 to 4 months is very, very positive. So with the stop of 1550, we are long on Infi and the target remains at 1800 to 1850. The second is TCS, where again the trend is very, very muted but positive. Near to the support with the stop of 3000, one can go long on TCS also. I think these are two better counters, though the recovery in New Gen can be faster. But here we will have a risk reward ratio which is favorable and the capital protection which is the must in such kind of markets.
Definitely some kind of recovery also happening in this large cap IT names. But now moving on, Siva from Hyderabad, he is holding 1000 shares of CG Power and Industrial Solutions at 650 rupees per share. Of course, there is a loss. He has stated it's a huge loss, but it's not that big loss also, to be honest. At these levels right now, the company's fundamentals are still decent. Kunal, is good time to average out or exit the stock? Feels like it can be a good average play.
So beginning of 2025, this counter was near 530. From there, a big upswing was seen and again counter has reached the same level. Interestingly, on 19th of Jan, the highest volumes were recorded. The highest volume of the entire year were recorded on that day. We also shortlisted this counter, but only we were waiting for the higher top, higher bottom to just confirm the trend, which did not happen. But yes, this level is very attractive. If the counter manages to close above 590 to just 600 levels, which is a round off level, we will definitely be into it. And I would advise our viewer also to average out at that point in time with the stop of 560. So with the stop of 560, buying above 600, and then let's ride the rally if at all there is a significant recovery.
That's the view coming in. But Hanish from Bengaluru joins in. Hi Hanish, which is the stock you want to ask our technical or the fundamental guests?
So I would like to ask on with respect to SBI card as well as Tata Motors, but anyone is trying for me right now?
Right. So it's Tata Motors
Yes.
CV, right? Okay. So there are two stocks, Tata Motors CV and SBI from Hanish. I would like to take the technical views first. Prashant, your views, which would be better, Tata Motors CV or SBI in current levels?
I think Tata Motors CV can be a better stock in this market. I think that is making all-time highs, and the way how CV cycle is going forward, I think that is creating a lot of good earning visibility for me. So currently, I think continue to hold this stock at this point of time, and even if you can add more, adding more at this point of time is highly recommendable. And SBI Cap, I think that is also a good stock right now. NBFC, that is a great company right now to accumulate. Going forward, the consumption story will be more on the spending cycle of a credit card. So SBI credit card can be a best stock at this point of time.
All right. Apart from this, Kunal, even your views on it, SBI or Tata Motors CV, fundamentally, which looks good now?
See, honestly, so we have created one of these strategies on it, and that's a short-term derivative strategy I would like to share. That's on Tata Motors CV. The only reason being this counter actually rallied multiple times from 320, 330 levels itself since March 2022, post this, the adjustment of the prices. So I think the downside on this counter is very minimum. So with the stop of, I think, around 325, one can go long on futures and short straddle. Now, short straddle is logic is that even if the counter remains sideways, we still end up making something for this remaining month and for the next month. And if there is a positive rally, you are anyway long on the future. So upside is protected, upside is kept, but still 5.5% on the upside can be really good on large cap counters. So a very strong view on Tata Motors passenger vehicle from trading point of view. And if someone wants to go ahead with fundamentals, I think obviously SBI is a better play because overall the trend has been really strong. And even in the correction, this counter has not really come down much.
All right, okay, so that's the view coming in on SPI as well as Tata Motors. But moving on to our next caller, Ashok is calling us from Andhra Pradesh. Ashok, hi. Very good afternoon to you. How can we help you today?
Yeah, ITC, can we buy at this price level? I have already 400 shares with average price of 355.
Okay, and this is, I believe, from a long-term perspective.
Yeah.
All right, okay. Prashant, I'll come to you on this one. ITC, what's the view like?
Yeah, continue to hold and add more at this point of time. I think the way taxation will always keep on hitting this kind of sector. Every year there is some kind of news from the government keeping some extra excess duties or some taxes on these kind of goods. For me, at 320, 310 is a good level to start accumulating for long-term investors. Again, it's a very big conglomerate having a lot of other businesses also. So very good at this point of time.
Okay. All right. So that's the view coming in on ITC. We've got the next question, which is from Ananta, who's writing us from Vijayawada. She's bought around 405 odd shares of Stalin India Fluoro at an average price of 261. Now sitting on a loss of around 27,000 odd rupees. Wants to know if she should average out at the current price or exit. 1 year is a time frame. Kunal, I'll come to you on this one. What's the view like?
See, again, I would avoid such counters. The only reason being, these counters are either in upper circuit or the lower circuit, and the risk management goes for the toss, whether you're a short-term or a long-term trader. So I would avoid this counter for now, for the sake of the view on the chart. I think 185 can be the good support, and below that 155 can be the next support. Keep these levels in mind, but I would advise an exit on this counter as early as possible.
Right. Now we are moving on. Sunil from Mumbai. He's calling. He's holding Angel One at 200 shares. Hi, Sunil. What would you like to do with this counter?
Yes, sir. Yeah.
Yeah.
No, I just want a short-term target, sir.
Okay, short-term targets for Angel One.
And stop loss.
Okay, and stop loss. Short-term targets and stop loss coming in for Angel One. Prashant, what's your view on that?
I think the stop loss should be anywhere between 2350 on a short-term basis. But again, very much positive on this stock, on the sector as well. The way how BSE has performed, the way volatility has created a lot of good earnings show by Angel One. So I think BSE, Angel One as well as Grow. I am very much positive on this. Obviously, 2370 can be a stop loss for him for short term.
All right. Apart from this, another query coming in, and that is from Prakash from Chennai. He's having a tactical bet on UPL. It's invested at 775 rupees. Roughly 250 shares is there. He wants his view, of course, on the long term and the short term. First of all, Kunal, I would like to ask you on these levels.
Absolutely. Today's low was the extreme low, which was seen on the counter 670, and in fact, it has recovered really sharp from that level. 690 is a present level. I think this bottom might remain intact for the coming days if the counter is in the positive trend of last 1.5 years, if it wants to continue in the same trend. So yes, with today's low as a stop, one can definitely think of initiating a fresh long on this. But just one question, and that is that, this counter has come down significantly. So if there is a good spike, and if you feel that from the short term perspective, this 5.5-6% is enough for you, take an exit. Otherwise, trail the stop loss. With the stop of 670, it's a buy as of.
All right, so that's the view coming in on UPL. We've got our next caller. Neeraj is calling us from Gujarat. Neeraj, hi, a very good afternoon to you. I believe you focused on Vedanta.
Yes, I hold around 15,732 shares and my purchase price is 248 per share. Now, I'm confused whether I should book profit or should wait for company allocation. Like, I have heard that the stock is going to split in 5 different companies.
That's correct. Okay, Neeraj, got your question. So I'll take this up with Prashant. And Prashant is already sitting on profits of over 66 lakh rupees. Should he wait for the demerger or should he book his profits?
I think a lot of demerger valuation has been discounted in the price. The way stock has been already doubled in last 52 weeks. The low was 362 and the high is almost 388. So at least 50-60% profit booking should be done at this point of time. And again, rest of the stocks can be taken care with respect to the demerger. I think before March, the demerger will get cleared. So upside is very limited from the current level. 720, 730 can be a best level to even book more after booking 50% from the current level. So my advice is 50% book profit, rest take it to 720.
All right, okay, so that's the view coming in on Vedanta. It's time for our rapid fire round for Ask Profit. Prashant and Kunal, you both know the drill. Try to keep your answers as short as possible. We'll try to throw as many questions as possible. The first question that we have is from Rama Devi, who's writing us from Hyderabad. She's invested in Hindustan Copper. The purchase value is 571 and 174 is the quantity. Should she continue to hold from a short-term perspective or not? Kunal, your view?
Absolutely hold with the stop of 525.
All right, there's Chandrasekhar from Bengaluru. He's holding 10 shares of Vari Energies. Average price is 1900. Can he hold for a long time? Prashant?
Exit at this point of time.
Okay, Sterling and Wilson is the next one. The person is holding 150 shares at the levels of 210. Can I buy, hold or sell from long-term perspective? Prashant, your view?
Buy for long term.
All right, Guru Shankar from Pune, he's holding Eternal. Zomato, that's around 75 stocks at 74. There's a profit of 16,000 rupees coming in. Should he hold the stock or sell, Kunal?
Looking at the profit, one should not exit. Yeah, it's a hold with the stop of 275.
Okay, the next one is on Paradeep Phosphates. Google from Odisha wants to know if this is the right time to make an entry. Kunal, your view?
It's an exit as of now.
Interesting. Sterling, Wilson and Renewable Energy, 150 shares were bought at around 210. Good time to sell or exit or even average out. Kunal?
I think the PO answered, but still, I'm very bullish on this counter from the risk reward point of view, waiting for the breakout of 210. One can add about that level.
Okay, the next one is from Bhaskar Reddy. He's asking whether this is the right time to buy HDFC Bank. Prashant, would you recommend that?
As a long term, yes, buy at this point of time.
Vasu Patel, he is asking, should he invest in Gravita? Current holding is 1,000 shares, or should he average more out? Prashant?
Considering the recent fall, I think yes, one should start buying at this point of time.
Okay, the next one is on Praj Industries. Abhinay Gupta is holding 185 shares at an average cost of 446. He wants to know if he can hold, buy or sell. Kunal, your view?
So it has broken the main support, so exit for now, but re-enter about 305.
All right, okay, so that's the view coming in on Praj Industries. But with that, we're completely out of time on this edition of Ask Profit as well as Rapid Fire Round. Kunal and Prashant, thank you so much for giving us all those insights and helping our viewers solve those queries. But with that, as I said, completely out of time. India market close up next. Stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions,
Hello and welcome to India Market Close. I am Sharad Dubey and with me is Hiral Dadia and Somit Sarkar. We have seen a very eventful day actually. The markets actually cracking below the 25,000 mark, also dipping below the Nifty 200 DMA levels as well, but then a recovery also coming in and now a slight bit of correction from the day's top levels as well. And Nifty still down 80 points. Concerns are still there in the market. I will be listing these concerns in some time. The Nifty Bank, that has seen a much more bigger fall and it's down 600 points. It hasn't recovered that much what attempt Nifty tried to make in the day's time. But yes, the advance decline ratio, earlier it was really bad, almost 1:10 in the ratio for the bears, but then slight increase definitely has happened. But nevertheless, the markets are still traveling, with a negative touch. Let's pull out the Nifty constituents to show you what has happened here itself, and largely we see Eternal over here. The stock is up 5%. The company will be coming out with its results. Apart from that, Indigo, Hindalco and Max Health, Ultratech, all of them showing strength in the trade. But where the fall is happening, this is of course coming in from HDFC Bank, ICICI Bank. That's where the sell-off is there. Apart from that, Nestle, Trent and BEL also make it to the list. Of course, the India VIX levels, that has also jumped up 10% and near the 14 odd levels. But definitely the market is in their oversold territory. Let's look at the sectors which would be in focus, what the sectors have been doing, and largely we are back to the metal and PSU banks where we had seen some strength, but again we are in a sea of red and barely Nifty Infra is there in the green, and big sell-off especially in the defense and the in the consumer durable segment. But to put the perspective in the mid-cap space, stock-specific moves, earnings, all the details Hiral is getting. Hiral?
Absolutely, Sharad. You know, the pain is absolutely deep when you talk about the broader markets. If you pull up the mid-cap 150 or even the small-cap 250, you'll see the kind of cuts that are coming in on both these indices. 1.3% on the mid-cap 150, and if you have to look at the small-cap 250, 1.3% is the kind of cuts. Let's just pull up the intraday charts of both the indices, and that will tell you. Because the recovery that has come in terms of the benchmarks is critical. We did see that recovery come in the broader markets as well. Again, come down, but we're not at the day's lowest levels on the broader markets as well. Overall, if you see in terms of individual stocks, let's look at the ones which are gaining first. Credit Access, MRPL, Eternal, India Mart, KPR Mills, JNK Bank, smart gains coming in all these names. What's losing out? Kalyan Jewellers, a 12% downtick coming in on this counter. SRF continues to trade under pressure. Scient is down, Force Motors, Laurus Labs, Paytm, Siet are few of the ones which are losing out in trade. So interesting moves, Somit, that we're picking up so far in terms of the markets as we speak. But one stock that is in focus right now is a Supreme Petro. Anything that you're picking, Supreme Industries, I beg your pardon, anything that you're picking up on that front before we speak to the management?
Well, pretty much inline set of numbers is what the street has said. Now, if you look at the EBITDA number, that came in at close to 314 odd crore rupees, and analysts were estimating this number to be close to 304. Margins came in at 11.7 as against estimates of 11.5%. The piping volumes, now that grew nearly 16% on a YOY basis to close to 147 KT, and piping realizations that came in below by around 6% on a YOY basis to close to 124 rupees per kg. Blended EBITDA per kg also 10% down to close to 17.1%. But let's go across to MP Tiparia, the Managing Director of Supreme Industries. Sir, when it comes to the FY26 volume and margin, are you maintaining your volume and margin guidance that you had given earlier? I believe the volume guidance was 12 to 14% that you had guided for FY26, and margin was close to around 14%. Are you maintaining that guidance?
No, we have given a guidance of plastic piping 15 to 17% volume growth. And we maintain that we will grow 15 to 17% by volume in plastic piping system. And margin side, we will grow between 13.5 to 14% overall in the company.
Right, but I believe the total volume guidance was 12 to 14%?
You are right.
So that is also maintained for FY26?
We maintain.
And we had seen a lot of the volume numbers were not that great so far. But are you seeing a pickup right now when it comes to overall piping segment volumes?
We are quite happy that we have grown this quarter 16%. But just to share with you that in PVC resin, PVC plastic piping system, our company has grown 14% first 9 months, but the country has a degrowth of 7% by volume in PVC in plastic piping. As per the raw material producer. So we are happy that we country had a 7% degrowth, we had 14% growth.
And just one question from my side on the PVC pricing. We have seen a severe downtick coming in. Do you expect further downside on this PVC resin prices, or they have stabilized for now?
Dear friend, already too much down happened up to December. Since January beginning, the price has started inching up. Several producers in the worldwide have to close their operation. Some have reduced their operation. It became uneconomical for them to produce PVC. So we do not see, based on current crude price trend, we do not see any possibility of PVC price to come down. Actually, starting from 1st January, PVC prices are inching up.
Mr. Taparia, good afternoon. Hiral on this side. Now, PVC prices have seen a drop as well in the third quarter, right? Now, the stakeholders want to know from here on, what was the inventory loss, if any, in the third quarter? And in terms of outlook for PVC price stabilization in the fourth quarter?
One thing, see, I can say in the first 9 months, there was fall in all the polymer prices. So our company may have suffered an inventory loss between 100 to 120 crore rupees 9 months. Now, this quarter, we do not anticipate any further inventory loss coming. And we believe that prices will slowly and surely, definitely on PVC and other polymer also inching up.
Mr. Taparia, hi, Sharad here. I was just checking your segments, industrial product segment. That's where the degrowth has come in. If you just see on a 9-month basis, which we have compared, is there kind of a demand pressure in the industrial product segment? And if it's there, will it bottom out in the coming time?
Definitely, we are only supplier of component to the industrial companies. So the component which are industry we were supplying for them, they had a demand poor. So we cannot forecast about the demand, how they are going to fare, but we don't consider any great happening in the industrial component segment.
Okay. Mr. Taparia, the question that we are looking at over here is, now you are talking about the margin guidance of 13.5% to 14% for FY26, correct?
Yeah, right.
Okay. And currently your margin is at around 11.7%, correct?
And so the numbers are already with you.
Correct. No, so our question is, from a 11.7% in this quarter, a 12.3% in the previous quarter, what will lead you to achieve that 13.5% to 14% margin?
We do not anticipate any more inventory loss happening in any polymer in this quarter.
Okay, so that is what will help you to gain back that margin loss that has happened. Is that what you're saying?
That will prevent the erosion in our margin.
Okay.
Apart 9 months of our margin were eroded due to the too much fall, which we have not seen like that.
Understood.
All the polymer, everywhere the price has fallen.
Okay. Now, when we talk about the Wavin business integration, the 250 crore acquisition of Orbia Wavin's business, how has that progressed? What is that revenue contribution you will see from this business in FY26? And you have your industrial products business, which has seen a 13-14% decline in terms of revenues. So, is this decline or has this segment actually bottomed out from here on? Two questions.
No, first I talk about the Wavin. We had a capacity of 71,000 ton, and the capacity is fully integrated, and we are now able to run the plant properly. Our overall capacity of the company around 1.2 million ton, and we anticipate that we may sell between 60 to 65% in this year overall. And the same capacity of Wavin also have been put to use, and goods are selling, there is no issue. Industrial component, as I said earlier, depend on our customer, and if their demand of that particular model is weak, then our demand in turn will be weak. But industrial segment in our company also comprise material handling system and also cylinder. We are having good business growth in material handling system and good that we are expecting for cylinder.
Right. Thank you, sir, for giving the entire views on the company and growth outlook going ahead. And it's very good to talk to you. But moving on, we are joined in by Kunal Shah and Dharmesh Kant. Thank you, gentlemen, joining in. Kunal, I just wanted to get your views in. Just right now, we just spoke with Supreme Industries. What are the technical levels suggesting?
I think for Supreme Industries, we have already witnessed a good correction from the higher levels. The important levels to be watch out here for Supreme Industry will be 32.20, 32.30 zone. That has been the demand zone for the stock. If we see any reversals from those levels, that would be a good opportunity to go on the long side. The immediate hurdle for the stock is at 34.20, and once that is taken out, you can see the short covering coming toward 3600. So overall, the setup is bullish. It's a buy on dip stocks. Dips to be utilized as a buying opportunity. A real strength will come once the stock surpasses 34.20 on the upside.
And Kunal, Nifty and Nifty Bank, I just wanted to get your views in also because it has been very volatile. Very important levels were breached. Nifty Bank also not showing that much strength in the recovery as what Nifty has recovered. What will be the key, technical levels to watch out for? And is there any options trade also?
Okay, so firstly for the Nifty index, the fall what we have seen from the top of 26,373, we have already on the technical charts have completed the wave 3 as per the Elliott wave. So here you might have some technical bounce coming back for the indices towards 25,300, 350 zone, which is the resistance zone for the markets. And again, any rejection from those levels will lead the markets toward 24,800 on the downside. So the downside level, what I'm looking out is 24,800, 750. That is the maximum downside is what I'm looking at. And on the higher end, the resistance continues to be at 25,500 mark. So I think now this is going to be a broad range. We are heading towards the budget. So probably market will consolidate at these levels. 24,800 to 25,500 would be a broad range in which I'm expecting Nifty to consolidate. Today we have breached the 200 DMA for the Nifty index, but we have reclaimed that again on a closing basis. We are trading right now also above it. So probably a doji candle will be formed in today's trading session, which indicates an indecisiveness. So probably a consolidation from here on, and then probably we'll see the correction going forward post the budget. So overall, the view remains negative. Pullbacks should be utilized as an exit opportunity. Now the Bank Nifty. So Bank Nifty was the one index which was strong, and in today's trading session, in fact in yesterday's trading session we breached the 20 DMA, and then we had a follow-up move in today's trading session. Now 58,700 is a key level to watch out for. We have seen multiple bounces from those levels, and in today's trading session we breached that level on an intraday perspective, but again now we have reclaimed that levels on the higher end. So if we get a close below 58,700 in today's trading session, expect some more correction in the Bank Nifty towards the mark of 57,600, 57,700 on the downside. So for Bank Nifty, till the time 20 DMA is not reclaimed on the higher end, that is 59,500, the view continues to remain as a sell-on rise mode for the Bank Nifty.
Right, shifting focus to another stock that has declined significantly in the last couple of trading sessions. In fact, UPL has come down nearly 15% after the company announced that it will, in fact, not after the company announced, they came out with the RHP or DRHP of the subsidiary that is Advanta Enterprises. Let's get in Varsha to understand what does this mean for UPL and what could have been the reason behind this fall, Varsha?
Well, I think this is all a profit booking that the market is doing after this news. Let's see how Advanta Enterprises is important and what this means for UPL. Talking about Advanta Enterprises, which filed DRHP with IPO size of around 36 million shares, that is 3.6 crore via OFS, and the UPL will sell around 2.8 crore shares. Now, Advanta is UPL seed business, if you see, and why Advanta is important, let's let's highlight on that. It's a seed vertical of UPL, global hybrid seeds player, and among top 10 seeds companies globally. Now, UPL holds almost 78% of stake in Advanta. Rest is owned by KKR and Alpha Wave. Now, talking about the long-term value creation. Now, if you see, Advanta has grown nearly 3.5x in USD terms over last 10 years and has a revenue CAGR of around 18% in last 5 years, with EBITDA CAGR of 23% and EBITDA margin of 25% and ROC of more than 25%, which is highest among its peer companies. Now, talking about the impact on UPL, how the listing of Advanta Enterprises will benefit UPL. So objective is to reduce UPL's group debt, and the proceeds will be used for the debt repayment. The net debt EBITDA, if you see, currently UPL has almost 1.6x, which is expected to go down to around 1.2 to 1.3 times, a massive reduction when it comes to overall debt. Talking about the valuations, how of the Advanta Enterprises, considering the FY26 net profit of around 1,000 crores with taking multiple P ratios, case 1 at 30, if we take the P of 30, the Advanta's valuation comes at around 32,340 crore. That's the market cap we are expecting post listing. On the a bull case, if you see, taking around 1,000 crores of PAT with 40 PE, considering the industry average as well, the company's valuation comes at around 43,120 crore, which is 51% of the UPL's market cap. So overall, this is beneficial for UPL considering the reduction of debt on its balance sheet. But yes, market is actually booking profit, and overall, considering the mood in the market, UPL is also down in trade.
Well, thanks a lot, Varsha, for that. Dharmesh, I want to get you on this. UPL Street is punishing the stock a lot, it seems, for the last two trading sessions. Is there a value emerging, and what's the outlook looking like for UPL? Of course, the deleveraging is also at play now.
Yeah, I mean, it all depends upon what kind of a valuation multiple this entire thing happens and how much is the stake been diluted by. I mean, the money comes back to UPL, and among the partners, how much is the OFS being structured. But Advanta was a cash cow for UPL. I mean, out of the revenue, 12% was contributed by Advanta, and with a consistent, profit margin of around 17%. So that was a contribution which Advanta did consistently, irrespective of UPL, other business going up and down. So on console level, it was a balancing factor. So let's see the entire deal structure, how it goes through, and then how much of that part of the profit will go out of the consolidation and it gets converted into minority interest has to be seen. On the face of it, it does look that UPL will get some leverage on its debt portfolio, but at the same time, its own business of chemicals, agrochemical and all has not been doing that great. So that's the reason I think people are taking some money off the table of UPL.
Yeah, Dharmesh, just stay with us very quickly. We need to just cut across to an exclusive conversation coming in from Davos, where SBI Chairman C.S. Sethi is in conversation with Tamanna Inamdar, Managing Editor of NDTV Profit.
Thank you for that. Yes, in these cold climes and in this beautiful backdrop, we're having a conversation with the State Bank of India Chairman, India's largest bank, over here at Davos, where I must tell you the ongoing commentary is that India seems to have taken over a lot of the promenade. Sir, thank you so much for coming into our studios and speaking with us. Absolute pleasure. How's the trip going so far?
Thank you, Tamanna, for having me here. So far, so good. I think a lot of fruitful meetings and also a lot of fruitful discussions where you could participate and listen to the people what exactly is happening in a very difficult geopolitical environment. Yes. It's been a good trip.
In a few hours from now, everyone's waiting to hear what Trump says. But in terms of what you are looking at here in Davos, a little birdie tells me that a lot of your conversations are around AI and adding that kind of tech to the prowess of State Bank of India. Are you shopping here, speaking to possible partners?
No, we do have partners and, of course, long-term partners. More importantly, my conversations with them is for the last 3 to 4 versions of Davos, we've been talking about AI. A lot of proof of concepts have happened, and we have not seen adoption of AI in the BFSI space at scale. So my venture here is to understand how do we bring AI adoption at scale as big as State Bank of India with 530 million customer base, that you need to have something which will change the customer experience and also improve the productivity of our employees. I think this is what I've been focusing on. But what I believe now is that a lot of entities have moved away from POCs to adoption. And adoption also has a critical element in the sense that you need to have large-scale change management, the way how people use both of your employees as well as the customers. So this has been my focus. It's been a good conversation so far.
How do you see AI changing both the customer experience and your core requirement of financial inclusion? As India's largest bank and largest public sector bank, that's also a big part of the mission. How do you think that this can really change the game from that context?
So it's not that we have not used AI in the past. What we are talking, obviously now moving from the predictive analytics to Gen AI and agentic AI. So we were one of the early adopters of AI models, both for purpose of the customer service, lending, for instance, and also fraud risk management. If you really see cyber protection of our customers, where transaction monitoring happens, and also we need to protect them from the cyber frauds. A large-scale Gen AI adoption is happening in SBI, on the fraud risk management side. But we can definitely use in terms of creating hyper-personalization. Today, a lot of people receive a lot of calls on many products, right? How do we cut down on them? What Tamanna really requires, only those calls should go. I think
Indians will thank you if this is a model everyone can adopt.
This is what AI is capable of doing, in the sense that you don't disturb or you don't trouble the customer as much because you have not understood the customer much. If AI tools can provide that insight in terms of what customer needs and when does he or she wants to be contacted for. I think these are some of the things on the customer side. But more in terms of the customer protection side, I think agentic AI and AI have humongous applications going forward.
Now, let's come back to a bit of the domestic business. I know we're sitting here in Davos, but we must talk about what is your outlook on urban consumption. Some of those concerns which are being talked about there, are you actually seeing it? Because you will be in the right position to see if that kind of consumption is coming in. A lot of the conversation that after the GST rationalization, it is banks who will see that uptake as people want to go out and consume more and take loans to do the same.
So we did see. Of course, I won't be able to speak about our Q3 numbers because the results are scheduled sometime during February. But broadly speaking, I think consumption demand helped in terms of growing some of the consumer loans. What we have seen is that, since you mentioned about urban consumption, the consumption numbers which have been announced now shows that the rural consumption is picking up faster than the urban consumption. And another dimension of the consumption is that it has been more in non-discretionary items. That means, auto sector, white goods have shown much more uptick than the discretionary or non-discretionary spending. Sorry, discretionary spending was more than non-discretionary. So I think GST has to help maybe the lower middle class to consume more. That consumption in the urban areas is yet to be seen. But on the discretionary spending, we have seen a significant uptick, both on the auto sector as well as white goods.
So I won't ask you about numbers because, like you said, it's the silent period. But just want to get a sense of how you're seeing deposit growth. Deposit growth has been a pain point for the industry and for several reasons. How do you look at it as the largest player?
So the kind of financialization, the overall financialization of savings which have been there, and the unconscious asset allocation which has been happening. People earlier probably used to have savings, and savings are destinations were only bank deposits. But today you may not call it asset allocation in the truest sense, but you would like to keep some money in the mutual funds and some money goes to the insurance, some to the pension fund. So which means that I personally believe that it is a kind of irreversible movement which is happening from the bank deposits to the other alternative financial instruments. It may change if the stock market is doing, probably more flows will be there towards that. But broadly, the banks have to live with a lower deposit growth rate. That's one. Number two, I think we also have to see that how do you structure your balance sheet? Do you want to structure your asset growth purely based on deposits, or you can go to the market and some of these savings which are currently going to various instruments have to come to the real economy, right? Back to the real economy. They are coming in some form. But ultimately the banks have to build their balance sheets based on not only on deposits, but other alternate instruments, market instruments, certificate of deposits, bonds. I think this is inevitable. I think that will definitely happen.
Eyebrows raised when, a bank of your size goes after certificate of deposits.
See, this is. I mentioned certificate of deposit to make you to ask me that question. So I think it's important to realize that every bank in India has to look for alternate sources of funding their balance sheet. This is what happened globally. If you really take my New York office, for instance, 75 to 80% of the balance sheet is built on market borrowings, not on deposits. So as the individuals and households diversify their saving instruments, the banks also have to diversify their source of funding.
Just one last point. We've talked about deposit growth slowing down. Interest rates are also coming down. I'm not going to ask you for a number, but margins or 4% margins, thing of the past for now. Banks have to look at other ways and avenues.
The margins, I think, are different for different banks. The way we structure our liability franchise, what kind of asset segment what we are doing, what kind of risks we are taking on the balance sheet, they all determine our margins. But broadly, I think the margins are likely to moderate as we go forward. It is also a fact that, while the asset side, that is loans are getting repriced faster, the deposits are taking a little longer time to reprice, which means that the margin pressure will be there. But as I mentioned earlier, I think on the guidance side, we are still sticking that most of the banks will be able to maintain the margins, not because of anything, but the better management of the liability side.
You also have a big listing coming up for State Bank of India Mutual Fund, SBI MF, and that's, the red hot space, really. But do you think that there's that kind of an appetite for so much paper?
So the investor community is also, very diversified. I think this is one stock I believe that is widely being looked forward to. We are the largest AMC in the country, and we had created value not only to the investors, two of the investors who backed the company, but we created value in the ecosystem of the overall mutual fund industry. I think it's a good stock to invest in.
There you have it. One last question, sir. We're speaking ahead of budget. What would you hope to see as the message that India gives? And I think this time the budget is going to be important because it's a domestic budget, but it's coming at a time of so much geopolitical crisis and turmoil. What is it that you are looking forward to?
I think the whole the financial system obviously looks at budget from a directional point of view, and broadly, it is expected that fiscal management, which has been the hallmark of this government, will be maintained. And if you see, despite so much geopolitical uncertainty, the resilience which has been shown by the Indian economy is admirable. There is absolutely no doubt about it. So the government, we assume that would continue to be on the path of fiscal consolidation and fiscal management. And whatever, I think, on the taxation side, they've been very liberal in the last 12 months, if you see, both on the indirect taxes as well as direct taxes. So we don't expect much on the taxation side, but I think more in terms of ease of doing business and also very clear direction that the fiscal management continues to be the key.
Well, that's great, sir. I hope we get to a chance to speak to you after the budget and get your views then as well. But there you have it, the State Bank of India chairman. And I think the big headline for me, amongst other things, is the SBI Mutual Fund. He's saying it's a good stock to buy, so take a look at that. Thank you so much, sir.
That's an interesting conversation. SBI Mutual Fund, that's going to be a good one to buy. That's the word coming in there. And margins are going to moderate from here on. That's the other key takeaway that I'm picking up from the conversation that Tamanna has been having with CS Sethi as well. The stock not doing much, but just down around 0.7 to 0.8%. It's 2:55. We've missed the window by 10 minutes, but Samit Sarkar continues with us with all the chatter from the dealing room. I know, Samit, there is absolute mayhem in dealing rooms as well, I'm sure, because of the way markets have been over the last two trading sessions. First up, anything that you're hearing from a market perspective as to what is causing this nervousness, though we know it was expiry yesterday?
Well, there is no one specific reason for this nervousness. Consistent FI selling is the biggest reason that is considering this, that is leading to this worry. Apart from that, yes, rupee depreciation is another concern. But given the fact that there is a lot of volatility in the market, not a lot of stocks is being dealt by dealers, or there are not much of news flow that is coming in the dealing rooms. Few stocks that dealers have still highlighted. Firstly, it's Timex. Dealers are indicating that there are buy flows on the large HNI desk on this counter. Large influential HNIs have been accumulating in trade today is what dealers have indicated for Timex. For Indigo and Coforge, there are buy flows on for Indigo and Cofuja, there are buy flows on the PMS desk ahead of the Q3 numbers. So keep an eye out for both the names Indigo and Cofuj. And lastly, when it comes to MCX, there are sell flows that we are seeing. Despite the recovery in the market, that stock continues to be in red, and the dealers are indicating that there are sell flows on the large HNI desk ahead of the Q3 numbers. So though the data suggests that MCX numbers could be quite good for the third quarter, but it would be important to see why the sell flows are coming in just ahead of the Q3 numbers.
Thanks a lot, Somit, for that. Kunal, just before we take you leave, what are your important technical picks? That's something which we had missed out. If you could just give it in a short time.
I think two ideas would be there. First would be Federal Bank. Again, a good reversal what we had seen in the chart, and now we are seeing follow-up action coming in a weak market. So that's a buy for me. With a stop loss of 269 on the downside, looking for targets of 283 to 289 on the upside. So Federal Bank is the first stock which is there on the buy side. Second stock where I'll again focusing on the buy side over here will be CUB, City Union Bank. Again, good consolidation which has happened into the stock, and now we are seeing the base getting formed, and we expect further up move into the stock. So this is also a buy for me with a stop loss of 265, looking out for targets of 285 to 290 on the upside.
All right. Thanks a lot, Kunal, for joining in. And now moving on, earlier today, we had an insightful conversation with Sandeep Kalra, the CEO of Persistent Systems. He said that the company is expecting a strong outperformance from their banking financial services. He also shared his growth outlook for the company's North America and European market. Listen in.
If you look at our current, markets, as I just said, North America grew by about 18.6%. in the last quarter, year on year. We are expecting, unless there is significant policy changes brought in by the new administration, there should be a healthy growth in North America. Similar in Europe. Now, from a sectoral perspective, our banking financial services is growing at roughly about 30% year on year. We expect it to lead the growth for the near term. Healthcare life sciences had tepid growth for the last 2-3 quarters. It's coming back big time. And remember, healthcare for the last 2 years was the leading, vertical for us across the industry, and it had grown at one point in time upwards of 60% year on year. So, from our near future, we see banking financial services leading, high tech following, followed by healthcare life sciences, secular growth, decent growth across all three sectors.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम।
Welcome back to India Market Close, but let's also get in Shivangi Sarda from Motilal Oswal Financial Services. Shivangi, welcome to the show. Always a pleasure to speak to you. In this kind of a market, your strategy and your top picks.
Very good afternoon. Thank you for having me. So we've seen that, the indices have been facing some sort of pressure, and we've seen profit taking and the best took take full control. But the good part is that we've seen a smart recovery from the lower levels, which has kind of, provided some bit of comfort to some pockets and sectors. Looking at the markets, there would be some sort of weakness which is likely to continue here because the call writers are still positioned with heavy, positions at these levels. Now we're looking at 25,400 as the next resistance levels with a support at 24,900 marks. And talking about Bank Nifty, of course, this is stronger out of the lot, but we've seen that, there has been some slight bit of profit booking here as well. But overall, Bank Nifty looks, more stable than the broader market, and one could actually start accumulating good PSU names even at these levels. We're looking at, 59,300 level as the next, resistance for Nifty with a support of 58,500. So,
right, Shivangi. And what would be your top picks?
So top picks, first up on my radar is Hindalco. We've seen that metal stocks have been doing exceptionally well, and even in such kind of a volatile market, they've been holding at the higher levels quite strongly. Hindalco recently touched an all-time high levels and is hovering near its all-time high territory as well. It has been making an upward sloping channel on the monthly basis, and it has been an outperformer consistently from the last 6 years. So definitely one of the strongest names in this entire pack and likely to continue the move here because RSI is showing positive signs from the lower levels and it is turning towards, the positive levels. So we're recommending a buy here with the next target of 975 levels for Hindalco with a support of 920. So.
Right. And what about a counter like SRF? Yesterday it was down 4%, today again a 7% downtick. Any support levels for SRF?
So SRF has been seeing a lot of weakness of lately. In fact, it's given a weekly breakdown. It broke the important support level of 2770 levels, which was an important level to watch out for this one. And even after the gap down today, we've seen relentless selling and every bounce being actually sold into. So SRF is something which we are, keeping a watch and wait and watch over here. There is no signs of reversal that we can see as of now clearly in the data, but there could be some bit of weakness that could continue even more here. So we're looking at a base of 27. We're looking at a base of round about 2650, 2630 levels. And the upside still remains capped at 2700 because of the call writers that are still present.
Shivangi, hi, Sharad here. Kalyan Jewellers, that's been a concern for the stock. The stock is down almost 14%. I'm just seeing that in the trade, kind of a recovery attempt was being made, but that's also getting nullified. Any technical views on Kalyan Jewellers? Good time to enter or any important stop loss?
So Sharad, when we look at the entire, jewelry business space, there are stocks like Titan which have, shown signs of reversals here at these levels. Of course, too early to say, but the data is suggesting that buying has started to happen at the important key retracement levels. But when you look at Kalyan Jewellers, we've seen that there has been a weekly breakdown. So clearly, Kalyan Jewellers is not moving with the entire broader market. And of course, with the gold prices, touching sky high levels, we've seen that these stocks have actually kind of had an impact, but a positive one. But amidst all this, Kalyan Jewellers has not been able to sustain, and it has actually fallen by more than 12% today. So overall, this stock may continue some sort of weakness on the technical front, and we could, kind of wait and watch on this one before starting to accumulate.
Okay, so that's with regards to where Kalyan Jewellers goes. In fact, that stock has nosedived in trade, extending losses for 8 consecutive sessions. Let's get a bull versus bear on this one. Mahima standing by with both the cases. Mahima, over to you.
Right, so Hiral, it's been, a bad day for Kalyan Jewellers for sure. And if we take a look at the bull versus bears, side of this particular counter, Q3 business update suggests that there was a revenue growth of around 42%. But that as compared to the rise in gold prices year on year, that stands at 65%. Though all of that revenue growth has largely come in from a pricing growth perspective rather than a volume growth perspective. And that's been the story for a lot of these jewelry companies. The second argument remains with regards to where debt stands. They've said they earlier paused their debt with regards to some land acquisition claims going on, but now they have resumed their debt reduction and they plan to be debt free by the next year. But at the same time, the working capital days for them have really gone up in the past couple of quarters, and has risen to around 23 days. This is also largely on account of the way prices have panned out as to where gold stands. The next one, with regards to where the profit CAGR stands, that's been at a healthy 38.2% CAGR over the last 5 years. But valuations are nowhere near cheap for something like a Kalyan Jewellers. It's still sitting at a 57 times PE versus a 5-year average of 67 times, slightly better than the 5-year average, but still very expensive as compared to peers like N Gadgil or for that matter Thangamali jewelry as well. Lastly, in terms of where the segment candle stands, now Kalyan is focused on growing this particular business for them. This is largely an online business and a store that focuses more on lightweight jewelry. Kalyan has the candle segment has recorded a revenue growth of 147% this particular quarter, but it is yet to be profitable, and the expansion plans that the company has for candle store addition is also something that could put pressure in terms of where profitability stands. So this is the overall view of the bull versus bear case for something like Kalyan Jewellers.
Right, Mahima, while you're with us and the Zomato or Eternal will be reporting its numbers anytime soon, what is the street expecting here?
Right, so, Somit, the street is expecting a good set of numbers going forward from Eternal. It can come anytime now. Generally, they post their earnings around the 3 p.m. time, but overall revenue might see an uptick of around 2 times in terms of where it stood in Q3 FY25. EBITDA may rise around 1.5 times. Margins will be at that 2% mark versus that of almost 3% earlier, but that is largely on account of the additions of, the rapid addition of dark stores that they're doing. Net profit may also be at that 115 odd crores versus that of 60 crores in Q3 FY25. In terms of what to expect, festive season might get slightly impacted because of the gig workers strike, but overall strong revenue growth is expected. Higher marketing spends could also put pressure in terms of where the margin stands, and this is largely on account of competition panning out in the quick commerce and food delivery space. Lastly, key things to watch out for, the guidance in terms of where expansion of dark store addition is concerned, whether it is on track, whether they are increasing their guidance in terms of where the dark store addition is concerned. Recovery in food delivery will take place or not is something that the street is watching out for, because that's not been the case for the past couple of quarters. Quick commerce market share expansion, how much has that happened this quarter, considering the kind of pressure or competitive pressure that is there in the quick commerce space? And Hyperpure revenue growth, what is the trajectory looking like? And lastly, how has going out business scaled up in the last quarter is something that we'll be watching out for. So this is the overall view of what you can expect from Eternal earnings.
Right, Shivangi, despite the market volatility today, Eternal was one counter that has been continuously gaining in trade. Any breakout that we have seen on technical level, or any target that you can give?
We see that Eternal has actually witnessed a good comeback, and we've seen that the stock has already recouped most of its losses of the last two trading sessions, and it is kind of showing good strength because even in such kind of a market, we are seeing that there is buying interest emerging at these levels. Now, Eternal, technically speaking, in the short term, it might have had some point of pain from the last 2 to 3 odd months. But positionally speaking, the stock is quite well placed, and actually, quick commerce space. This one is quite positive, even with the expansion of Blinkit, not just Zomato. So this one's actually quite positive, and one should look at adding this or start accumulating this at a portfolio level. And immediately, we are looking at some level like 295, and then positionally, we could see levels like 305 levels.
So 305, that's the important positional level Shivangi is talking about. But moving on, Dr. Reddy's is set to announce its Q3 numbers today. Will the US pricing overhang sustain for the company? And what is the street expecting from Q3? Let's go to Varsha to find out.
Well, muted performance has been expected when it comes to Dr. Reddy's Q3 FY26 numbers, wherein revenue may fall 0.5%, EBITDA may fall around 19%, net profit may fall 22%. Now, this muted performance will be driven by, continued pressure in US. US impact will be due to negligible Revlimid, that is a cancer drug contribution, and of course, additional pressure will also come from the pricing pressure seen in the US market. India business is expected to partly, offset US weakness, and Europe is expected to deliver mid-single digit to low double-digit growth. Talking about the analyst expectation when it comes to, US business, so analysts are expecting around $310 million to $325 million of US sales for Dr. Reddy's. Now, talking about India business, wherein the domestic business is expected to have an improvement year on year, that is true for every pharma company. Well, India is expected to be the strongest growth driver. Growth will be supported by core therapy segments, and analysts are expecting double-digit growth. Talking about the Europe business, wherein steady growth is expected between 7 to 13%. Growth will diversify earnings and US pressure. What investors should watch out when it comes to Dr. Reddy's? Three most important things. One is the semaglutide, which is the anti-diabetic or anti-obesity approval timeline in Canada. Progress on some of their regulatory filings on the products that they have been launched, and any improvements in the US pricing pressure. These are the three key things which investors should watch out when it comes to Dr. Reddy's.
So that's the expectation when it comes to Dr. Reddy's as well. But moving on to our earnings candidate. Now, Rallis India is seeing some good gains today at the day's highest levels, gains of 1.5% coming in there on the back of the numbers that it posted. Varsha caught up with the management as well. Let's hear what they had to say.
The growth was led by volumes. What about pricing? When one can expect a recovery in prices?
So, I think, first of all, good morning to all my viewers. Pricing is a very, very complex subject. There are segments where we have some lever on pricing. There are segments we don't have lever. So when it comes to export business of crop protection, I think we have to be very competitive. Same way when I sell my domestic crop protection business, I have to be very competitive. So that is one area. A lot depends on China factor because there are domestic producers, including us, and there are importers. So in order to do that, I think in that segment, we make sure that we want to focus on volume. We don't want to lose the market share. But when it comes to seed and soil and plant health portfolio, there we have a better leverage of pricing based on the value and the benefit we offer to the customer. So it's kind of 60% business where I don't have a pricing lever, 40% we do have some pricing lever.
Right. So, Mr. Shukla, as you said that you as a company is, concentrating more towards the volume rather than value. What was the volume growth in absolute terms, if you could, help us with? And of course, will this volume growth be sustainable for Q4 and for FY27?
So, obviously, market share is one. I said we really worry and care about it. So we'll continue to drive that. I would say we had double-digit volume growth across all the segments. There is one segment where we didn't have a lot of volume growth, but we have been able to use price lever, was a small CSM segment we have. So I think it depends because agriculture season was very good. There was good planting. As a result, there was a demand. So we didn't want to lose market share. We were very competitive in pricing. Going forward, given that crop is already in the field, while some of the crops have not done well, I expect this momentum to continue in Q4. And when we start a new season every year, we always start on optimism. A lot depends on how commodity prices will be there at the time of planting of the Kharif season. How, besides planting, how the rainfall will be have. Sometimes even good rainfall, too much of rainfall can also be very negative. So our idea is that be ready, be optimistic, and work towards developing more relationship with the customer, invest more time with the customer, make sure we have a right channel partners to serve the customers. That's all we control.
All right, that's a kind of optimistic kind of commentary coming in from the management Rallis India. Let's see what the stock is doing. The stock is up 2%, and in a volatile day like such, Rallis has done well. But let's put the long-term chart for Rallis and see where the pressure was there. It's an, of course, agrochemical player. And see, that's the downtick coming in as well. But Shivangi, on a positional basis, is Rallis looking a good buy from current levels? Shivangi, if you could unmute yourself.
Yes, Sharad. So actually looking at Rallis, we've seen that, of course, there has been some bit of bounce back today, but on a monthly basis, the stock is actually wiped off the gains of the minor attempts of recovery that it had made in the last couple of months. In fact, barring these 2 months, it has been in a downtrend from the last 5 odd months, and we've seen that weakness has persisted here. Even though there have been minor attempts in the in between. So overall, this stock is actually lacking a lot of strength here, and confidence is clearly missing. So I would recommend avoid from Rallis at these levels.
Any STBT trades today?
So looking at the markets, we've been seeing that the metal pack is actually one of the strongest out of the lot. And apart from this, we are seeing a lot of movement in some steel action stocks. So my BTST here would be Vedanta. It has been consolidating at the higher zones from the last 4 sessions. And after a very good breakout last week, we've seen follow-up is quite strong. And from the lower levels, it has actually shown immense buying interest from 660 odd levels today. So overall, this stock is quite strong and closing on the higher note, which is indicating that it would continue on a positive note. So 705 is what we're looking at for Vedanta, and with a stop loss of 665.
Right, Industars is another counter that one should keep an eye out for, because the company yesterday came out with an exchange announcement where they are saying that on Feb 2nd they will consider their Q3 results. But with the Q3 results, they have not announced anything about a dividend or a buyback. Now, why is this announcement important? Because Street was expecting a dividend announcement to come in from Industars side, given the fact that the Vodafone Idea AGR issue is now behind and the company has a lot of time to make the payment for this AGR. So the cash flow coming in from Vodafone Idea to Industar wouldn't be an issue. Hence, Street was expecting a dividend to come in from Industar's side in the third quarter numbers. Now, as a rule, Industars largely pays off all the free cash flow that it generates to its shareholders as a reward. Now, what the management has said so far when it comes to the dividend point. In the fourth quarter of FY25, the board deferred the dividend, citing that it would form a committee to decide the best way to pay back the money to shareholders. In the first quarter of FY26 result, the company said that the board will be relooking at decision of giving dividend at the end of the financial year FY26. In the second quarter of FY26, board said that they will consider and is committed to distributing the cash to shareholders, and the timing still remains at the end of this financial year Q4. But they also said that this is the case because there was no clarity when it comes to Vodafone Idea AGR issue. But given the fact that this clarity has come in, Street was expecting this amount to come in. Now, what could be the quantum of dividend if at all the company announces a dividend by the end of FY26? Now, for FY26, the company is expected to generate a free cash flow of close to 5,400 crore rupees, which is nearly 5% of the company's market capitalization, which means that the dividend yield could also be as much as 5% for Industar in FY26. Now, there are three possibilities why the company has so far not announced any dividend. Possibility one is the fact that the company is sticking to their guidance of announcing a dividend at the end of this financial year. Second possibility is that they are still analyzing their investment plans when it comes to the Africa business foray, and hence they are yet not announcing this dividend because they still do not know how much capital expenditure they will be doing in Africa, and hence they do not know the free cash flow that will come in by the end of this financial year. And the third possibility is that Reliance Jio might likely shift few of its tenancies out of Industars to other tower companies on Renewable. Now, Jio contributes around 12 to 13% to the top line, and if that happens, then the company's cash flow could take a hit, not in FY26, but in FY27 at least.
Okay, so that's with regards to where, Indus Towers goes. And if you look at Indus Towers as well, the stock from the day's lows has recovered quite a bit now. Shivangi, any view when it comes to Indus Towers? And in turn, I would want to look at a Vodafone as well, because that stock, none of us have spoken about of this one since quite some time. It's languishing around those 10 levels. Let's just pull up a 1 month chart. That range has always been 8 to 12. Currently, you're at 10. Anything on Indus and Vodafone?
So here, when we look at this entire space, of course, Bharti Airtel is one stock which I would start looking at. And we've seen that this stock has actually seen a lot of weakness from the last 20 odd sessions. Now, if we pull out a chart of Indus Tower or a Vodafone, we've seen that, in line with the broader market, these stocks have actually not done quite well. And they've, kind of given up most of its gains of the last 1 month. So overall, I'm not expecting such comeback here at these levels. One could actually consolidate over here and a little wait and watch at these levels, and not recommend to start accumulating here.
That's pretty interesting on that. But let's just point out Thangamel Jewelry. The stock is up 4%, and of course, on back of earnings coming in and some kind of a good volume move as well. See a sharp recovery also come after the fall. Your views on this, Shivangi?
Absolutely. This has been one stock which has moved right from the start of the session today. We've seen volatile cues in between, but overall, it has made a good volatile day. We've seen that it is closing on a better note, higher than its opening levels, but then again, the swings are quite high. So I would recommend, if one is trading in this stock, to strictly maintain a stop loss and do it on an intraday basis because of the volatile nature. But the levels that we could watch out is 38.30 levels on the downside, and on the upside, one could look at 4,020 odd levels.
Okay, so that's with regards to Thangamel. Let's just quickly put up all the metal names on the screens as well, because that is pretty interesting when you talk about what's happening there. Hind Copper, Hind Zinc, Hindalco, JSW, all of these have been trading in the positive. Shivangi, do you see Hind Copper, Hind Zinc sustaining the kind of up moves that have already come in so far?
So definitely, Hiral, these two stocks are quite positive, and we've been quite bullish on both of these names since we've seen that, of course, metal stocks and especially copper has also started to show signs of strength from here. If you look at Hindustan Zinc, this has been one of the most resilient stocks in the past few months. And even Hindustan Copper is holding at the life high levels currently, with good momentum. So would definitely recommend people to keep holding this stock, and one could also start accumulating at these levels because the support levels are quite intact. If we talk about the levels, Hindustan Copper, next is what we're looking at, 580 levels. And Hindustan Zinc, one could actually look at the next targets of around about 720 zones.
Okay, so that's with regards to where the metal names are concerned. Apart from that, Credit Access Grameen, AU Small Finance Bank, a spectacular set of numbers that both these companies have reported, and you've seen a strong reaction come in there as well. AU Small Finance Bank, though, trading under pressure. Shivangi, what are charts indicating for both these names?
So looking at AU Small Finance Bank, actually we've seen that the stock has actually not really performed in line with the overall broader sector. Now, if you look at the other banks in the same sector, we've seen that there has been much more strength. Of course, AU Bank has performed on a month-on-month basis from the last 4 months, but the kind of volatile swings that we've seen in the stock from the last 5-6 trading session has actually made it quite volatile. So overall, we would expect some bit of swings to continue here, but my preferred pick would still be some of the PSU names that one can look at. For that matter, SBI is quite positive for the positional basis. Even PNB is looking quite good, and one could look at these stocks on a positional basis.
Vodafone Idea is another counter that remains in focus. It has increased prices of some of its family postpaid packs by around 7 to 9%. Earlier, the 701 plan, which had 2 connections, is now costing 751. The 1201 rupees plan is now costing 1301, and the 1401 rupees plan, which had 5 connections, is now costing 1525 rupees. Now, earlier, these plans were very much comparable to Bharti Airtel in terms of charge per GB, but right now, post this hike, they are nearly 7 to 9% expensive compared to Bharti Airtel. So it would be interesting to see whether Bharti Airtel also takes cues from this and increases its postpaid plan or not. Shivangi, quickly, any view on Vodafone Idea on charts?
Yes, so we just discussed the entire space as of now, and we've seen that there has been some bit of volatile cues off lately, but my recommendation would be a little wait and watch on all these stocks, which includes Vodafone, Indus Tower, Bharti Airtel. Of course, positionally, Bharti Airtel is quite strong as a portfolio stock, but on an immediate trading basis, one could actually wait.
All right. Thank you very much, Shivangi, for joining in and giving your technical views at market close. But now let's look at the market closing, how things are shaping up. And of course, market staged the recovery, but it's not very convincing. If you look at it, it's still, 70 points down. It's below the 25,200 mark. But yes, comfortably above the 200 DMA levels and the 25,000 levels. Nifty Bank, better placement and still down 600 points. But the majority of the pain which we had seen earlier, the broader market pain, that has actually recovered. But still 1:2 in the favors of bears. Let's pull out the Nifty stocks and show you what the stocks have been doing in the constituents. Lastly, we see it's even Stevens Eternal will be coming out with its number. Stock is near its day's high level, up 5%. Interglobe Aviation and the steel related stocks also buzzing in trade. But what's not working are your 2 big banks, HDFC Bank and ICICI Bank. Apart from that, Tata Consumer, Trent are also taking the pain. But yes, today was a very volatile session and a big range was there which we saw. Let's see the sectors which is moving, or most probably most of the sectors are in red. A slight up move coming back in metals and the infra and the oil and gas space. But majority wise, we see most of the sectoral indices traded in the red in the closing session. Let's pull out the advanced decline ratio to give you a perspective on how the markets fared. And yes, there were gyrations, but it still was largely in the favors of the bears. Let's pull out the mid cap and the small cap indices, because last 2 trading sessions there was a massive sell off, and today also the story remains the same. Mid cap index was down 1%. There was a slight attempt at recovery, but small cap was not that bad as compared to the mid cap. It was down almost 0.6%. Let's show the BSE 500 stocks where the action is happening, and in the last moment the Veranda Learning also went up. MRPL, Credit Access Grameen on earnings, India Mart doing really well, and earnings related numbers were something which we are looking at. But what's not working, that's the concern. Kalyan Jewellers, that's the top loser in BSE 500. followed by SRF, Shoppers Stop on the earnings sentiment. Cyient also down by almost 5%. So this is how the markets have fared, but the biggest concern definitely is the FIs selling and the rupee at the record low levels. Of course, weakening past that 91 mark and more, almost you could say 50 to 60 paise of weakening we just saw in one single day. So that's a very big concern actually, and going ahead, the lot of bond yield expectations would be there in the market. But let's see what are the cues to watch. It's still earnings heavy day, and balance of trade would be coming in. US President Trump speaks in the evening at around 6 to 7 p.m. That's where the focus would be. Apart from that, these are the important corporate announcements which would be their cues for tomorrow. What is coming out from the lock-in is Anthem Biosciences, and focusing on the earnings post-market hours, Dr. Reddy's, that's what you should be looking at, followed by KEI Industries as well. And also for tomorrow, the earnings, Adani Group earnings would be coming in. Bandhan Bank will be looking at, especially the trading community, Coforge as well. After Persistent came out with the good numbers, Ujjivan Small Finance, Z, Syngene, and even Premier Energy. So these are the stocks which should be in focus for tomorrow, and this is the most important situation coming in. The live coverage will be happening in NDTV Profit, Trump's Greenland Gambit. What's the game going ahead? And we will be tracking, giving you live updates as and when it happens. That's all folks for India Market Close, and thank you very much for tuning in. And up next is Market Express by Malika.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार।
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम
viewers. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show and first check the markets. It was a day of high volatility on Dalal Street as benchmarks saw sharp swings between gains and losses in trade throughout the day. Nifty, after giving up the 25,000 level in morning, saw a sharp recovery of near 300 points, eventually ended around 25,150 odd levels. Broader markets witnessed a broad-based sell-off as both mid and small cap indices saw near 1% cut. Sectorally, other than metal and oil and gas index, others ended in the red. The Indian rupee falls to a record low against the dollar, touching 91.75 levels today amid continued foreign outflows from equities and rising geopolitical uncertainty. Bonds also rise on lower state debt supply. Credit Access Grameen is creating a buzz after a strong third quarter. The microfinance lender has swung back to profitability, reporting healthy revenue and a big jump in margins driven by better operations and lower provisions. Brokerage firm Investec also maintains a buy rating with healthy target prices as the company begins an upcycle. SRF posts a strong third quarter performance with profit jumping close to 60% and margins expanding even after one-time costs. Revenues up modestly, but despite the solid numbers, the stock tanked in trade as investors reacted to caution around future demand and industry pressures. Morgan Stanley maintains underweight with a target of 2,177. Shoppers Stop hosts a weak third quarter with net profit plunging nearly 70% year-on-year, while revenue inches up modestly amid soft demand. Operating earnings and margins contract as festive timing and uneven consumption weigh on sales. Despite some growth in premium offerings, the overall performance disappoints, leading to a slide in the stock. Persistent Systems has posted an in-line set of Q3 numbers, marking its 23rd straight quarter of revenue growth. Revenues were up about 5.5% sequentially to 3,778 crore rupees, while constant currency growth came in at 4.1% versus 4.4% in Q2. Margins expanded by 45 basis points, with EBIT rising 8.5% to 632.5 crore rupees and margins touching 16.74%. Total contract value strengthened to $674.5 million against $609 million in the previous quarter. However, net profit dipped 6.8% to 439 crore rupees, weighed down by an 89 crore one-time impact from the Labour Code. Bazaar Style Retail is in focus today after Cupid announces a strategic investment of around 331 crore rupees through preferential warrants in a deal stuck at a slight discount to recent prices. The value fashion retailer posts year-on-year revenue growth, but same-store sales and sales per square foot fall as festive timing shifts impact demand. Both Bazaar Style and Cupid shares show volatility in trade as markets assess the news. Morgan Stanley stays bullish on select steel players even as markets watch volatility in this sector. The brokerage favors names with strong pricing power and domestic demand support, but it also flags risks from capacity additions and pricing pressures. Our desk looks at which steel stocks make the cut and why analysts see spreads and supportive macro trends driving the sector. India Mart Intermesh posts a solid third quarter with profit and revenue beating estimates, but weakness in paid subscriber additions keeps investors cautious. Despite strong collections growth, the number of paying subscribers falls slightly and brokerages see muted upside ahead. Jefferies upgrades the stock to a hold, trims its target price to around 2,100 rupees and forecasts moderate revenue and earnings growth over the next few years. Lupin has signed a major pact with Spain-based Galanshim Health to bring finished formulations of semaglutide to global markets. Semaglutide, a GLP-1 receptor agonist, is widely prescribed to regulate blood sugar and appetite, making it a key therapy for type 2 diabetes and weight management. With this deal, Lupin expands its diabetes portfolio beyond India and will commercialize semaglutide across 23 countries, strengthening its presence in one of the fastest growing therapeutic segments. And in a big shake-up in the QSR space, Restaurant Brands Asia is set to be acquired by Inspira Global, with Ayush Agrawal taking majority control. The deal, valued at around 1,500 crore rupees, will be routed through Lennox's Food Works and could trigger an open offer for public shareholders at 70 rupees a share. Inspira Global plans to infuse 900 crore rupees via equity and another 600 crore rupees through warrants, marking a significant recapitalization of the Burger King India operator. Cyient DLM's Q3 numbers disappointed with revenue down 31.8% year-on-year. Macquarie has maintained its neutral rating on the stock with a target of 380 rupees. The brokerage says that while management commentary is positive, it still needs more conviction, especially after the company missed estimates due to some tariff push-outs. Management, however, remains confident about returning to growth in Q4, but Macquarie says it would rather wait for execution before turning constructive. Rallis India delivered strong volume-led growth this quarter, driving revenue up 19.3% to 623 crore rupees from 522 crore rupees. EBITDA jumped nearly 32% to 58 crore rupees, with margins improving to 9.3% versus 8.4% last year. But profit took a major hit. Net profit slumped 81.8% to just 2 crore rupees, largely due to the impact of wage code implementation. The company saw broad-based volume strength across businesses, while B2B growth was aided by both higher volumes and better pricing. Tangamail Jewelry has reported a stellar jump in Q3 revenues, which more than doubled to 2,406 crore rupees from 1,132 crore rupees last year. EBITDA also saw a sharp rise to 172 crore rupees versus 83.2 crore rupees, though margins stayed broadly stable at 7.2% compared to 7.3%. Net profit too nearly doubled, coming in at 105 crore rupees against 48.2 crore rupees. Strong festive season demand and higher gold sales continue to drive the company's performance this quarter. Raymond Realty has launched a new luxury residential project in Mumbai, marking another expansion of its premium housing portfolio. The project carries a strong revenue potential of around 5,000 crore rupees, underscoring the company's growing ambitions in the city's upscale real estate market. With demand staying robust for high-end homes, now this launch further strengthens Raymond Realty's presence in one of India's most lucrative property corridors. AU Small Finance Bank reported a strong Q3 as well. Net interest income rose 16% to 2,341 crore rupees, driven by healthy loan growth. Operating profit was flat at 1,215 crore rupees, indicating higher costs during the quarter. However, net profit jumped 26.5% to 668 crore rupees, supported by lower provisioning and stable business momentum. On asset quality, gross NPA improved to 2.3% from 2.41% QOQ, which is quarter on quarter, while net NPA stayed flat at 0.88%, reflecting steady credit performance. Brokerage sentiment remains positive. Jefferies has maintained a buy rating and raised its target price to 1,220 rupees, signaling confidence in AU Small Finance Bank's growth and profitability outlook. Supreme Industries has reported a mixed third quarter with steady growth in sales volumes but pressure on profitability. Plastic goods volumes grew nearly 13%, while value-added product sales were up over 16%. Consolidated revenue rose 7% year-on-year, but net profit declined 18% due to softer margins. The company says polymer prices have started moving up in the new calendar year, which may influence cost dynamics ahead. Supreme has also reaffirmed its full-year guidance, expecting stronger volume growth in both overall operations and the plastic piping segment. United Spirits has posted a steady third quarter with revenues largely in line with expectations, though volume growth remained weak. The company managed to offset softer volumes through pricing and a favorable mix, but higher advertising and promotion spends weighed on margins. EBITDA grew modestly, while net profit saw a double-digit increase. Gross margins expanded sharply, but operating margins compressed due to elevated brand investments. The company has also announced an interim dividend of 6 rupees per share. Brokerage views on United Spirits remain constructive after the company posted steady revenue growth but soft volumes in the third quarter. Investec has maintained its buy rating, highlighting strong net sales value growth and expecting earnings momentum to pick up in the fourth quarter. JP Morgan also remains overweight, noting that revenue and gross margins held up well even as elevated advertising spends dragged EBITDA margins. Both brokerages point to the importance of monitoring the volume recovery trajectory going forward for the company. The overall stance returns stays positive with margin pressures seen as manageable. Vikram Solar has posted a strong third quarter with significant improvement in profitability and operational metrics. Module sales rose 35% year-on-year, helping the company lift capacity utilization to 90% during the quarter. Consolidated revenue grew nearly 8%, but the standout gains came in margins, with EBITDA expanding more than 2.5 times and net profit rising fivefold. The company's order book now stands at 10.6 gigawatts, offering strong near-term visibility. Domestic business continues to dominate the mix, contributing 84% of revenue. Let's take a look at some other important stories as well. The government has officially invited financial bids for the strategic sale of IDBI Bank, moving the long-pending privatization process into its final phase. Bids have been sought after all key regulatory clearances came through, clearing the path for serious contenders to make their offers. Potential bidders have been given 4 weeks to submit final financial bids. The government is aiming to declare the winning bidder by end March 2026, signalling a clear timeline for closure. Among the four front runners, are Fairfax Financial and Kotak Mahindra Bank, both seen as strong contenders. And importantly, NDTV Profit's earlier news break on this development now stands confirmed. Netflix has stepped up its takeover bid for Warner Bros. Discovery, switching to a fully all-cash offer while keeping the deal value unchanged at $82.7 billion. The revised proposal offers $27.75 per share in cash, replacing the earlier mix of cash and Netflix stock. The move has won unanimous support from the Warner Bros. Board, which says the all-cash structure gives shareholders greater certainty and immediate liquidity once the deal closes. This shift comes as Netflix fends off a competing $30 per share hostile bid from Paramount Skydance, which has been pushing for more disclosure and even took the matter to court earlier this month. Netflix has also beaten Wall Street's revenue expectations for the holiday quarter, crossing a major milestone of 325 million subscribers worldwide. The streamer posted $12.1 billion in revenue from October to December, slightly above analyst forecasts of $11.97 billion. However, investors remain focused on its $82.7 billion bid for Warner Bros. Discovery as Netflix pushes for an all-cash agreement to secure major franchises, including Game of Thrones, Harry Potter, and DC superheroes. The company says the deal will give subscribers a wider, higher quality content library and more flexible plans with HBO Max added in. The International Energy Agency has raised its 2026 oil demand growth forecast to 930,000 barrels per day, up from 860,000 barrels per day earlier. That's an upward revision of 70,000 barrels per day and 8.1% boost, highlighting stronger expectations for global energy consumption. In its latest monthly report, the IEA says the upgrade reflects improving economic activity and firmer market fundamentals heading into 2026, signaling a more resilient outlook for global oil demand. On to some really important national stories now. The army has been deployed in sensitive areas of Assam's Kokrajhar district after mob violence left 2 people dead, triggering arson and clashes between Bodo and Adivasi communities. According to officials, the unrest began after a vehicle carrying 3 Bodos allegedly hit 2 Adivasi residents near the Karegaon outpost, sparking retaliation, violence and torching of the vehicle. 1 person died and another succumbed to injuries earlier this week. 4 army columns are now patrolling affected zones with flag marches planned, while internet services have been suspended and prohibitory orders imposed as security forces work to stabilize the situation there. In Kerala, a vigilance court has granted bail to Unni Krishnan Potti, the prime accused in the Sabrimala's gold loss case involving missing gold from the sanctum door frames. Now, the court allowed bail after investigators failed to file a charge sheet within the mandatory 90-day period. However, Potti will stay behind bars because he has been separately arrested in another linked case involving the loss of gold from Dwara Palaka ideal plates. The SIT has made 12 arrests so far, including Putty and former Travancore Devasam board presidents. Now, in a dramatic escalation of the Kapoor family inheritance battle, 80-year-old Rani Kapoor has moved the Delhi High Court seeking cancellation of the Rani Kapoor Family Trust, alleging it was fraudulently created to divest her of her entire estate. According to her suit, the trust holding stakes in Sona Comstar was formed without her informed consent, allegedly through forged documents and undue influence of her late son Sanjay Kapoor and his wife Priya Kapoor. She claims she was made to sign papers after a 2017 stroke and only discovered the alleged fraud after Sanjay's death in June 2025. The petition names 23 defendants, including Priya Kapoor and several grandchildren. Motorists across major Indian cities are still losing hours to daily traffic jams, up to an entire week each year, according to TomTom's 2025 mobility data. Bengaluru ranked as the world's second most congested city with average speeds of just 16.6 km per hour and a 15-minute commute covering barely 4.2 kilometers. Pune also featured in the global top 10, coming in at 5th position. Mumbai showed some improvement with congestion down 3.3 percentage points from 2024, yet commuters still lost 126 hours a year at average speeds of 20.8 km per hour. Meanwhile, Delhi's congestion worsened to 60.2%, costing motorists 104 hours annually. Mexico City topped the global list for the worst traffic. On to some international stories. Israel's Prime Minister Benjamin Netanyahu has accepted an invitation from US President Donald Trump to join the new Board of Peace, a body initially designed to support efforts to end the conflict in Gaza. Netanyahu's office confirmed the move in a post on X, noting that the board could eventually expand its mandate to address conflicts beyond Gaza. And viewers, that's all the time on today's Market Express, but on to our Budget for Bharat series. We put the spotlight on the auto sector. The industry is cruising on strong momentum. GST 2.0 has powered a 5% growth last year and an impressive 18% surge in Q3. But to keep this pace going, the sector has a clear budget wish list. Here's what the big players across passenger vehicles, commercial vehicles and farm equipment want from Budget 2026.
India's auto industry is on a dream run aided by the GST 2.0 cuts, and in calendar year 2025, the industry recorded 5% jump in wholesale sales. The main jewel in the crown for the industry was the Q3 performance, in which wholesales for the industry recorded an 18% jump. But in order for a smooth ride, the industry has a budget wish list, and they believe that if the government can make certain announcements, then this dream run will continue.
Skoda Auto Volkswagen India is of the view that the upcoming budget should have announcements for the further growth of the EV segment. As the union budget approaches, after the successful and welcome implementation of GST 2.0, the industry will be looking for policy continuity and long-term clarity. Sustained support for domestic manufacturing and increased allocation for road and transport infrastructure will be key priorities. Rationalizing the inverted duty structure for EVs will strengthen domestic manufacturing and competitiveness and will further accelerate India's transition to sustainable mobility. Continued focus on building the EV ecosystem alongside measures that support household disposable incomes will be essential to sustain demand momentum and reinforce the sector's role in India's broader economic growth. On the other hand, the CV and farm equipment players are of the view that the government has already been proactive with policies like GST 2.0 and RBI interest rate reductions. However, they expect the government to continue its growth-led initiatives and reforms for the agriculture sector.
We are just a few weeks away from the union budget. What are your expectations from Ashok Leyland's perspective?
Government these days is so proactive that we don't need to wait for a budget really. One thing that the government should consider is really coming up with some program or some scheme around scrappage of the old vehicles.
The government in the past 4 to 5 years have done all the positive gestures and announcements as far the farming community is concerned. in terms of visibility, in terms of incentivization, in terms of ensuring the money reaches the farmer. We are a 1.4 billion population today in India. We have to be self-sufficient. In many areas, we are self-sufficient. We can also become a food basket for the world. And also, as I mentioned slightly earlier, that in mechanization, we're only 47% in comparison to America and Canada at 90%. So I think that is the opportunity which the government and the industry and the farming community need to work towards in convergence.
I would certainly hope it's a consumption and a growth-led budget. As long as the domestic growth and the domestic demand continues to be robust, the industry will perform. And lastly, as we've been discussing exports, if there are some things that can be done to be able to help and boost exports, if there are some policy interventions that can be brought in there, that would be most welcome. If there are some policy corrections on duty drawback and things like that, and those conversations are on, the government has been considering a few of these things to strengthen the general capability of India and exportability. That's the only thing we can continue to push for.
India's auto industry expects to continue its journey on the fifth gear, all thanks to GST 2.0 cuts. The industry also believes that in the upcoming budget, the government makes certain announcements through which the government can increase the EV infrastructure across the country. Besides that, the industry has also suggested to bring in a scrappage policy for commercial vehicle segment, and at the same time, the industry has also demanded that the government must make certain announcements and certain policies which can increase farm mechanization across the country. The industry believes that if the government is able to support the industry in the long term, then nothing can stop India from achieving the tag of becoming the largest auto industry in the whole world. With video journalist Suraj Singh, this is Danish Anand for NDTV Profit.
And viewers, in a breaking news at the moment that could raise many of your eyebrows as it did mine, Dipinder Goyal has resigned as the eternal CEO, and Goyal will take charge as vice chair and director of, and in fact, Eternal appoints Albinder Singh Dhinsa as the CEO, the current CEO. Now, this is an extremely important news because I'm not sure if this was expected. My colleague Mahima, who tracks the proceedings and the major updates of the company, joins us on the phone line. Mahima, was this expected?
Right. So, Malika, I think this is a big update coming in. He's posted a letter out to shareholders saying that he's going to step away as the group CEO and has now appointed Albinder Dindasa, who's going to be the new group CEO of Eternal. He's the founder of Grofers as well as the co-founder for Eternal and runs Blinkit right now as a CEO. He's mentioned that, off late he's found himself drawn to a set of new ideas, and that is why, he's stepping down. He'll, however, still remain on the board and board of directors, and as well as remain as the vice chairman of Eternal, but stepping down as the group CEO. Probably what changes is that from here on it's going to be Albinder who's going to make the decisions going forward. Plus, the entire press release says that their alignment in terms of ESOPs is not going to change. Looking ahead, the idea of Eternal is going to stay as it was earlier as well. And in terms of Dipinder Goyal, he said that his involvement in long-term strategy as well as culture, leadership, etc. for Eternal still will continue going forward. So this is with regards to the update coming in with regards to where Dipinder Goyal stands. But overall, if you take a look at the numbers as well, Marika, it's a beat all round in terms of where the numbers, are concerned. Overall net profit surges 73% to the 102 crore mark, slightly lower than what the street was expecting of around 114 odd crore. But overall, it's, a beat in terms of where the profit is concerned. Revenue is also seen a good growth at that 16,315 odd mark, largely in line with what the street was expecting. So good set of numbers, but I think the idea of Dipinder Goyal stepping down as a group CEO is going to probably disappoint the streets tomorrow.
Yeah, of course, because as you mentioned that Zomato as a company has done well financially, and in fact the stock was up about 5% in trade today as well. If we can get those charts there, you will see that they had an upswing, and in fact it was one of their sharpest intraday gains in about 6 months or so. But the big news of this given moment is the fact that Dipinder Goyal has stepped down from his role as Group CEO of Eternal, transitioning to Vice Chairman, subject to shareholder approval, of course. And in his place will be Albinder Dhinsa, as Mahima highlighted. He currently runs Blinkit and also will be taking over what was earlier Dipinder Goyal's role as the CEO of the company. But big update as far as Zomato is concerned, and let's see what these ideas are that Dipinder is now pursuing after he steps down from his current role. But that's a wrap on this edition of Market Express and the breaking news. Stay tuned to NDTV Profit as we bring you a lot more news and updates. This is Malika Mishra. Thanks so much for watching.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Well, the world comes together in Davos in a sense every single year. We talk about AI, we talk about commerce, we could talk about clean energy, but I dare say the focus this time is about the relation between Europe and the United States and Donald Trump. Is that impacting business at all? The India story is always very important over here. We've got several Indian pavilions over here, lots of Indian business leaders. We've got excellent business leaders and those linked with Indian business right here in the NDTV studio. Rajiv Mimani with us, Chandrajit Banerjee and Sanjeev Krishan. Thank you all very much for being with us. Rajiv, I have to ask you the obvious question. How closely are you, as CII President, looking at what might emerge tomorrow with Donald Trump and what he says here?
No, I have not spent any time in predicting. I think it's a futile effort. But clearly, I think it's on the top of the agenda of everyone. I think it's in the interest of the global economy, of the entire world, that I think the relationship between Europe and US, I think, settle down a bit. I think that's the key thing. I think that's the key talking point. From our perspective, I think the way we are looking at it is, how is India doing? How is India faring? And I think there, I would say that both from how our macroeconomic numbers are being looked at, the quality of reforms and the number of reforms that are being done, also the trade diversification that India has done, particularly the comments around the EU deal, UK deal, EFTA, Australia and New Zealand, the strengthening relationship with Middle East. And I think the reindustrialization of India through manufacturing and advanced manufacturing, I think in every interaction that we are having, I think that's being viewed very positively. Obviously, there's always a question on the India-US trade deal, and at least our view is that it's something that in the next, I think distant future, I think hopefully, at least if not the entire thing, at least some parts of it should get sorted out.
One of the reasons I was asking about Trump is also because what's happening here has resulted in the global markets being in a bit of a spook. They're scared. Our markets have suffered. The FTSE has suffered as well. And therefore, this insecurity that we find in geopolitics is impacting markets around the world. Is that a huge concern for you?
Well, I mean, certainty certainly has a premium. So there's no question about it that when there is so much uncertainty as there is now, markets will behave the way they have. I think, as Rajiv said, I think the conversations around here largely have been on US and Europe in some ways. But I would actually, without sidestepping your question, I would say that just the fact that the India-EU deal might get announced very soon, I think is a huge positive that we'll take away from Davos. And from our perspective, again, maybe corroborating what Rajiv said, I think Indian macro has been very, very resilient through 2025. Bunch of reforms which have been done. Even the survey that we released yesterday actually shows that a lot of Indian CEOs are now saying that we want to focus.
For taking that time. I appreciate that. So let me go right into it. Why do you believe that AI has the potential to be that significant engine of growth? And what makes this technology different than past technology cycles?
Yeah, this is, first of all, when you think about AI and you're interacting with AI in all these different ways, ChatGPT, of course, using Gemini, of course, using Anthropic, Claude, of course, and the magical things that it could do, it's helpful to reason back to the first principles of fundamentally what is happening to the computing stack. This is a platform shift. A platform is something where applications are built on top of. And this is a platform shift like the platform shift to PCs. New applications were developed to run on a new type of computer. Platform shift to the internet, a new type of computing platform, hosted all kinds of new applications, a platform shift to mobile cloud. In each and every one of these platform shifts, the computing stack was reinvented and new applications were created. This is a new platform shift in the sense that today you're using ChatGPT. It's important to understand that itself is an application, but very importantly, new applications will be built on top of ChatGPT. New applications will be built on top of Anthropic Claude, for example. And so it's a platform shift in that way. AI is really easy to understand if you realize what it can do that you could never do before. Software in the past was effectively pre-recorded. Humans would type and describe the algorithm or the recipe for the computer to execute. It was able to process structured information, meaning you've got to put the name, the address, their account number, their age, where they live. You create these structured tables that software would then go and retrieve information from. We call it SQL queries. SQL is the single most important database engine the world's ever known. Almost everything ran on SQL before now. Now we have a computer that can understand unstructured information, meaning it can look at an image and understand it. It could look at text and understand it. It's completely unstructured. It could listen to sound and understand it, understand the meaning of it, understand the structure of it, and reason about what to do about it. And so for the first time, we now have a computer that is not pre-recorded, but it's processed in real time, meaning that it's able to take the context of the circumstance, whatever the environmental information, the contextual information, and whatever information you give it, it could reason about what is the meaning of that information and reason about your intent, which could be described in a really unstructured way. You describe it however you want to describe it. We call it prompts. But you describe it however you like to describe it, and to the extent that it can understand your intention, it could perform a task for you. Now, the important thing about this is that because we're reinventing that entire computing stack, the question is, what is AI? You're asked, when you think about AI, you think about the AI models. But it's really important to understand industrially, AI is actually essentially a 5-layer cake. At the bottom is energy. AI, because it's processed in real time and it generates intelligence in real time, it needs energy to do so. Energy is the first layer. The second layer is the layer that I live in. It's chips and computing infrastructure. The next layer above it is the cloud infrastructure, the cloud services. The layer above that is the AI models. This is where most people think AI is. But don't forget that in order for those models to happen, you have to have all of the layers underneath it. But the most important layer, and this is the layer that's happening right now, the reason why last year was an incredible year, frankly, for AI, is that the AI models made so much progress that the layer above it, which is ultimately the layer that we all need to succeed, the application layer above that. And so this application layer could be in financial services, it could be in healthcare, it could be in manufacturing. This layer on top ultimately is where economic benefit will happen. But the important thing, though, because this computing platform requires all of the layers underneath it, it has started, and you guys everybody's seeing it right now, it has started the largest infrastructure build out in human history. We're now a few $100 billion into it.
That's it.
We're a few $100 billion into it. Larry and I, we get the opportunity to work on many projects together. There are trillions of dollars of infrastructure that needs to be built out. And it's sensible. It's sensible because all of these contexts have to be processed so that the AI, so that the models can generate the intelligence necessary to power the applications that ultimately sit on top. And so when you go back and when you reason about it layer by layer by layer, and you realize that the energy sector is now seeing extraordinary growth. The chip sector, TSMC just announced they're going to build 20 new chip plants. Foxconn working with us and Wistron and Quanta building 30 new computer plants, which then go into these AI factories. So we have chip factories, computer factories, and AI factories all being built around the world.
And memory.
And memory, right, exactly. Those chip fabs. Micron has started investing $200 billion in the United States. SK Hynix is doing incredibly. Samsung is doing incredibly. You could see that entire chip layer growing incredibly today. And now, of course, we pay a lot of attention to the model layer, but it's really exciting that the layer above them is really doing fantastically. And now, one indicator is where the VC funding going into. Last year, 2025, was one of the largest years in VC funding ever. And last year, most of the funding went to what is called AI native companies. These are companies in healthcare, they're company in robotics, and company in manufacturing, financial services, all of the large industries in the world. You're seeing huge investments going in to those AI natives because for the first time, the models are good enough to build on top of.
So let's just dive a little further. Obviously, everybody, I'm sure, uses their own chat bot and getting information. So, but you're talking about the dispersion of AI is going to be the key. Let's talk about it, like go into a little more upside ideas related to the dispersion of it in the physical world. You mentioned, obviously, healthcare is a great example of that. But where do you see the transformational opportunities in areas like transportation or science?
Well, last year, I would say last year, I would say 3 major things happened in AI, in the AI technology layer, the model layer. The first one is that the models themselves started out being curious and interesting, but they hallucinated a great deal. And last year, we can all reasonably accept that these models are better grounded. They could do research. They can reason about circumstances that maybe they weren't trained on, break it down, into step-by-step reasoning steps and come up with a plan to answer your question, do your research, or perform the task. So last year we saw the evolution of language models becoming AI systems that we call agentic systems, agentic AI. The second major breakthrough is the breakthrough of open models. Several years ago, was it a year ago? DeepSeek came out.
Last year.
And DeepSeek was, a lot of people were quite concerned about it. Frankly, DeepSeek was a huge event for most of the industries, most of the companies around the world, because it's the world's first open reasoning model. Since then, a whole bunch of open reasoning models have emerged, and open models has enabled companies and industries, researchers, educators, universities, startups to be able to use these open models to start something and create something that's domain specific or specialized for their needs. The third area that had enormous progress last year was the concept of physical intelligence, of physical AI. AI that understands not just language, but AI understands, if you will, nature. And it could be AI that understands the physical world here, AIs that understand proteins, chemicals, natural physics, for example, fluid dynamics, particle physics, quantum physics, AIs that are now learning all these different structures and different languages, if you will. Proteins is essentially a language. And so all of these AIs are now making such enormous progress that these industrial companies, whether it's manufacturing or drug discovery, are really making great progress. And one of the great indicators is a partnership that we had with Lilly, that they realize now that AI has made such extraordinary progress in understanding the structure of proteins and the structure of chemicals, essentially being able to interact and talk to the proteins like we talk to ChatGPT. We're going to see some really big breakthroughs.
So all these breakthroughs raises concerns about the human element. You and I have had many conversations on this, but we need to tell the whole audience, there is a huge concern that AI is going to displace jobs. And you've been arguing the opposite. Obviously, the build out of AI, as you talked about, the biggest infrastructure build out in history is going to occur, which
energy is creating jobs. Yeah. Chips industry is creating jobs. The infrastructure layer is creating jobs. Land, power, and shell. Jobs. I mean, right? It's incredible.
So let's get into that in a little more detail. So you actually believe we're going to face labor shortages. And so how do you see that AI and robotics changing the nature of work rather than eliminating it?
Yeah, there's several different ways that we could think through it. First of all, this is the largest infrastructure build out in human history. Yep. That's going to create a lot of jobs. And it's wonderful that the jobs are related to tradecraft. We're going to have plumbers and electricians and construction and steel workers and network technicians and people who install and fit out the equipment, and all of these jobs. We're going to, in the United States, we're seeing quite a significant boom in this area. Salaries have gone up, nearly doubled. Yeah. And so we're talking about six-figure salaries for people who are building chip factories or computer factories or AI factories. And we have a great shortage in that, and I'm really delighted to see so many people in so many countries really recognizing this important area. Everybody should be able to make a great living. You don't need to have a PhD in computer science to do so. And so I'm delighted to see that. The second thing to realize, and so we theorize about the automation of tasks and things like that, and what is the implication to jobs. I'll just offer some anecdotes. These are real world anecdotes of what has actually happened. Remember 10 years ago, one of the first professions that everybody thought was going to get wiped out was radiology. And the reason for that was the first AI that became superhuman in capability was computer vision. And one of the largest applications of computer vision is studying scans by radiologists. Well, 10 years later, it is true that AI has now completely permeated and diffused into every aspect of radiology. And it is true that radiologists use AI to study scans now. The impact is 100%, and the impact is completely real. However, not surprisingly, I say not surprisingly, if you reason from first principles, not surprisingly, the number of radiologists have gone up.
Is that because of lack of trust of, or is that because the human interaction with the results of AI is a better outcome?
Exactly. The reason for that is because a radiologist, their job, the purpose of their job is to diagnose disease, to help patients diagnose disease. That's the purpose of their job. The task of the job includes studying scans. The fact that they're able to study scans now infinitely fast allows them to spend more time with patients, diagnosing their disease, interacting with the patients, interacting with other clinicians. Well, surprisingly, also not surprisingly actually, as a result of that, the number of patients that the hospital can see has gone up. Because there are a lot of people waiting a long time to get their scans done. And so now, because the number of patients have gone up, the revenues of the hospital has gone up, they hire more radiologists. This is the same thing as happening to nurses. We're 5 million nurses short in the United States. As a result of using AI to do the charting and the transcription of the patient visits, nurses spend half of their time charting.
Documenting.
And now they could use AI technology, and one particular company, Abridge, they're a partner of ours doing incredible work. As a result of that, the nurses could spend more time visiting patients.
Human touch.
That's right. And because you could now see more patients, and we're no longer less bottlenecked by the number of nurses, more patients could get into the hospital sooner. As a result, hospitals do better, they hire more nurses. And so surprisingly, AI is increasing their not surprisingly, AI is increasing their productivity. As a result, the hospitals are doing better. They want to hire more people. You have too many people waiting too long to get into hospitals. And so these are two perfect examples. Now, the easiest way to think about what is the impact of AI on a particular job is to understand whether the job, what is the purpose of the job, and what is the task of the job. If you just put a camera on the two of us and just watched us, you would probably think the two of us are typists because I spend all of my time typing. And so if AI could automate so much word prediction and help us type, then we would be out of jobs. But obviously that's not our purpose. And so the question is, what is the purpose of your job? In the case of radiologists and nurses, is to care for people. And that purpose is enhanced and made more productive because the task has automated. To the extent that you can reason about each one of the people's purpose versus the task, I think it's a helpful framework.
Let's move this beyond the developed economies. Help me understand how AI is to broaden the world and help the world. I read an Anthropic piece this past weekend that basically said the utilization of AI most recently is very dominant by the educated society. And they're even seeing the educated component of each society being heavily more utilized. And obviously they're using it against their own model Claude, so it may have its own biases. So how do we ensure that AI is a transformational technology, maybe like what Wi-Fi and 5G was for the emerging world? And when you intersect that, what does it mean for the emerging world? And John, how do we broaden the global economy? And two, getting back to the whole job situation with robotics and AI, there is going to be some substitution there. And there's substitution in the United States already going on. We may be creating more plumbers and electricians, but we probably need less analysts at financial institutions. Lawyers need less because they're able to accumulate the data faster. So let's just pivot on to the emerging world for a second, in the developing world. How do you see that play out?
Well, first of all, AI is infrastructure, and there's not one country in the world, I can't imagine, that you need to have AI as part of your infrastructure, because every country has its electricity, you have your roads, you should have AI as part of your infrastructure. Of course, you could always import AI, but AI is not so incredibly hard to train these days, and because there are so many open models, these open models with your local expertise, you should be able to create models that are helpful to your own country. And so I really believe that every country should get involved to build AI infrastructure, build your own AI, take advantage of your fundamental natural resource, which is your language and culture, develop your AI, continue to refine it, and have your national intelligence be part of your ecosystem. And so I think that's number one. And number two, remember, AI is super easy to use. It's the easiest software to use in history, and that's the reason why it's the fastest growing and most rapidly adopted. I mean, in just a couple of 2-3 years, it's coming up to almost a billion people. I think, first of all, Claude is incredible. Anthropic has made a huge progress, huge leap in developing Claude. We use it all over our company. The coding capability of Claude, its reasoning capability, its ability is just really incredible. And anybody who's a software company really ought to get involved and use it. On the other hand, ChatGPT is probably the most successful consumer AI in history. And its ease of use and its approachability, I think everybody should get involved. And whether it's somebody in a developing country or a student, it is very clear that it is essential to learn how to use AI, how to direct an AI, how to prompt an AI, how to manage an AI, how to guardrail the AI, evaluate the AI. These skills are no different than leading people, managing people, things that you and I do all the time. So in the future, instead of biological, carbon-based AIs, in the future we're also going to have digital versions of AIs, silicon versions of AIs, and we'll have to manage them. They're just part of our digital workforce, if you will. And so I would advocate that for the developing countries, build your infrastructure, get engaged in AI, and recognize that AI is likely to close the technology divide.
Right.
Because it is so easy to use and so abundant and so accessible. And so, I'm actually fairly optimistic about the potential of AI to lift the countries that are emerging, and for many people who haven't had computer science degree, all of you can be programmers now, And so in the past, we had to learn how to program a computer. Now you program a computer by saying to the computer, how do I program you? And if you don't know how to use an AI, just go up to the AI and say, I don't know how to use an AI. How do I use an AI? And it would explain it to you. And you say, I like to write a program to create my own website. How do I do that?
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है। स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Well, the world comes together in Davos in a sense every single year. We talk about AI, we talk about commerce, we could talk about clean energy, but I dare say the focus this time is